Well, can't say I'm surprised here. I'm not surprised. Oh man. Good morning. Oh, what happened? He dilute or something? Oh, did I miss it? Was there like after hours stuff? $50 million shares of Class A stock said it was coming. Hmm. Well, $330 345 million shares traded to get this offering done. The irony of yeah, I mean, so let's see. I'm just catching up. What's the deal? Up to 50 million? Sorry, I'm trying to catch up and I'm not really seeing like the actual news. I'm just seeing a lot of talk. Here we go. Prospectus filed. Yeah, I mean everybody said it was coming. I don't know, man. Whatever. Except for you, Books, you didn't say it was coming. Look, we knew like going into this that there was gonna be a possibility of something like this happening. So it says we've entered into a sales and registration agreement with Goldman Sachs and Company, from time to time acting in his capacity as our sales agent or the forward seller of any and all hedging shares offered by the forward counterparty, and Goldman Sachs International acting its capacity as forward counterparty, relegating up to an aggregate of up to 50 million of shares of our Class A common stock offered by this prospectus supplement and in the accompanying prospectus. So somebody probably told him that if it gets close, I mean, so someone had already mentioned this before, like the 60 something level, they were going to be authorizing dilution or something. But like, it's probably also that someone probably suggested that when they get to a certain place, they should dilute. Assuming 50 million shares of our Class A common stock offered hereby are sold through the sales agent, after giving effort to the sale of our shares of Class A common stock in the amount equal to 260 million, an assumed offering price of $5.20. Interesting. Which is the last reported sales price of our Class A stock as of December 5th. And after deducting commissions from the sales agent, I'm just kind of scrolling through this in my brain. I don't want to read every little bit. Offering expenses payable by them is $3,000. Dilution is determined by subtracting adjusted net tangible book value per share after giving effect to assumed offering from the assumed public offering share paid by net investors, new investors. I mean, so in theory, 260 million is quite a lot of money. He probably had that number in mind. So 200, they're going to get at least 200 million no matter what. Says that a decrease of $1. What? Why is that wrong? Oh my gosh. Excuse me. It's too early to read legal data. But I will try. I'm sorry, guys. I'm having a little trouble reading this because it's a really small, fine print kind of garbledy-gook. My eyes aren't like ready for the screen stress yet, so I can't quite follow it. I'm gonna look through it. So I'm trying to figure out. Usually they have a little section in here, and they do. It's called dilution. So I'm trying to figure out what the actual dilution numbers may do. And I want to make sure that I get it right. So you probably don't know what I'm reading, but I'm just reading the actual statement over here. So there's an investor's relations statement. And so what I did is I clicked through and I went to the dilution portion of this because sometimes people get the math right and sometimes they get it wrong. But I'm kind of curious as to what this says. So I might have to read through this on my own time and then dilute it for you because it's a little confusing. So I'm kind of looking at this, trying to understand this table that they're using. So they're saying the assumed public offering price is $5.20. So they must have had that in mind so they could get X amount of money, right? 260 million. So probably there was an idea that we're going to have to raise 250 million, right? Quarter $1 billion. It's a nice round number. It hits and closes at a particular price that they like. So they decide, and you know what? I got to be honest. There might be some of that implied in this move yesterday because we were talking about how weird it was that it kept chopping where it was chopping. And it ended up closing at 520, which I was like, hey, technically that's bullish because it was above that 518 mark, which I felt was the more important mark. definitely didn't look great. And we were talking about the end of stream. This like particular wick here looked kind of meh. You know, it was really by the skin of our teeth that we closed at where we did. It was not very powerful. So when you look at it overall, it's a difficult argument. It would have been hard for us to come in today and not expect some kind of a pullback at all. And even still, we were talking about, even still, again, we haven't even come back and checked this level around 510. So yesterday, I was still of the impression that, you know, it looked okay, but because of the higher close, which is good, you never know, is what I said. I was like, oh, you never know. It happened back here on earnings, and it still kind of dumped right the next day. But there was an expectation in my mind that of two things. So it's like kind of both, right? Like we knew it was a weaker close than we would have liked. It was kind of like barely okay. And then even then you're like, meh, you know, it was a meh close, MEH, because you're like thinking to yourself, really could have been a lot stronger. There wasn't a lot of stopping power on that slide back down. You can't see it on the 4-hour, but when we went through yesterday watching the close, and it looks bad here on the hourly too, but I think if we were getting down to like the 30-minute nitty-gritty, when this actually pushed down, there was very little volume. The effort required to take this back down was just didn't make any sense. There was very little effort, and it went really far. Now, that's a bit of a catch-22 because you don't necessarily want super high volume either, where there's like a huge amount of seller absorption of buying. It just depends on how far it goes, right, during that action. And so there was a pretty deep retrace back down to the floor here at 518, and we had made a 519 high over at on Monday. So like, again, like, was there really anything you could do if it closes above that? Technically, no. I mean, there was a weakness in that it pushed through it. And that was what we identified yesterday. We said, all right, it's kind of weak. I mean, I didn't like that. Remember, if you guys were here, you know, I went through for like 15 minutes and tried to figure out why would we hit like 514. And there wasn't really a good reason. So it was kind of assumed that could just be a weakness because it just sort of bled through. So then we were waiting to see if it would close above this top, and it did. That doesn't mean that it's necessarily the strongest thing in the world. It just means that, okay, closed above that top. That's a little bit better than what it could have been. And then my understanding is that it ran up pretty far, but it didn't look like that. Somebody said 580, but I don't see 580 here, so I'm not really sure what they were talking about. But then there's this offering. I mean, you can see the dump and then that buy back in. So where did this go? This actually goes all the way down to 440. So that's ugly. But 440 is the level that I said I would not be uncomfortable going to there if we needed to go to there. So if you were reading on in my Discord group or whatever we want to call it, it's not mine. I don't care. 440 was the level I picked out because it's not even on this chart right now, but there's it's a retracement level, but also there's a pretty straightforward creep test there. So if you look backwards at this jump here, when we popped up, I was like, you know, you could really come right back down to the bottom here because there's a big gap below. So I spent a good portion of the day yesterday before we started running up. If you were here, you'll know because I was doing it. I spent a good portion of the day talking about pulling back. So on the one hand, it's like there is kind of a double whammy here, right? Because people were like, hey, Roaring Kitty tweeted or whatever, it caused this big run up. And I'm like, I don't know, you know, that sort of happened and while we were breaking out. So it's like, could be, you know, that was a big part of that catalyst, but it was already like out, right? And then on the other hand, I'm sitting here thinking it still hasn't pulled back, you know. At this point, I've kind of deleted a lot of that stuff on my chart, but when we were talking about this early yesterday, this wasn't that long ago, you know, 4 trading hours ago, we were talking about maybe coming down here to go ahead and get that support built. So it's very odd to me to see this and then see the after hours price action go to 440. And frustratingly so, because you know that Max Payne's down there. So once again, the Max Payne gurus probably are going to be going crazy about it. Like it's never been beaten, you know? And I don't know what to make of that right now, because typically, like in the past, when we've done run-ups or we've been in markup value periods where we're kind of marking up through a range, really, I'm just being serious. And it's the same when we're going down. Typically, when you enter that markup or markdown period, Max Payne is just kind of irrelevant. It's just sort of there. But we're just not there yet. You know, it's not irrelevant yet. It doesn't seem to be irrelevant yet. Maybe it'll turn around today. It's early. It's been open. Market's been open for 15, 20 minutes or whatever. You never really know. You know, those are things that it'd probably be better to see what happened by the end of the day today. But I've been feeling like this whole area that the operators just haven't taken the time to just push it yet, and they just haven't. You know, there's going to be other people who look at this, and they're probably going to look at this and just say, well, it's pretty clear that this is the new top at 520. You know, it was established as a top back here. Yeah, this push resistance, but it didn't close below it. That's the thing, right? That's the caveat here. It looked like it closed below it. It really didn't. It pushed back through it and then closed above it. So maybe a little weakness, but it technically closed on the daily above it. So I don't know. You know, you'd have to make an argument that that's now the ceiling, and then we're going to kind of start a walk down from a bearish standpoint if that's what you want to do. In which case, you're going to have to come pretty low. We mentioned this before, so I know there's a lot of frustration about the dilution stuff, and I'm going to get into that more later today when I have a minute. I can't read this text. It's too small, and I feel like an old person right now, but I genuinely am like trying to read it, and I'm like getting lost in the words. So I know I can understand it if I can just take some time to read it better. And you can look at the highlights. The highlights are 50 million shares, $260 million worth of an offering at 520. Easy enough, right? That's the basics. And then you got to look at like net proceeds, what's going to cost them. And then I was trying to get through the dilution part of it to see what that would mean. So another couple things that you might want to know is that it says that the table above is based on 380.4 million shares of Class A common stock as of December 5th, and that does not include the 26 million shares that's reserved for issuance, which is like awards to their employee incentive plan. So they can issue up to 25 million shares to their employees. I suppose, I don't know if that's a yearly number or what that means exactly. I'd have to go look what that plan is, the incentive plan. And then, of course, as furthermore, we may choose to raise additional capital through the sale of equity, yada, 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 even if we believe we have sufficient funds for our current or future operating plans. Nice little caveat. And so I'm a little confused by some of the other language, because it kept saying like, it kept saying 520, but then there's weird, like mixed numbers in this paragraph. So 520 per share, and then the next line it says an increase of $1 per share. 620. Oh, I think they're just showing like different values and how it would increase the book value, et cetera, et cetera. And then they're just showing you like kind of a bracket. So they're doing 520, then they're doing 620, then they're doing 420. So they're saying if there's a range between, let's say 620, again, $1 above, and 420, $1 below, how would that adjust their book value? Interesting, because it's very interesting because it says that it would increase our adjusted net tangible book value per share to $8.99 per share. It would increase the dilution in net value to new investors at 15.919 per share. So these are interesting numbers because they're very close to some of the textbook kind of numbers that we've come up with over time. So again, I'm sort of bouncing back and forth between the TA we were talking about yesterday, which really early in the day before this kind of broke out, and it did break out around noon, but early in the day, we really weren't highly considering this as the most probable outcome. I was talking more or less about coming down to revisit this level near the gap. There's a weakness here. And then I said there was a weakness up here as well. And we ended up going up first, which isn't always a good thing, right? Sometimes you go up before you go down. And then there's this roaring kitty tweet, and then there's this AA dilution, right? Well, people are going to blame Adam Aaron, but it's all of their board. They have to all approve that. So it's starting to look a lot more like just a giant rising wedge again, which, it's fine. I'm not like angry about it. It is what it is. Unfortunately, the wedge really can't break down. If you look at a rising wedge pattern, if it breaks down, it generally will just go back to where that wedge began, which would be like $4, right? But in this case, you don't really want that, because dropping below that, to me, in my mind, is like, well, if this is an LSPY, you don't want it to lose that bottom support. So a wedge in this case could be very detrimental. And we still haven't hit some of those other targets. Was 556 the target? I would say no. So yeah, this is what we were talking about yesterday, like worrying about the drop here, and then it just barely closed above. So I was worried that would be distributive. And that's kind of what happened in extended hours to some degree. But I don't have my other chart up, so I can't see it. I want to say it was like here, though. So one of the early kind of top targets we had was around the 5. I think it was like 560, 565 or something like that, which is pretty close to that target. That was the one that somebody said, hey, he's going to like automatically dilute or something when it hits that price. So I don't think a lot of people were particularly surprised by this. It almost looks like they're trying to get that, maybe in order to get a sell down here. Like, let's go ahead and bring it up and get that dilution and sell, and then that negative news, we can drive the price down. I will say this, if you look at the, so it's a kind of a counteraction, right? If you look at the extended hours, there's quite a bit of buying in this, and I think it's interesting to see that kind of stuff, because when you look at the actual news, it's not super heavy volume. There's a lot of chop here to the upside. That just looks like a bear flag at this point. It could have been similar to this, and we were talking about that yesterday. There's a similar rise at the very end here. This is like a narrowing, almost parabolic kind of thing. In extended hours, it just looks like a channel, but in regular trading hours, there's a lot more of like a rising wedge, and you get the same action, price action right here, although it's really small. So in theory, yeah, this could have come down. This did come down, I'm sorry. It made like an M cross, right? It jumped the creek right here, as you can see pretty clearly. And so in theory, like, could this have done the same thing? Like, maybe, but it's a weak volume kind of after hours move. It's really hard to tell what the heck that could have become. And I had said yesterday, maybe if it holds, it could do the same thing, like a J shape. So that was like the end of the day, right? So again, pretty big contrast between the beginning of the day yesterday and the end of the day in terms of outlook. And I did purposely like not get too excited. And I wasn't doing that because I knew something that you guys didn't know. It's just that sometimes like these moves aren't what you think they are. And I'm not happy about it, don't get me wrong, but it's a kind of almost expected. At some point in the market, you should always be ready for the possibility that it could flip. So, I had pretty, not low energy, but I was just like, I'm not really going to blow up about this move, even though it did look like it was advancing. I said I would change my tune, and I did to some degree, but we were watching to see that hold, and it just didn't hold the way we thought it would. So, once again, kind of a mixed bag this morning. most people are going to look at this very negatively and say, you know, I told you so. It's obvious. He's never going to let it run. Yada yada yada. It's the same stuff we hear every time. In reality, what I'm seeing here is that they believe that, which is interesting, decrease the dilution in net tangible book value per share to new investors in the assumed offering to $13.42. So their net tangible book value. That's an interesting number. I wonder where they're getting that from. Anywho, so they've got a few different targets here, which is, again, I'm looking at the dilution section of their prospectus statement, whatever it is you want to call it. It's not a prospectus statement. It's a, I don't even know what it's called. Form 242B5, I don't know. Whatever you want to call it. The dilution statement this morning. Dilution is determined by subtracting adjusted net tangible book value per share after giving effect to assumed offering. Subtracting adjusted net tangible book value per share after giving offering from the assumed public offering price per share. Oh, I see. Well, it's still interesting. So they're citing that their net tangible book value here is see, I gotta do this. I'm gonna have to read this like really carefully. Why is that so much higher than the other number? Said I was going to kind of read it as we got warmed up today, but I'm still like confused by the language. It's hard for me. I'd have to like read it all the way through and then try to like write it down. But again, if you don't really care about this, I understand, but I'm trying to understand the way they are determining their own stuff. So what I'm looking at is here. Oh, where'd it go? It's gone. This paragraph right here, I think it's interesting. An increase of $1 per share from the assumed offering price, assuming that the blah, 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 would increase our net. So why is that number lower? That would be $306 million during the term of the sales. At that increased price would increase our adjusted net tangible book value offering to $8.99 per share, and would increase the dilution in net tangible book value per share to new investors in the assumed offering to $15.19 per share after deducting commissions of the sales. A decrease increase the dilution in net tangible book value per share to $15.19 per share. Now, is that $15.19? That's confusing. Like a subtracted number? So this is interesting because then if you look at the 420, that's why I feel stupid right now, because I'm trying to read it and you guys are like, yeah, because you're dumb. It's just written weird, so I'm like, my brain's not like wrapping around it right this second. And I don't know why. Maybe someone out there smarter than me, they could explain what the heck that means. Because when I read something like net tangible book value per share. I find that it says the dilution in net tangible book value. So they're saying they're diluting at $15 per share. Like that's way higher than what the price is actually worth. That's my question. And then if that's the case, it's just worth nothing, like basically. So that doesn't make sense to me. So there's four numbers here. So they're doing $8.99 per share. Let me read that again. Why is that number different? Let's do this. We're sitting at 476. I mean, if we're above 460, we've still got support at 460. So if you're somebody that's just like, give me the bare bones, Booksy, that's the bare bones. Right now, 460 has still been a support. 470. I think 472 or 470, something like that. Kind of right where we are, actually. This is another support. And then below that, 440, which is where it went in extended hours trading. I'm not particularly concerned if we stay above 440 right now. Dropping 440, going through the 430s, that could be bad for us. Everything else, to me, is still, I can still kind of, I know it's bad because you're like, it's dilution. It's definitely going to sell down now. I get that. It's too much money, right? Oh, it's going to sell down. I get it. But you got to remember, like, he's doing this at a really particular time and price. I don't know that killing the run, even though that may happen, is the right way to describe it just yet. Because you also have earnings coming up for GME. You also have a Roaring Kitty tweet yesterday. And if we're going to be fair, we would have to say that the last time Roaring Kitty really tweeted and affected stock price, according to the public, was back in June. And it tanked after he tweeted. It popped up really high and then they sold it down. It didn't recover for 5 months. You know, technically, if you want to get technical about him running the sales price up, you know, running the price up for these stocks, that's what happened last time. So, like, again, I don't feel like he should have credit for running it. I don't feel like he should have credit for dumping it because I think that's really unfair to like him as an investor and a person. So for me, I'm not really sure yet. You know, I think we should wait it out, give it until GME earnings before we start jumping to conclusions about what this is actually going to do. Yeah, I got to just chew through this better. I feel really dumb, but I got to like figure out how to read this better because I'm not reading it correctly. All right, let me just read it slow and steady. All right, the table assumes for illustrative purposes, so it's an illustration, that an aggregate of 50 million shares of stock are sold during the term of the offering through the sales agent, who's Goldman Sachs, or Sox, Box, as agent on our behalf at $5.20 per share. So assumed public offering per share price of common A stock. Let's scroll this out a little bit. Oh no, it's gone. Where'd it go? Thanks for doing that. It scaled the whole document. So that's not helpful. All right, let's just go back to the top. Be faster. I can get there in like 3 seconds to go back to the top. Maybe. All right, the assumed public offering price, $5.20. Net tangible book value per share as of September 30th, 2024. That's a weird number. 1097. What? Net tangible book value per share. Let me look that up. Oh, thank you, Google. Net tangible book value per share refers to the value of a company's tangible assets, including intangible assets like goodwill. Sorry, I can't help but laugh at that. What does that mean? How could you have an intangible asset included into a net tangible book value? I'm sorry, that's not already. I'm already like angry by this definition. divided by the total number of outstanding shares, essentially representing the theoretical amount an investor could receive per share if the company were to liquidate all of its assets. Okay. It is a measure used to assess a company's potential liquidation value based on its tangible assets alone. So the calculation is total assets minus intangible assets divided by the number of shares outstanding. What does it include? It includes intangible assets like goodwill. Again, I don't understand that. Patents and trademarks. Interpretation. A higher net tangible book value per share indicates a larger proportion of readily sellable physical assets relative to the number of shares outstanding. Right, but they're not telling you is the liquidation value if that ultimately, I mean, if it's net, it should be including assets, or excuse me, it should be removing liability, but total assets minus intangible assets. Minus intangible assets. It excludes. Oh, you idiot, Booksy. Read the language, dude. Okay, it does exclude intangible assets. Jeez, man. Wake up. I've been awake for like 2 hours. I don't know what my brain is doing. So I don't know why I read that completely wrong. So sorry. I feel really stupid. It does not include intangible assets. Thank goodness. Because at first I was like, wait. I read includes and I was like, that doesn't make any sense. Which is good. I feel validated. It doesn't make any sense. Thank you. But you just read it wrong. So there you go. Net tangible book value is calculated that way. Okay. That's important because if we don't know what that is, then we're not going to be able to understand this language. So assumed public offering price was at $5.20, which happened overnight. Net tangible book value per share, Class A common stock as of September 30th, 2024. So this is why I was like, that's interesting. That's a long time ago. I wonder if... I don't really know why you would use that number. September 30th, huh? September 30th. Ah. You guys are like, what? Well, there's a lot we could take from this. Because, look at where that's at. There's a lot going on right here on September 30th. $4.50 on September 30th. $4.68, which we talked about. That's like one of the primary. We were just talking about this. It's like one of the primary. We were saying 457 to like 465, but if you look at the middle of that range, it's just 460, essentially. Yeah, maybe we'll favor 457. That's interesting. It's a very important technical level, right? So we actually increased then by how much? So I don't know if they use an opening or closing price. I'm not really sure it matters too much. I'm going to kind of use the middle of the road analysis here, which is this 457 number. So up to 520. So it went up about 14%. This is very interesting. So on September 30th, and then I'm going to put the net value of since then increase of 14%, share price to, we're going to say 520 because that's where they ultimately sold the shares. Something tells me that's important that they're using like that date. So they're saying it was worth 1097 essentially, which just tells you like it's supremely undervalued right now. If that's the case, at least according to their own bookkeepers, which I mean they're going to be biased to some degree. They may not have everything in the books that they need to have. That number is not exactly unusual. You know, if you think about where that is at 1097, like think about this as like a flexible moving number, right? I wonder if we could chart this. Let's just do it. Let's start with this value on the 30th at 1097. I'm kind of curious now. I'm going to move it towards the 5th. I'm just going to leave it there for now. A higher net tangible book value indicates blah, 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 blah. I don't want to read that again. Okay. I'd have to go back. I'm not really sure if this net tangible book value is something that you can chart, but I'm kind of curious about it. Increase in net tangible. What is this garbage then? Where's 1430 coming from? Bugsy, just stay on track, dude. So this 1097 has shown up a few times. So this 1430 must be the actual one, and then they did this. This is the one that's representing 520 up here, this area. And this stuff just shows you different prices, $1 on either side. They're just doing like a standard deviation of $1, assuming that the prices are sold within that realm, because they don't know if they're going to be able to do that. So assuming that this was sold at 520, so this is the first one. So the increase in net tangible book value per share of Class A common stock attributed to this offering. So the increase in net book value per share. Increase in book value per share. Increased value per share of Class A common stock attributed to this offering is 60 cents. As adjusted net tangible book value, because you might think like dilution is always like really bad because you're like, well, there's more shares, so it's reducing the price of how much my share is worth. But if the company is increasing their assets by that much money, that's what they're looking at here. Is they're saying, well, if we get the 260 million and then you take that 260 million and divide it, make it back into the share price, you should have an increase of 60 cents. But as adjusted in net tangible book value per share of Class A stock after an assumed offering through the sales agent, as adjusted net tangible book value, as adjusted is 910. So dilution per share of Class A common stock to new investors in such in such assumed offering, 1. Dilution is determined by subtracting adjusted net book value after giving effect to its assumed offering from the public. Adjusted after giving effect to the assumed offering from the assumed public price by new investors. Hmm. 1430. So are they basically saying that they're diluting it again, like this value? I'm gonna read the chat real quick because I bet somebody in the chat knows what I'm trying to do. There's a lot of angry people in here. I apologize for yesterday. You were right about AMC. I escaped at 5:38. Well, it's not like I was trying to be right. I just was saying that I didn't think it was wise to put the cart before the horse. You have to have support. So until you get that support, there's not really any reason to be like hype. That was the only thing I was saying. It was really just I wasn't an attack on anybody. It was just a defense of my own attitude about it. Because you were asking like why I wasn't hyped up or something about it, and I was like, because it's not time yet. So, well, I'm not gonna figure this out live on stream, but what I want to do is take these notes. I know they're the other parts are hypotheticals. The part down bottom, I'm confused about the $14 because they're saying like where does that number even come into this? Are they saying that the dilution is actually $14 per share? That doesn't make any sense unless you're just taking that number. I don't know. I just don't get it. It would have to be some kind of another, it doesn't like represent the number that you'd want to have because that number doesn't tell me anything on its own. It kind of makes it sound like if it's only valued at 10 and you're diluting it by 14 per share, then it should be worth negative $4. But that doesn't make any sense to me. It should be so more simple than that, right? Because you're basically just taking the amount total. The problem is that number, 260 million, is something that I can't easily use because I don't have their books. So like for me to sit there and use it, I'd have to know exactly how much cash on hand they have. And maybe they say it in this document somewhere. I just haven't looked. And to know exactly how much that actually increases. So I'm assuming this number is right, the 60 cents, that's the increase in net book value per share, which would be like saying, okay, 260 million divided by however much, and then we're talking about how much that adds per share. I get that. I get that number. That number makes sense to me. It says right here, right, even like in the text, these amounts which give effect to the assumed receipt of net proceeds from such an offering by the sales agent on our behalf and issuance of additional shares in the offering, but does not take into consideration any other changes in our net tangible book value after September 30th, would represent an immediate increase in net tangible book value of 60 cents per share to our existing shareholders, an immediate dilution in net tangible book value of $14.30 per share in Class A common stock to new investors purchasing. Immediate dilution in net tangible book value to new investors. Determine dilution by subtracting the net tangible book value per share after the offering from the price per share we determine dilution, which is this $14.30, by subtracting the as adjusted meaning this one, as adjusted net tangible book value per share, 910. So we determine, all right, I think I can do this now. Finally. Thank goodness. Brain's catching up. All of a sudden my brain's like, brain. That's my brain booting up and it's like, oh yeah, you know how to connect words. Good job, Booksy. It only took you an hour. We determine dilution by subtracting. So dilution being this 1430. So 1430, I'm going to write it on this other screen, then I'll post it, equals we determine what that is by subtracting the as adjusted net tangible book value per share, which is down here at 910. Subtracting that from what? From the per price share of AMC common stock paid by an investor in this offering. Oh, so it's 920 plus 520, or it's 910 plus 520. Well, that was easy. What I don't understand is that if you're subtracting that, why is it giving you a higher number? you dummy. Think about it, Booksy. I don't know. I am thinking about it. We determine dilution. I'm not being very nice to myself right now because I really want to know like right away, but I can't. Again, I'm trying to wrap my brain around it. So we determine dilution by subtracting the as adjusted from the share price from the price per share paid by an investor, which is 520. So what I don't understand is maybe the language here is why I'm confused, because if you say you're subtracting one thing from another thing, I mean, I would immediately say it would be 520 minus this, because it's just saying, you're basically saying that dilution is determined by, I mean, it's exactly what it says. You can cut out all the fat on this sentence, but it says we determine dilution by subtracting the as adjusted book value per share, which is right here. It's the same exact words, as adjusted net tangible book value per share, as adjusted net tangible book value per share, from the price per share paid by an investor. So like, if your as adjusted net tangible value per share is 910, it just doesn't make sense. Wouldn't it be 520 minus 910? So why is it? Oh, because that's the dilution per share. Oh, that's the distance traveled. Well, no, it's not. I don't know, man. Like, part of me is getting it, part of me is not getting it. Like, on a scale of positive 520 to negative 910, it would be a net change of 1430. So maybe this is supposed to represent. So that makes me worried. Okay, let's go up here and read some more. Forces, the price is going to be probably falling if we don't catch soon, because it's sitting at like 470s, which is, again, it's a pretty decent support for us in the past, but it hasn't ultimately been like the big one. I think 460s has been more important, so I'm kind of more curious about 460s this morning after this whole debacle. Man, I can't seem to frame this silly page right. It doesn't want to frame correctly. I think because I zoomed in a little bit, but it's easier for me to read. It's hard to read this stuff when it's like tiny. Gotta have like a magnifying glass. Your ownership interest will be immediately diluted to the extent of the difference between the public offering price and the adjusted net tangible book value per share. Dilution results from the fact that the per share offering is substantially in excess of the book value per share. So that is what I wanted to know. Dilution results from the fact that the per share offering is substantially in excess of the book value. So I think this is like misleading because I know it's going to sound rough, but I think I know it seems wrong. I don't know why, but it kind of makes me seem like yeah, it's lost value, obviously, here. You're going from like... That's why I don't understand this language. Because like if I were thinking about, okay, it's worth $10.97 net tangible book value as of September 30th. And then I do an offering, right? And you're diluting, then it makes sense if someone were to come and say, the new adjusted net tangible book value, right? It's the same language, net tangible per share right here. The adjusted net tangible book value per share after an assumed offering, meaning that you don't have like all the exact numbers yet, but you're kind of whatever. That says 910. So it makes it sound to me like it goes from a value of like 1097 book value per share to now 910. What's confusing is that in the middle here it says there's an increase in net tangible book value per share attributed to this offering of 60 cents. Where's that going? Where's the 60 cents in this whole equation? I don't know. I don't see it. I just don't see it. You can't add or subtract 60 cents to one of these numbers and get the other. So the only seeming, like I can't see a relationship between the two right this second. Maybe it's because it's referring to the previous price, but that 1097 was what they said. So I'm not sure. Again, it's nonsense. I hate reading this kind of stuff. I thought you liked math, Booksy. I do, but the way they're doing this is confusing to me. It's like it would have been easy for them to say, like, here's the new dilution amount, right? And I think they are, but then they're adding this other number of dilution per share, and it makes it sound like this really astronomically high number, and I'm just confused because it's almost like they're saying their company is not worth even a positive number, which would really like spit in the face of a lot of people who've argued about the company being worth a lot. But what's confusing to me is like the cash on hand is important. So I don't know. After deducting commission to sales, as adjusted net tangible book value would have been approximately, or this per share of Class A common stock. They do not take into consideration any other changes in our net book value after September 30th. But there is a 14% increase. That's where I think this whole thing gets a little bit weird because there is an increase. So like they're saying basically that these initial amounts, like this 910 per share, this as adjusted number doesn't actually come from the current price of 520. Like they're saying that they literally say right here that it's does not take into consideration any changes in our net book value after September 30th. It would increase an immediate net value of 60 cents per share and an immediate dilution in net tangible book value of $14.30 per share, which looks bad. If you somebody says like $14.30 per share diluted and you're only sitting at like $4, that does not sound good. And I'm just trying to understand how that number could be so ridiculously high, but it is what it is. So I'll figure it out, probably let you guys know. Again, I keep saying I'm not going to do it today, but this table is based on 381 million. I'm just burning my tires. I'm just spinning in the mud right now, so I'll figure it out. I promise I'll figure it out. I just can't, I wish I could explain it, but for some reason I'm not getting it. I get the idea of it, but the numbers aren't making any sense. Like, why would they show you that number? And maybe, again, I need to just learn more about how they do their books. Any company, really. Because it's not my expertise. I'm not sitting here like, I'm going to calculate how much this company's net tangible book value is and like sitting there doing that. I actually got a book about it too. I was reading about net tangible book values and stuff. It was called Techniques of Financial Analysis, and it's by Eric Helfert. And like was going through it, but I didn't finish it, so shame on me, I guess. He filed to sell, but that means that he's basically, it says it would have effective immediately. So if you read the document, it says effective immediately. There would be an immediate effect in sales price of this much, is what he's saying. So what I'm more curious about, was that net tangible book value and what they think that means. So they're saying it's total assets minus intangible assets divided by the number of shares outstanding. Perfectly sensible, simple. You have a huge amount of value. This is your assets. You divide it by the number of shares. It makes sense. If the company liquidated, here's how much you would get. What doesn't make sense to me is then if you're diluting, you can't say like, I think the company's worth. It doesn't make any sense to me. It's too big of a number, so that's why I'm confused why they're using that language. And there's something about the financial analysis of it that I just don't get. Why they would use that language. It probably makes perfect sense to a financial analyst who does this kind of stuff for a living. They're like, no, that's not what that means, Booksy. It means this. I'll be like, okay. But for me, when you say something like the net tangible value is 1097, if you sold everything in the company and you divided it by the number of shares, it's 1097 per share back here. That would tell me that, oh, okay, well then by now, it should be about a 14% increase because per share, that's giving you value, right? I mean, you could just do a dollar value per share if it makes more sense. I don't care. But it is a 14% increase since then. So my expectation would be that percentage should be about the same. And so 1097, and I could kind of fudge it by doing like a little, this is a logarithmic chart. So you don't have to be like perfect when you do this kind of stuff. If you use like a box, it will hold the percentage because it's logarithmic, so it's keeping it basically proportionate. So if you move it up, it's actually a greater, or it could be presentably a different percentage when you're shifting it around. Anyways, it doesn't matter. Okay, so I'm going to go to like 457-ish, and then I'm going to go up to like 520-ish. Again, I'm kind of moving it around a little bit, and then I'm going to drag this up to 1097. So 1252, that didn't quite come up in that analysis. It was probably close to that. It was like 1252 would be like the adjusted value there. It's just because the share price went up. That technically gives the company more value, right? So like, in theory, that doesn't include their assets, but part of their assets is their common stock. So I would assume it would include parts of that. So anyways, I don't care. Point is, like, that's where you would assume it would be. This is kind of interesting to me because I'm wondering now if it's proportional, right? And whenever you dilute, so then what would happen is that this would have, would have like a 60-cent increase. Oh, hang on. So it's 1252. You're like, why does that matter? It might not matter. Let me check something real quick. 1519 and 1342. This is interesting to me. May not be very interesting to you, but So the bracket between 1519 and 1342 is really just around that 1430. It would increase the dilution in the book value to 1342 per share. So those numbers aren't really what we want, though. We kind of want to retroactively go back and determine what the actual net book value would be after dilution. So this isn't really helping us because the dilution per share is only one part of the equation. You need something else to get that 1097. And I'm not getting it. You won't let it go, will you? I'm like a bulldog, okay? If I get fixated on something, I want to do it. I'm going to do it. There's nothing I can do about it. I keep saying I'm going to just work on it on my own, and I don't do it. Well, we could talk about how the price is down 8%, but we already know where the supports are, and I don't think there's much hope of returning back up unless you break back above like 5 right now. And given the stock price, given that it's a Friday, you can kind of make whatever you want to make out of it. Let me just do something real quick. 1157. So that 60 cents should be coming from how much cash, I guess, they're raising, like minus the price of the cost of it doing it. They just don't know about what that would be yet. $260 million. But there's also this problem of like they have to pay the person who's actually doing the offering. And there's more data about that in there. So they're not going to actually get that much cash because they'd have to less the payment. Our net tangible book value attribution to shareholders was approximately 4,000 million. There it is. Or approximately 1097 per share. I'm trying to find that number. So for whatever reason, they didn't put million down here, and I got confused. But I think it's just implied that 3,000 million is the... I get it now. That's the number. So I was like, why? So that might be... that could be kind of interesting to look at that, because they're basically saying, after deducting commissions to the sales agent at the maximum rate, and estimated offering expenses payable by us, our adjusted net tangible book value would have been approximately, so it went from 4,184 million to 3,926 million. So basically what they're saying is that the value dropped from 1097 to 910. Which again, that makes sense to me because that's a drop in value. It's dilution for you. Right, and it doesn't take into account any other changes, would represent an immediate increase in the net tangible book value of 60 cents per share to our existing shareholders. I don't see how there's a net tangible book value, but I think it's completely separate from this other price, and that's why I got confused, because I was trying to like attach it to something else. Like, how can it be an increase if it's going from 1097 down to 910? So if it goes from it's worth 4,000 million, right? Or 4 billion, right? 4.2 billion, 4.18 billion, right? Down to 3.92 billion. Then why in the world would that mean an increase of 60 cents per share? Like, it doesn't make sense, right? And then I think the 1430 may be something else, but I'm kind of curious. So I've just been kind of running through the numbers already. I know we're getting bored of this. I get it, but it helps me to like look at stuff and try to understand it myself, because then I'm not like counting on other people to tell me like we need to do this or it's going to be worth this, and I'm like, I don't know where you got that number from, right? So it lost a value of 257.4 million, which kind of makes sense because you diluted equal to amount of 260 million. That's where that number comes from. So when they offered those shares, they basically put 260 million in their own pocket, but they took away 260 million from our pocket, from the grand total, right? Weirdly, so the number like should increase, which is another thing that's confusing to me, because I'm like, well, then the total number of shares increases, but I guess it makes sense because you're taking that number away. So it's like 50 million times 5.2 should give you that number, or close to this number. And that's the amount that the dilution affects the overall market cap, net tangible book value, right? So they're saying that would have been that number, or 9.10 per share, Class A. So this is where I'm a little lost, because if you think that your company's worth 3.926, like where does that come from except from our 3,000? That's 3.9 billion, right? So you say your company is worth 3.9 billion. How many shares outstanding are there now? 381.4 million. Big numbers. So we can use 3926, which is the thousands, 0.7. That's the amount I think it's worth. And we can use that with 381.4. And there it is. This is tens number. I might be a little off because I'm not using exact numbers. And then there's also 25 million shares of the other. Okay, well, I'm getting numbers that are pretty close. Maybe that's where the 60 cents is, the difference in book value. But it seemed like it would be a loss. I'm not sure why they're saying it's an increase in book value. But maybe, again, I'm not reading into it the cash. Because technically, like, again, if they liquidated all their assets, like, so they didn't use that cash, right? So they didn't spend that cash. And, like, tomorrow, they did an offering, and then tomorrow they go back and they say, all right, we're not actually spending the cash. We're going to liquidate. We're going to go bankrupt or something. I don't care. We're going to give everything back to the shareholders. They wouldn't have used that cash. It would just, the value would just go back into your hands. It wouldn't be gone. But the thing about dilution is that it is typically spent. So like that money that's being raised is then going to be used. So it's an asset until it's gone. And it probably will be gone. So that's, a lot of times when you think about it, that's really where the dilution comes into play. Because in theory, if I take that money, that cash money, like if I raise that money from shareholders by taking value out of my stock, but I use that money and increase the value that I have on hand with that money. So if I take that 260 million and I turn it into 520 million, technically you as a shareholder are getting a better value. You're getting more money. So if like they take something, I think people crapped on Cohen for investing in like treasury bonds or something, right? With the dilution amounts or something. But he's not wrong in his thinking. Like if they take that money that they've taken away as an asset from, well, like kind of taking it and transferring it from the stock price, right? Which is now quote unquote diluted because you're removing value by adding more shares in a particular monetary amount. But if you take that monetary amount that you've now taken out of there and it is still an asset, you haven't done anything with it yet, it's just there. technically that does add the value back, because you're talking about net tangible value as I'm going to use this as an asset. Well, it's just transferring it. In some ways, for a company, it almost does nothing to the book value. They're doing is saying it's like 60 cents, which again is like not that much. And that's the immediate like dilution, I guess, that they're talking about in those terms. So the price may be adjusted because, again, like technically we've moved that money over, you've diluted the pool of shares, yada, yada, yada. But if they were to take that money and this is just common sense, right? Nobody's saying this is unique. I'm just saying I need to think it out. If you take that money and I have 250 million, I don't burn it, then really the investors haven't lost that money at all, because if the company liquidates, they just get it right back. This is why dilution gets a bad rap, because people think that it doesn't add value, but in theory it could, because even though this is why I've said this before, like $4.50 per share with 300 million versus 450 cents per share with 400 million is a very different value. It really just depends on the value of the company. Like, if you have more shares at the current price and it stays the current price, then the company technically has a higher value because it's a market cap. The market cap's higher, right? And it could over time. This is what happens to like the companies that actually succeed, is they're yanking those investments and they're growing those investments. So what you'd want to see is that whatever Adam Aron does with the cash, it's not just to reduce liability, which is a lot of what he has done. And this is why I think shorts are still like really down on AMC, because all he's really doing is like reducing liability. I get that. He's not adding that much to the value. And the things that they have done, kind of mixed bag, you know? Like the thing with Taylor Swift and doing the music concerts was pretty much a stroke of genius. There's nobody in their right mind that would say it's not. It was a really smart move. To start a distribution is an asset if you can distribute your own movies or theater productions, whatever it is. It's a potentially huge asset that could return greater amounts of money. So you're investing that cash in something that's worth something. Buying the gold mine is another one that could be thought of as like a major asset. The problem with that one is that, and the way I see it, is that it's not like you can take money from one company and just put it in another. A lot of those books have to be kept separate for tax purposes and other reasons. But if they're an owner of that company, then yes, you know, they get to use those profits. And it becomes, again, an asset. So if they wanted to sell the company, and this silver mine in and of itself has grown from I'm just throwing it out there, from like a $2 billion company to a $4 billion company. Well, when it's time to value the company, AMC, they can now say, well, we have this asset that's grown, doubled in the last 10 years because of the value of what's been found. But immediately, like, it wouldn't affect much, right? It would just be like that net value. So I think that's reasonable to think that way. I don't know. I really don't want to make it more complicated than that right now anyways. Point being is that he diluted this morning and we dropped a lot in value. And that's the basics of it. And now we're going to see if we can catch support. You know, if you look at what that dilution should mean, there's going to be folks that do the math on their own and tell you, like, this is what it should be. I don't really want to go into that. I feel like I'm ruining it by maybe by trying to do the math for you. But they waited for it to cross support and hold to only then dilute. AA is actually trying to ruin the company. 200 million when you could have waited for 6, 7, 8 and leave with twice that. Yeah, but they don't have. That's the thing, is like, I don't think that what they're looking at, and I'm not really sure why they picked September 30th. Somebody wants to tell me why, that would be a good thing to tell me. But technically, like, they did, if they're doing the books and they're planning a dilution based on September 30th, part of me wonders if that's already like baked in. You know, was there another like announcement made on the 30th? Because they diluted up here at 520. Yeah, we know that happened this morning. That's their assumed price. Given that, you know, they're probably not going to get 520 for that, to be honest, because that's why they said down to 420, which is unfortunate because it's below the trend here, and up to 620, as if they're assuming that it could pop either way. I think it's really interesting to look at this because when I think about numbers, and I do think about numbers a lot, I think about how there's a range that's being considered by a company. And if you look at where it is on the opening of September 30th, it's at 450. Okay. You may not think, I don't know, you probably all are aware of this, but they have people that are doing TA in their company, right? Notice that from the top value down to 450, the middle of that is where we were. You see that? So like from the highest that we were in the last like 6 months, not including May, right? Down to the 450, this is essentially like a 50% recovery. They're basically diluting it in the middle of the range. You may think Adam Aaron is doing something like crooked, but I got to tell you this, okay? And it's really important. Go back and look at where that is, right? That 520 in relationship to some of these other dilution numbers. They're kind of circumnavigating it, right? This one's pretty high. This one's pretty low, right over here, right? And we've talked about this before, but it's an interesting correlation to the chart, because this number right in the middle, this 650, is what we found was kind of like our center mark and the most likely place that we would find some kind of distribution, right? If we were to come up top and we were to get stuck, that's where we were saying it would go. This is 650. That's like exactly halfway between these two announcements of dilution. One was like down here in March. The other was over here right after earnings in November. And you look at directly between them, right? And space directly between them is the 650. It's like they're going for like an average offering price of 650. Essentially, they are. Now, we could argue that never happened. Really, the average is somewhere between here and here, and then average that with here to here, right? And so it's probably more reasonable to say that on average, if we think that they didn't actually get that value, but they got somewhere between, maybe in the first few days, they got somewhere between here and here, and this stays sideways for a bit, that on average they got, again, maybe like 50% of this through 50% of this. Suddenly we're getting a different picture, right? It's like, oh, you know, they may have actually gotten, on average, and I'm not trying to be like super precise about this, but they may have on average gotten about 490s on that dilution. That's right where the 485, I mean, it's right on that 485 level that we've been talking about. And I'm going to do my best to connect the dots. I'm not going to be able to figure it all out perfectly. But if you look at these two adjacent to each other, these two dilutions, that middle value ends up representing the value that we've been talking about a lot, which is basically 445, 490. This is where Vanguard shorts, and then this is where Vanguard announces they still have their shorts. And then they've been buying all along, like they had like 30 million. We could check those things today as well to see what's going on. But I think that's really interesting. And then when you look at the range, that's where it is. It's like kind of in between these two. That's where we've built out sideways as our value. And then if you look at between these two, like an average, where we are now, it's actually at 520. It's a very similar kind of idea. So as soon as we pass up above the middle here, the average, the middle price, I guess you would say, between the top and where we are at September 30th. Again, I'm not really sure what the significance is of September 30th. It just is what they announced. So maybe there's another reason that's there. But from what I can tell, like that's basically exactly where it is. It's exactly like halfway. So it's funny because like I'm looking at this and I'm like, really, if you think about it, they probably just raised their average. If the average we think might be around, because of, again, I'm using like a 50% spread down here and a 50% spread up there, and we probably could be a little bit more precise about it. We could maybe assume that they didn't actually get all these shares, weren't all diluted right here, and that the offering really lasted this whole time, so it's actually lower. We could do all kinds of weird stuff about it. We know that they're giving you an estimation because they can't give you like an exact number, because they're literally giving you like assuming it's going to hit this number, right? That's where the value is being taken out, is on the assumption that, yeah, they gave it for 520. You're assuming that, okay, all of them sold for 520. That's not true though. Like, they're giving them permission to do it at 520. They're going to do the offering up to 50 million, but they're saying quite literally in that document that you could look at this as, here's a bracket between 420 and 620. Like, we think it's within this range. So it may be an average of 520 in the end. It may be much lower, right? But what I think is interesting about this whole setup is that when you go back and you look at where those numbers are, that 50% is right there, man. I do chart stuff, right? Like, I'm not a huge conspiracy person or anything, but clearly, like, there's some reason that this is being used as kind of like an anchor. And I don't know, to me, that's like not, I don't look at things like they're always predestined or something, but it's not coincidental either that somebody's looking at this saying, all right, they're diluting here and then they're diluting here, and then we're going to probably have a lower average. And then what's interesting is, like, if you look at that and then compare it to where he's trying to dilute now, clearly, if they're looking at an average share price, they're not concerned about waiting till 6 or 7 for whatever reason. They're going, when it came above 5 to 520, that's a higher value than their average. So my guess, and it's just a guess, my guess is that this value down here at 450 might actually be part of that as well. Maybe there's a reason that 450 came up beyond just, oh, it's the, 50-50 from this top through that middle. I think maybe that 450 represents some kind of a standard that they have that they're not telling you necessarily outright, like, hey, we're going to dilute whenever it comes above 450, or like our average dilution value right now is like 450. But it may very well represent like a value between 450 and 485. That's dominantly like where they think they can raise the most money, or they think they're going to be able to raise the most money. I think it's very, very interesting to like take those two numbers, that 450 and that 490, and then look at what that is here. What that represents on the chart it's really interesting, regardless of your thoughts about the dilution this morning. And then the fact that, again, like, this is the time we have these two drops here, like right off that top. And like, look at the push down into 450s here, It might make perfect sense that this is the reason why they waited until this support at 485, the one that we've been talking about for months and months and months. It might seem skeevy to you guys, but I got to be honest with you. If you look at Cohen and what he did the same thing. No, he didn't, Booksy. No, he did. He really did. So remember when we went to look at Cohen, you guys are like, Cohen? I'm just talking about GME leadership, okay, when I say Ryan Cohen. What they did is he diluted twice, and he did it off of $24. Why did he do that? I'm not 100% sure why that number is so magical to them, but I could tell you this. Don't use the word magical, Booksy. From March 2022 till July 2023. All right, that's a long time. That's over a year, right? So March to March is there, plus another few months. During that time period, you have 1, 2, 3, 4, 5, 6 earnings reports. They're almost always wrapping around $24, right? And we talked about this quite a bit. There's very few times, I mean, it's uncanny, essentially, how close it is to 24 every time, okay? So when you look at that book value, you're like, I don't know why 24 is so important necessarily, but it's clearly been the anchor for this stock in this downtrend, right? And everything up until this point has been driving the price through 24. You've got the wave cross. And what we did is we took this a step further and we looked at the big wave going up, which I don't have on the chart right now, but we did do that, and it was pretty evident that that was where it was. When we went back, and I guess I could try to really quickly pop it on the chart just so you could see it visually, because it would be helpful to see it with what I'm talking about right now. Basically, if you take that initial ramp value here, I'm not looking at the top, I'm actually looking at these two values here and the bottom. And it might be slightly different, I don't know, I kind of like bounce between different ideas sometimes when I do these, so I'll have to go double check if it's wrong. Doesn't look completely wrong to me right now, but I'll have to go see. Yeah, that's correct, because this is where it broke out, took off to the top of the channel, and this is where it bounces. What's interesting is if you look at the halfway point on this wave down, so after they broke down up here on the M cross, there's a little mini one right here, and then there's the big one, and then just down, right? After they broke down here, if you look at that 50% marker, which is like the halfway point, again, I might have to kind of fudge it a little bit because I know I did it right. So this might look a little wonky right now. I know I did it right in a previous stream, so I'm not kind of eyeballing it. Like, I'm not really sure I'm doing it right now. I think that's correct, but right there, that is the walk down value, like of like kind of the halfway point when you do it correctly. And I didn't do it correctly, I guess, because it doesn't look halfway. But it is the right value right there. And so what I've actually been talking about a lot on GME, if you haven't been around for a bit, is that I think that that anchoring above 24 is very significant. And I used, the other number was like 2310 because 2310 represents a particular bottom and a breakdown value from over here that I thought was very significant. And I was making the argument that once we get above 2310, we're probably going to move pretty far. And we did. We moved from 2310 to 30 pretty quick once we got above that value, only a few weeks. But the thing about it was that, like, ultimately the goal might not be to run it up all the way. It might be to get it up above here and see what they're going to do with dilution, because Cohen didn't dilute until here, and it drops the price to 24, and then it pumps up again, and then he does it again. GME had like, what, 2 or 3 dilutions in the matter of a couple months, but every time he's doing it, it's after it came above 24. And so it's a really bizarre kind of setup somewhere around there, because he's not diluting it below that value, but once it gets above that value, right, he's saying, okay, now it's appropriate. As if maybe twofold. One, on the one hand, he's getting more support from a technical standpoint off that value. And then on the other hand, perhaps there's something to do with what we were calling like the net book value, right? We were talking about it today, that there's some significance to that number, okay? Like, as in it represents maybe what they value their company at to some degree. You guys are like, well, AMC should be valued higher. We were just talking about that. Shouldn't it be way up here at like 10 or whatever? Yes and no. I mean, it still drops in value, even if it does work that, yeah, sure, this could have been arguably like their net value could have been up here at 1250. We would all kind of look at that and be like, well, that sounds about right, Booksy, because we've been talking about this for like a year or plus, and that 1250 seems about right. Because again, that's where this initial drop value is. We've been talking about it from a technical standpoint, going back up to 12s or 13s in the future. Yeah, they just kind of drop the value though by diluting it. So each time, I can't go back in time and look at this, right? But I would argue that maybe each time they've done this, again, it's sort of tricky because of how far this went. And we also would have to like disconnect the chart because you'd have to kind of like drop it every time there was a dilution. Like this did already do the drop. This one is yet to be determined. It's still in progress. So I don't know. Maybe you wouldn't have to do that. So they're obviously like adjusting that net according to that net value. So like back here, now I'm really curious, guys. I have to do it. I'm not a big bars pattern guy, but I gotta do it. I'm gonna make sure this is like accurate because a lot of times when you do the bars thing, it like screws it up right away. I don't know why. It just does. So I'm gonna make it pretty close to accurate. I did this earlier, like a week ago, and brought it up to that dilution value. Remember we talked about the shift value up here? We took it right up to the top. It's pretty dang close. That's really close. You son of a gun. What does that mean, Booksy? I don't know. Give me a minute. I think it just means that we were right about this shift value thing. I did this already, so maybe I still have a chart for it. Let me take a look before I redo it all. How do we get back to like appropriate value? I did do it here, but I don't have the bars thing up anymore. Because this was like where I marked it off, 43, 45-ish, that area, and then I went down to the bottom. So what I was making an argument because when you see these on small scale, what you see is that this drop followed by what I call like a stiletto usually follows with a burst up that equals about the same amount, if not exactly the same amount. So like typically what that means is that the drop value into like the liquid center of the new range will then equal the next value after the little stiletto drop that you come back out. And typically, though not always, this ends up being like a 50% retracement of that value. So you see how like this value drop, it doesn't retrace enough to give you a breakout. It just goes back to like the 50% top of that drop distance. What's interesting is they're offsetting, meaning like maybe your algorithmic components to this whole trading schematic. They're offsetting this chart down enough so that this distance here, right, that they're pushing it away, which is why I've argued that this LSPY is super important, because it usually marks off that offset value, that value that's being offset is actually offsetting it from the top value here, right? So that's the same value that they're trying to get it away from to lead back to whatever. Now, this doesn't necessarily mean that you could like predict the future every time, but it is fairly actionable. Like we've used it a couple times here and there on different reactions, and it's pretty good. Like it's not terrible. It usually gives you a very good estimate. Really simple too. It's like little boxes, right? Super simple to kind of just do the measurements and then be like, I think it's going to come back here. So what you basically are doing is you're looking at this drop in value, and then you're saying that, well, I think they're going to offset it by that much, but you'd have to know like where they're going. That's the hard part, right? The other thing you could do is wait until you see the bottom and then just trade the reaction. And that works a lot easier because that's an easier trade. It's easier to see the jump over the creek and be like, all right, this is the remaining part of that action. It would be really difficult to know that's the 50% mark here because you don't know how far it's going to go, right? But this does work. When you go back and you look at this area, again, it's the same kind of concept. So why am I talking about this? Because we're seeing this on like the macro level. It's very important to recognize like when there's a similar setup. And when you look at the breakout, see, I didn't do it to the right point. Should be here to that LSPY kind of thing, right in the middle. So this one goes right down to that mark. So it should be right there. It's where it flattens out. Because that's the marker of like the prelim support, right? That's like preliminary support right here. Support, support. This one's just really flat, but it does go down, bounce, and then hit support. So it's basically the same level, and then you take that value and you can see the reactive level back to the upside. I'm purposely keeping it kind of loose. I know it's not exact. But then if you take the same valuation and you look at that and you say, all right, I think it's going to do like roughly a 50% retrace from that bottom, it does. That's proof in the pudding that it's accurate, and my boxes are just kind of willy-nilly, but they're there just to kind of be there. But you would take this value in theory, and this roughly represents like maybe where you're going to come back to later. It should match from the drop zone here. And I think it does pretty well. It's not perfect. Again, it doesn't have to be perfect. Like, I'm not worried about that, but it is a matching value. Okay? The reason I'm mentioning this right now, of all times, because you're probably like, I don't want to hear this. Why are we talking about this? Because this is a giant version of that. So like, you have a huge value here. So where's the LSPY, right? It's probably right there at 650. Like, we had talked about this early on in the year, maybe like 4 or 5 months ago, that we were thinking that, I was thinking that it was a weird number, but I was thinking it might actually be like this like 613 number, because it's kind of representative of like the middle of this bottom structure. And it's bizarre because of the valuation of that. I think it's a weird number to say, yeah, that's what it is. When you look at the reaction here, it's undeniably very close. So I get asked sometimes, like, by people who weren't there, they say, did you see this run up coming? My answer is yes. I thought it was going to go to 14, and this is why. This is a big part of why. There's more than that, but this is a big part of why. A, it's an auto reaction. It should take you back to the top. Therefore, this offset value should be fairly indicative of the low and then the high that you go later. So why did I think it was mid to low threes down to like 250s? I was talking about those being like the bottom areas, probably because of this, because I remember doing this really early in the year, thinking that that was a pretty good indication of where it's about to go. And it ends up being fairly accurate. It's not perfect, but it's pretty accurate. So they're basically offsetting. They're doing this little offset bit. They're offsetting that, right? So that when they react, they're only coming back up to that sort of middle zone. And then when you go and you look at what happened here, this is a huge explosive move, yeah? And it's more akin to what we see in this. But what's interesting is that if you go and look at this from the standpoint of like a breakdown, it's kind of complex because you have a reverse split here. So this is where I always get stuck, because I would be like, I don't know where the heck you're supposed to measure this 50% thing from. But if I were measuring it, why wouldn't I go from the tippy top, like I did on these, like the breakdown values right here, right? The bottom here, where the support is. Why wouldn't I go there and then drop this down to where I think the middle is, right? And use that, because I think, well, that's the LSPY. So shouldn't it go to 15? Why isn't it at $15? Right? I don't know. You know, that makes me think that I don't have this right, because it's not going there, and also because it doesn't really line up with anything. It doesn't line up with this drop in, which these do. You know, these line up pretty well with something else. So the other thing you can do is drop this down to like here at 480, 485. That suddenly like kind of clicks. Everything sort of like bakes in together pretty neatly. And so the idea here is like this ends up being the reactive middle, right? That you should be kind of coming back to repeatedly. Does this sound familiar? Well, yeah, because I talked about 1380s for a really long time this year. Like for like 5 months, I was like, I think we're going to hit 1380, because this is the valuation. It's just simple, but it also just kind of mathematically works. The issue was that when we started looking at where is the actual supply, they weren't treating it like this was the supply. We really only hit it once, and then ever since then we've been acting like 6 and down to 575 as supply. It just doesn't really add up. So what we did then is we took that value and we said, all right, whatever, you know, there's some kind of a magic number. No, there's some kind of a importance to maybe this $6 level, and it's like the halfway point from the breakdown here after the reverse split. So after the reverse split, the opening value is like 16 something, and if you go up from there to the bottom, you'll see that like the middle is right there at 630, right? Again, it's the same little pocket between 6 and 650. There's all kinds of little numbers that pop up depending on how you scale this. You take that back the other way, and you can see like that's basically the same distance that we traveled here. So my little boxes are very like loose. They're not really perfect, and I don't usually make them perfect. When I tried to do that one time, I think I came up with like $15 and like 27 cents or something really random. Like I thought that was kind of the perfect number. That was the real reactive number that we should be hitting. And then later I adjusted it because I was like, I don't think they're using that quite the way I think they are, because we dropped a bit before we actually formed a resistance, right? But yeah, this is essentially like the offset value. So just to kind of reiterate what I was saying, I know it's a bit confusing, but if you look at the distance that was traveled here, it's a perfect match. And you look at the offset that was taken, it's a perfect match to like the offset that was taken from the opening value down to the bottom here. Pretty interesting, right? What does that mean, Booksy? You guys are like, I already know what it means. It means that they shifted the chart, and that's where they decided to shift it to. Yes. They baked into this reverse split a shift in value. When you do this, it's confusing to us as a charting people because charting people, that's what this should be named. Let's rename the stream. Oh man, that's funny. Sorry, I have to do it. A charting people. There you go. Sounds like a Tolkien chapter book. Like a chapter in a Tolkien book. So this is what I see as like the shift value, right? And then when you look at that, and then you take that backwards and you look at where those levels are, this is where things get kind of bizarre, because we did this on the stream the other day, and we were like, oh, well, let's take all these offsets and just like put them back up to where they belong, quote unquote. I can't do that. That's the wrong button. There's not really a great way to do it except to maybe have an adjusted chart. Maybe I could do it, because I think you can make a chart. I can do this. I know how to do this. I did this when we did the everything in my life has prepared me for this moment. I'm just kidding, guys. I'm kidding. You're so self-important, Booksy. Now we can do this, man. I think we can. So what we need to do is, this is an 85.94% move. So all we have to do is add, shoot, I used to do this all the time. Oh man, how do you do this? It's like AMC. I forgot how the function thing works in this. It's been a minute. Times 0.8594. No, it's 1.8594, right? That's 185%. Is that right? Nope. Completely wrong, Booksy. Dummy. How do you do this then? Now it's like percentage based. I don't like that. Ugh. Oh, there we go. Is that wrong? No, that's right. No, that's wrong. It's gotta be wrong. It's too small. Oh, it's an 85.94% drop. We need the increased value, not the drop value, because it's completely different. It's like, man, how do you do that in reverse? Why does the market look like that? If it's dollar value. We're just gonna do an estimate. No, Booksy, it must be precise. Fine. All right, so we're gonna go from, it has to be precise. Why bother doing it if it's not right, you know? 237, which isn't actually the low. Oh boy. Okay, 239 to. Oh, bother. 660? All right, so 594.56. 594.56. Bats. Six. Wait, yeah, but then you have to make that into a decimal place. So you just move it over twice, right? 5.94? What? That ain't right. I did something wrong. No, 500% would be times 5. Do we really think this is a 500% offset, though? Or is it just the offset from here to here? Oh, that's probably why I did this wrong. Because the offset's not this total value. The offset's the value from the top to the top. There we go. I was like, there's no way that's right. That can't be right. I know why I did it wrong now. All right, 226.36. Let's try this again. 22636. Bats. There it is. Okay, and then what did they say was the, this is a weird chart, man, but actually kind of makes sense. That's bizarre, because then you look at where these levels are, and it's like, oh, huh, interesting. Let's get rid of these big boxes. They're not helping me see things any clearer than what we're seeing them. So that looks more correct to me. Yeah, and then we talked about this. I wonder why it looks so different, though, because we were looking at this as if I took that value and put it there. I'm kind of making some assumptions that I maybe shouldn't be making, but this is a very different looking chart without the, look at that marker right here. Even if it's like kind of off, I'm not like super concerned about it. Look at that. So let's say AMC didn't ever do its reverse split and somehow like the value stayed the same and nothing changed with the valuation per se, but this shift didn't happen down. This does make me feel like what they essentially accomplished here, yeah, look at that, was this is a hook on, it's so weird because you can see it on the, it's weird to me because you can see it on the parallels still. Like the parallels are there. It's as if that's the shift value. But in reality, you can kind of go back and look at this and see the, like, look at where that 1380s is compared to the original price. It's like right on that $13, like right on that gap value and where we took off from back in January. It wouldn't be that value, you know, if the price hadn't shifted. It would be like near the 3s or something, right? You're like, that's not comforting. No, but then I think about this and I'm like, where is it finding resistance right now? Yikes. Wow, that's kind of amazing. I get it. So we're not fighting what we're seeing we are fighting what we're seeing in front of us, because the chart's not like lying to you. The values are the values, right? But there's an interesting little dynamic here that we're not seeing, which is the offset from this whole thing. You're not really seeing like maybe what the value could be. And there's the 1097s that we're talking about back in September. This is really interesting. It's not perfect, because I think what we can't do is, unfortunately, what we can't do is that we really can't go back to the original value very easily. We would have to like undo 3 dilutions. So one of the things that's not going to ever perfectly add up, because all I did was took the current value and multiplied it by a certain percentage. That's not really right, because in theory, we were just talking about it, but in theory, like this, they were saying that the valuation is based on September 30th, which is like here, right? And they were saying it's what, like 1097 or something, and this only shows us 1050s. Well, the problem is that I don't think that, again, it's kind of like we're sort of taking current value, multiplying it backwards, but I think we're missing something. We'd have to be missing something, because there's been shifts in value 3 times now. So there won't be a perfect connection. I don't think that's going to happen. And I'm not going to do it. I'm not going to be I'm not going to do it. So yeah, don't worry about that. I'm not going to sit here and try to do that. Why not, Booksy? You could do it. Now, I don't know if I can. I might be able to, but it'd be one massive headache. I think what's suffice to say is what this really looks like to me, and we already kind of knew this bounce on the bottom always felt like, oh crap, we're dropping through the floor, because the valuation had changed so much. They definitely diluted the value. We know that, because it went from 500 million shares, and then they added another 900 million shares, and then they did a reverse split. I mean, you can't add 9 times, you know what I mean? Like, it was a humongous valuation shift. What's confusing to people is that they think that the company like lost a ton of value, but it really didn't. It's the share price that lost value. Does that make sense? And you all know this, because like the market cap didn't change. It's just that they went from having, this is where I was like grumpy about the whole thing, because they went from having 500 million shares to having whatever the number was, 1.4 billion shares. So like you can't have the same number. So like that's the baked in valuation there. So the powers that be, maybe for our own benefit, they calculated that valuation change in some ways. That's our benefit, because it gives you an accurate price. The reverse splits where things get confusing, because then the valuation was like, wait, so we're only going to be worth $1.30? That's garbage. They're ripping me off. And I'm like, well, they're not really ripping you off, because you technically would have more shares. That's what happened. We all know this happened. I'm just recapping. You'd have 10 times more shares than you should have. So they reverse split it by 10 for whatever reason. That's the number they picked, for maybe for illustration, just to keep it simple. I don't know. But they did it anyways. And so then you, as you guys know, they like, yeah. So then your valuation really doesn't change. You actually have the same amount of dollar value technically before and after the reverse split. It's just that the number of shares that you have is reduced, so that the cost isn't down to like $1.30, because there's 4.2 billion or whatever it was, 1.42 billion shares in the market now. All right, guys, be nice to each other. Please. Please. So like when you look at this overall, it's confusing because of that. But then if you look at like maybe what that shift represents valuation wise, it is diluted, but it's not like, I'd be curious, man. I'd be curious to know if we already hit $1. Because like what? But I genuinely think this might have already been at $1. What was that value? It was like 300 something, right? $2.2636. What was the bottom value here? 239? Is that right? Oh, shoot. $2.39. Let me think. How do I do this? It's 2.39. Well, you kind of already know because it's right there. I want a more precise number. The only robot here is me. I'm just sitting here crunching numbers. 2.39 times 2.26? 540. That sounds right. $5.40. This doesn't have like the wicks because it's like the linear thing, but it's actually like right there. So it is 540 on this bottom, but shoot, man, is that 54 cents? Yeah, if you reverse split it by 10, that's 54 cents, but that's not really correct because you might say that the stock's not worth 54 cents, Booksy. No, it's not, but that's also with the billions of shares, like the whatever it is, 1.4 billion. So it is 54 cents a share when it hits the low. But, big but, that 54 cents per share isn't actually indicative of the value that you might think it is, because some people get confused and they think that's really horrible, but it isn't quite, that's not quite the case. Because it's 54 cents times we're going to have to do it in, what was it, 1.4, so it'd be 1,400. And then we're going to divide that by, what's 9 and 5, 14? Crap. Stupid mouse. All right, so 54 cents per share. Oh gosh. Times, why is it doing that? Come on, man. 54 times 54 cents per share times 1.4 billion, which is 1,400 million. 656. That's still really low. That's too low. It should have been, that's like really low. I'm sorry. I'm almost there. I just can't quite wrap my brain around this because I'm not sure what's going on today. 54 cents times. Hey, you do whatever you need to do, Rosalind. I mean, it's your money. Nobody here should be disparaging her for making her own choices, which you already know. But if you guys are all adults, you're already aware of that, right? Oh, man. All right, so 54 cents per share times, we're going to do like the original valuation, which is like 1.4. I keep doing the same thing over and over. I think it's 1 point, because it was like 900 million. It was really a different quite a little bit different. It might be more like something else, but I'm going to use 1.4 just to keep it easy. It makes me think that the company is only valued at 756 million, which is really low, which is undervalued. Because that would be, yeah, that would be like 756 million, which is not right. That's a really low valuation of the company. Which is probably why it exploded like it did. It's just way too low. But if you took that value and divided it by the original 512 million shares or whatever it was, it's $1.47. So yeah, it's really low. So this is like, I think that's right. I think I did it right. It's like an estimation, so don't like quote me on it. But this is basically $1.47. Weirdly. I know I missed a piece of it. You guys are gonna be like, he missed this, he didn't do this. But that, I don't care. I'm just giving myself an estimate. So yeah, the original price was like the low was like 292, right? And then this would be like down to 147. Roughly. Okay? Roughly. Don't get mad if you're like looking at me like, was it 292 or 192? The original low. I thought it was 292. But this would make sense, you know? Now, I'm making a lot more sense of it. So they shorted this down to like $1.50 basically below the previous bottom. And then everything else. Hey, Moonlit Rifts, that's enough, dude. Don't be a jerk. We get a lot of people from different countries in here. It's not nice to like make jokes at their expense. I understand make your own choices, but just chill, man. Or woman, I don't know. Whatever you are. And Rosalind, like, just, you know, you're more than welcome to do what you want to do. If you're gonna talk about selling nonstop in here, you're probably gonna get booted. So same goes for you. Like, just chill. I shouldn't have to like mediate, but I am a moderator in my own chat, so it's okay to moderate, right? Have your own conversation. I don't care. I'm not gonna play daddy or whatever. So this is an interesting dynamic because I'm starting to see something that I didn't see before, and I'm not gonna overthink it too much, but I want to kind of give it a healthy analysis, which is that it seems to me that if you look at where we're wrapping, which makes sense because when we were doing the analysis, remember how we said that we thought we were mostly trading like right here in the $3 area, which was kind of like this pocket. Because if you looked at the average price, we did a combo price. I cannot believe that, guys. I'm starting to get kind of angry at myself because I'd have to dig out that chart and it would be hard for me to do. I could probably find it if I worked hard enough. It's somewhere on my computer, I'm sure. I keep most of my stuff somewhere, like the screenshots. But there would have been a chart back here that I made for the combo price of AMC and APE. And once it didn't exist anymore, you couldn't access that. It wasn't accessible on TradingView anymore. But I had a chart for the combination value of AMC and APE. And one of the things that I noted in that chart was that that chart had a particular kind of breakdown. It was like almost like a descending triangle. So it looked similar to this, but it was like flat, like much flatter, right? And then it had a very strong chance that it was going to S-curve to $1. And I remember saying that and people being like, we're not going to $1. But we did. Like we already went to $1. Like we went to $1.40. We're in the dollar range, right? But the thing is like at that time, there was a misunderstanding because I wasn't saying that this chart, the AMC chart, was going to go to $1. I was just saying that the combination chart looked very strongly like the S-curve was built to go to $1. So I would have to dig that chart out to find that and prove that I actually said that or whatever. But I remember saying it, and I remember thinking that that was a really bizarre number because it was sitting between $3 and $4 on average. It wasn't as high as AMC, which I think was like $4 to $5, $4 to $6, something like that, which is kind of where we are now, interestingly. And then Ape was like $2 up to like, it was like $1.60 to $2 was like on average where it was the most. And that's where they did the Antara offerings around those prices. And the average of those, it wasn't a perfect average because you had to average based on the number of shares available for each of the two. But we did like a pretty simple math equation and we found that it was working. And we did a combination chart. I had all these different charts back then where I'd show all three next to each other. And that particular one was wrapping around this middle here. So if you were to go back in time, you'd be like, we're actually trading mostly like right here during this time period. And I said I thought it looked like it was going to kind of do an S-curve down to $1 based on the way that it was set up because it was this whole period, right? I can visually see it now. But at the time, I think that it was a hard thing to prove because you couldn't see this shift value in advance, but it was there the whole time. And now you look at it and you're like, holy crap, it was definitely there, right? Like this is 100% what I thought was going to happen back when I looked at that combo chart right there. And I'm kicking myself because I'm sitting here like, is there a way, I don't know. Was there a way I could have like, because the problem with this whole thing was I messed up. I didn't use the combo chart going forward and reverse it. Like I didn't reverse engineer it back into this new chart. I had no idea how to do that. But I said $1 because it was still existing. It's like a phantom target. I knew it probably wouldn't go to $1 because that came from the combo chart. The combo chart, I used to have it on here, but you can't look at it anymore because Ape doesn't exist. So it doesn't know where to draw that data from. But I used to have it and I charted it. I did like a Excel spreadsheet and everything for months. Look at that. It's perfect. So when I went and did it, I said, it looks like it's going to go to $1 on the combo chart. And then right before the reverse split, I was like, I don't think this is actually right because I don't know what this means when it actually converts. I had no idea if the numbers would be correct when it converted. I kind of just abandoned it because I was thinking like I wouldn't be able to do it. And I was kind of right. I mean, to be honest, I just lacked the intellectual ability to do it. I could not do it. I couldn't figure out what that value was going to be. So when it did finally happen, I was more focused on like just charting the everyday price action and just trying to see where the heck we were going to go next. I completely left this behind. I don't know if I could have figured it out at that point, but what I would have had to have done, I guess, is find this value, this 2.2636 value. I don't know how I could have done it. I'm sure it was there. But even if I did that, I would then have to convert it back. So it's like confusing as all get out, right? I would have to like take that value and then convert it backwards to the original value. So we've gone from 292 here when this first raced up down to like 147 here. So it's dropped over $1 plus some. in terms of like actual company value versus share price value. So no one's telling you this because no one's telling you that the price has already dropped to $1. It doesn't make sense. You didn't reverse engineer the combo chart. Ah! It sounds made up, but I can't describe to you how frustrated I am because I literally had a chart like this. It looked like this. And I had a chart just like this, but it was the combo chart, so the values were a little different. But I had measured out a 50-50 to $1. And I had done it based on this top. You couldn't do it. There would have not, I just don't know how you could have done that on this chart. Like, I have no idea how I could have figured it out. It's fresh. I probably could have figured it out earlier on, though. That's what I'm trying to, like, that's why I'm getting angry, because I'm sitting here like, did I really just now do this and never did it before? And now I'm like looking at this chart like a complete and total idiot. Yeah, so you're right. So like when it's underneath, this is the same bracket that we just drew. So we were just looking at this a minute ago. It's just in a different place. This is the same bracket that we just drew. We just did it down here on the other chart, right there. It's essentially like the same zone, because what we're doing is we're shifting that liquid middle to where we think it, valuation-wise, it would be without the shift on the chart. It's purely visual at this point in some ways. The numbers matter, but it's really just so you can visually see. It's helpful for me anyways. You can visually see where that would be. So like what happened here on this big auto reaction, which again, this doesn't really show you, man, it's almost painful to see it now. Like I get really upset, but it doesn't really show you the full picture here. But what you're seeing on this auto reaction is that this drop in value here is the right drop in value here. It's the correct value. It's the right one. And that ultimately that shift, we were just talking about this as well. I hope you guys are following what I'm saying here. That shift down is a shift away from here, the bottom, which is essentially like right underneath the breakdown value. So what they're doing is they're shifting it low enough that when you react back up, you're not going to break the bottom floor yet. So in our current time frame, it's confusing because to us it just looks like we're beneath the floor and that's the supply, and that's technically true. Like it is what it is. You know, you can use that as a supply zone. I don't care. It's fine. It works because it is a supply zone. But in a weird way, maybe behind closed doors almost, there's another story going on here, which is this reaction came after a hook beneath the original floor. So if I were to draw this in a way, what we would see, I can just do a little quick doodle just to help visualize it, because I think it might help me visualize it. So you have like a cat ear, right? And then it just bleeds down, and then you go into like 2020, and then you hit like a double bottom, and then you go up, you break out, and you go to a new high, and then it bleeds down over time. The short of it is that there's like a paw and a cat ear here as well, and then when it breaks, it goes low, and this is where things get kind of weird, because originally you would be like, oh, it went to way low. It looks like it goes way down here if you're looking at that shift value, and that makes you use all these really steep angles. But if you go backwards and reverse engineer it, that breakdown, it's this loop right here is essentially like looping around the actual creek from that jump that we made in January. So before I do that, what you would then suggest is that it's not actually down here beneath this stuff, it's actually on it. And so they're using this angle, which, by the way, this makes a lot more sense because every other time on the charts when I do stuff like this is typically what I'm looking for. I'm not looking for like some weird, I don't know, like it's bizarre where it is what I'm trying to say. It doesn't look right. It looks like what we did is went all the way beneath all of this, right? So this is like the two variations. So what it appears to us visually right now is it looks like it went all the way beneath all this and we're kind of stuck now, right? This is what the chart might look like in the future. We don't know. We're not going to talk further than that right now. We're just going to do what it is. And that's where I'm like, I don't get it. That doesn't usually happen on this chart. But in reality, it's like this bounce here actually in this cross actually represents the drop beneath. Yeah, so it's like the creek cross is intersecting the bottom here in February where we're dropping beneath. So this whole thing right here, the anchor, that's wild, dude. And then that anchor is at $6, at $5 and that's the price right there. This is the value that we took off from in January. This is the value, this is the support that we had in January that caused, not necessarily caused us to run up, but that we did run up from it, okay? That doesn't mean that's the cause, it's just that's the correlation there. So like that value on this bottom, son of a biscuit, man. You were right, somebody said $1 or $5, it's like $5.10. That value is the January run-up value. So it's $5.10. I'm going to say estimated because I know none of these numbers are exact. So that makes this whole thing a lot, this actually makes a lot of things different because some of my earlier assumptions about what might be going on could be really misplaced. How are you just now coming to this conclusion, Booksy? You've been staring at this thing for months. Well, I knew this is where this was. It's not like we didn't know there was supply here. It's not like we didn't know 485 to 5 was super important. We knew that. Let's not go too far. We don't want to throw Booksy under the bus too much. I don't want to throw myself under the bus too much because I did suggest that those were really, really important numbers really early on, like specifically over here. That 487 and that 485 level, I mean, it's so critical. But I think it goes up to 510. And this makes sense as to why now, perfect sense as to why now we gap down below that value. Perfect sense. And why we were struggling to hold above here. This wick, it changes a lot of this chart the way you might perceive it because it's not just 5. It's not just like a liquid center on a range. It's not. It's actually like a struggle bus attempt to, speaking of buses, to push back above this value here. I think the dynamics of that can't be under, I don't think you can be, I don't think you can overemphasize that. So this is going to be interesting too, because now I'm going to see where this bottom goes. I'm really curious now. So these percentage shifts should be right. I'm going to see where this bottom goes off of this value. So this is where the 2020 first bottoms were. And then I'm going to see where that drop value is on the spring from this top, roughly. It's probably going to make perfect sense. Tisk tisk, Booksy. Tisk tisk. Yeah, that's the 450 number. That's 455. This is weird. There's one more thing I want to try. I don't know, man. I don't like overstressing things if I don't feel like they need to be overstressed. I get excited about a lot of stuff in the market. If you guys aren't aware, I'm a pretty excitable person when it comes to like TA. But this is a really important idea. I don't know why I didn't do this before, so I feel really silly now because like I think that this might be the most important thing we've done in a long time. And it's on a weird day. It's like we just had a dilution announcement. We're down 9%. It seems like a horrible time. Like, okay, thanks for nothing, you know, the 11th hour kind of thing. What if we reduce this value? What if we reduce this line? So this was the original sign of weakness down here, if you want to call it that. It is a spring, but it's also a sign of weakness because later we're going to come back to it. Look at where it is and interacting with everything now. Oh, that hook value right there comes off of it, doesn't it? Right off of it. It may seem like I'm cluttering up the chart, but I think that's the shift. Yeah, so this is the shifted SOW line. Sow. So what we're experiencing is a jump. So going back to this little doodle, so what we're experiencing is, and this is really weird because it's in a weird spot, but basically, oh, it's such a weird spot, dude. It'd be like this. And it does not quite right because obviously this goes above it, then back below it, and it hooks below it. But you get the idea. So this is a big... this is garbage is what it is. You guys are like, what? It's not good. So what this looks like is it looks like the... it kind of looks like a spring bottom, which is fine. But then this actually came up and checked right on top of that. It pushed through it again. So I'm going to suggest to you guys something that I maybe wasn't doing before, but I think these 2 points of intersection are really checking and rechecking that sign of weakness line. And then this is the regaining of that sign of weakness. So this is the weakness here. They're pushing below it, saying we're going to go back below it later. They're bringing it up to sell back through. This is close to grabbing it, but it hasn't, maybe it hasn't landed on it like perfectly. I can't be 100% sure because I'd have to figure out exactly what that value should be, where it should be exactly. It's somewhere like right around there, but I'm just kind of averaging it. So this is the reason this is so ugly in part is because somebody's trying to push it low, but it didn't go low. It ended up holding as a double bottom. Then it reacts and it comes back and it climbs back up onto that line. And that's where you get the big reaction. So it's going off of that sign of weakness line, which is just a really important creek, basically. It was designed as a support back here on the spring. So it's found support when it pushed off of 430, which locally it's important for its own reasons. It's not like it's just important because of this, but it is very important because locally it found that support again off of, so this is kind of what happened here, is it dipped below, again, simplifying it, there's a slight dip below it, and then it actually jumped back above here when it crossed the creek. And this is why we get this really strong reaction to the upside, in part, because it jumped the creek, which we already knew, like that was a big deal, but it also jumped over and hit that original downtrend line here, which is important. Yeah, I mean, it's really significant discovery, I suppose, if you want to call it a discovery. It's just there. For anybody to see, really. So this is what the chart kind of looks like. You can kind of ignore that. That's not a real hit on anything. But this is sort of what the chart should look like without interference, I suppose. Yeah. So I would contest that the reactions here could mean a couple things. So like number one, it could mean that if this comes down again, that this may not ever go back below this trend. In theory, if this were to reject again on the top, which it could be doing like right now, because we were talking about 5, it was like pinned underneath 5. So as soon as it went above 5, it got sold down really hard because, again, 5 doesn't just represent the... It doesn't. It represents a very important, strong number, right? It represents the 510 represents roughly where we ran up in January. So when you look at that from that point of view, this hook suddenly becomes one of the most important ones in the whole of the market, on the whole of the AMC story right here. This push to 511 is probably the most significant mark that we have, because it was like we're moving away from that breakout value. We're not going to break out. It's kind of, it was weird how baked into the chart this was. Like I knew, you can tell just based on the ranges that this area could have been a breakout. It just needed to hold and then make an advancement. It just didn't. What I didn't know is that would be, and it would have been, right? Because if you would think about this, if this had come back down and it held where that January run-up had held, and it pushed up again, even if it were just like a second up thrust, at that time, it just seemed ridiculous. It was like, why would it go that far that fast again? But I was like, in theory, it could just go right back up again, here. And I think at the time we were looking at a different number, probably over here somewhere, but it was pretty high, But it would happen that way. This is why Stockfather even said this. He said he was confused about why this went so high, and it is confusing. It's a huge move. Seems like it comes out of nowhere. It is an auto reaction, but it's like unnecessarily big, and it's right here. This is where it really dropped. This explains a lot. So I get it now. Okay, so they're using it as a man, that's wild to think about. So they're using this. They had this massive explosion because somebody bought in above that top January value, and they just absorbed it with all kinds of selling to bring it back down, and then they're pinning it underneath. They don't want to trade. They don't want to trade this range right here. Like we've already traded it. They're probably gonna just pass through it at some point, but they don't want to trade it. And this is a weird thing to say, but this range right here is actually, this is where things get real like, what? mind-blowing, I guess. I don't know. Or confusing. Probably a better word. It's not like a mind-blowing thing. It's like oh. I don't think they want to trade this because they already did it with Ape. So like they're using that block right there. That's the reason why I kept finding recently, this makes a lot of sense now. I couldn't figure out, I just kind of set it. And I was like, I don't know why, but all of a sudden like 6 and 650 became this really almost insurmountable target. Like why would we not just be able to go up? What's the importance of that? Because it seemed like that was a no-brainer to me. Like why wouldn't we go to 869? It's built out there. But now I get it, because if you go to 869, even in any attempt to jump over this 510 is going to be potentially like catastrophic for shorts. Because if you jump over that number and find support, you're basically racing up every time, in theory, to this level all the way up at the top at 11s. It's not as simple as like, oh, it's just a range between 9 and 260. They've already traded this area here, value-wise. We just thought that's why I was like, it would make sense to go up here and distribute. They hadn't traded it yet. You're not seeing that on this chart. You can't see it. But they already traded this. When? The combo chart already traded it. And then we traded it in 2020. So when Ape was here, we already traded this area, is what I'm trying to say. Like if you look at just the pure value, like what was this valuation, what was the liquidity here, like it's already done. This whole motion right here is purely a walk down to get through that already traded zone, which technically goes from whatever this original price was. It says 25 now down to 11.80. There was no desire to retrade that. They did that during the Ape stuff. It's underhanded and not very fun, because we're looking back at it and we're like, I don't get it. You know, maybe you don't get it quite right, but I get it, because I was doing that silly chart for a while. This is essentially like the middle of that trading zone. So this is like the bottom of that trading zone right here. I kind of moved it in the wrong spot. We traded this area during the split that we had with Ape. Yep. Now it's clicking. That makes sense. So that means, because that's like the wraparound value here from this drop down to where this gap is, they just shifted it down because they didn't want to trade it again. So they went back up to the middle liquidity, which again, looking backwards, is represented like a 25. That's not what it was at the time, but it was essentially like the center liquid of this area from 2020. So they basically did like a 50% retrace back to that. Then they pushed all the way through it, and they're using this now as like a bracket for trading right here off this bottom. And so any kind of action between this price and this price would be like a sellable action. So this is now like supply, because they already pushed through there. They're not going to go through here and break out above. They're definitely not going to try to find a support above 750 unless they're ready to go. So they converted this. I get it. I'm starting to get this picture now better now. Freaking running around circles thinking it was all like you couldn't do it, and I think you can do it. So this is supply, because they don't want to break out. And if they turn that number right there into demand, which is 510, then it will essentially, now you can trade up all the way to the top here. So there's now a piece of this that I guess I was kind of missing, which is where the heck is that supply zone? I was talking about that before. I thought, well, they keep pushing it down, but that makes a lot more sense. So the last thing I need to do is decide where exactly that is. It looks like my numbers might be like slightly off, so that's possible. It does look like it's like right here. So by comparison, it should be maybe that hook right there or that floor. It's close enough that I think we should just do that. So that would have been like a weakness, and then they found support on it, and then they drove back up through it to get supply. So the supply zone starts here. I mean, again, it's kind of already in the chart. I guess if you're smart and you just looked at these localized areas, because this is where that, yeah, look at it where it catches when it comes back through. Right here, it does the supply drop again. This closed on the 4 hour 688. No, yeah, but it opened at 737 and 731. I mean, it could be 737. There's a little like ledge here. It's close. I don't know. It'd be close to that number. That's the supply zone. So from 737 all the way up to it's easier to see on this because it doesn't actually look wrong. It would be to that hook value here at $9 or $10.96, which is weirdly like, isn't that the number they just gave us? Yeah, 1097. The heck? What the heck? What does that mean? Oh gosh. Why in the world does Adam Aaron and the AMC board think the price valuation should be 1096? And that represents this supply zone top. What is the significance of that? They think it's worth as much as it was before it ran up. They don't necessarily think it's worth a huge amount of money. 1096 sounds like a lot, but it's not. They're basically saying they think it's worth this amount here. If you take away like the shift values and stuff, that could change it a little bit, because you might say, well, if they think it's worth 1096, then shouldn't you like use the shift value and put it way up high and this and this and this? You can do that. And it may be that, again, we're kind of like stretching our brains a little too far here, thinking too much about it. But like, that is the value right now. That's why they're diluting where they're diluting. We were trying to make this argument earlier today, and we weren't making it maybe the best we could. Look at where 1096 is on the chart. That's 1096, that yellow line right here. Look at it if you take away the shift value on the chart, look at where that is in relationship to the chart. And then go back to where we are now. And it is the 485 level. Holy crap. What? 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 This is so stupid, but I'm going to write this. It's 45 level. It's like an average bottom from 2020. I don't know how else to put it. It's not quite on the bottom in 2020, but it's an average bottom from 2020. So anytime the price came and found, that's why they did it where they did it. We have an answer. You're like, what do you mean? That doesn't give us an answer. Yeah, it does. If you go back and you look at 2020, it's hard for me to sit here and say this because it makes it sound like I'm really bearish or something. I'm not necessarily really bearish, but it's almost like they're trying to reset the value and that this was somehow appropriately valued, which again, I don't think it makes perfect sense. But it is bizarre because this number does not represent what it used to represent. So 1096 doesn't represent $10 a share. It really represents closer to like 280 or $3 a share, right? In retrospect. So like what's bizarre about this is like thinking through this and like thinking about where that valuation was when Ape and AMC were together, they were at $3 a share. Like that's where they were. So their average valuation right now is like more or less like they think it's worth like $3 a share, but it's based on like the original values. That's why this is acting like supply, because this is where the $3 wall was, and they don't think it's worth more than that. It's not. I know it's confusing because we're talking about like two different numbers. You're shifting like twice in your brain because you're like, wait a minute, I'm shifting this up and then I'm converting it backwards. Yes, I'm shifting this up, removing the chart shift, and then I'm converting it back to old numbers. But it makes sense because of the. If you think about like the fact that they added so many shares and then reversed it. That's not really a good thing for us because in the end, if they don't think it's more valuable than like 3 to 350s or whatever this is, $3 to $4, which is kind of where it was up here in the middle on the combo trading zone, that's not great. But I mean, it makes some sense to me because that was where it was. I mean, it's not like it was way off in the moon or way off in the ground. It was just kind of an average of $3 to $4 per share if you took the two together. So adding Ape, they basically made the financially anyways, from a monetary standpoint, the market decided that the AMC plus Ape was worth this much, $3 to $4 per share. And then when that value shifted, the issue is that you have a double shift. So you have the valuation going into that reverse split, but you also have like an active chart that's like breaking down. So they use $3 to $4 per share. They use that $3 to $4 per share to create a supply zone based on the past. So they knocked it under the valuation, basically. Like, it wouldn't be so complex if it weren't AMC and having all these crazy things. It'd be pretty straightforward. If the company thought that their stock's worth $5 a share and that was a previous bottom, a spring might be, let's test lows and let's see what people think about it lower, right? Like, that's pretty normal. And that's probably in a lot of ways what was happening back here as well, in that you were testing low to see how the market reacted, and it reacted. It's not good news. It's not like what you want to hear. Like, you don't want to sit here and think that the company is only worth $3 a share. But that, without going any further on like this whole mathematical journey that we've been on, that's really what they're saying. Like, that's really what they're talking about. They have all these other big numbers in there. It kind of threw me off this morning. So I'm sitting there like, what the heck? Why are they diluting here? All this other stuff. They're doing it because of where this is and where they think the value is. So they're diluting it equal parts around this value. Suddenly it's clicking. Look at where the dilution happened here. That's why they're diluting it where they're diluting it. They don't necessarily think the market value of it should be significantly higher at this time. It doesn't mean it can't be in the future. It's just that right now, that is where they're diluting it. So like we were doing that goofy little thing earlier. We were like averaging it. We were taking the average and we're like, oh, it's averaging like right here around 5s and all this other stuff. No, it's averaging like they're diluting around that supply zone from right here. So it is confusing because I'm obviously making a lot of jumps and assertions and all this other crap. And I'm using like loose math. So my math is like, it's loose. You know, I'm not talking about like, anyways, the bad joke. So like, but I'm using like loose math because it's just simple enough. So this would have been like the S curve from the combo chart. Yeah. Took me a year, but I figured it out. Actually, it only took me like an hour, but I just didn't get the piece of knowledge in my brain until I started looking at that stuff this morning. So stupid. Oh man, I'm so mad at myself right now. You guys are like, well, what could you have done differently, Booksy? You said you wouldn't have done it any differently. No, I would have done something differently because I would have interpreted this as if we are actually here, not down here. And when you look at it from down here, you're using everything in relationship to these parallels as if this is an unexplored region, but it's not an unexplored region. That's the key. The reason why I was confused when Jim Cramer said $6, and all these analysts kept saying, I'm like, why would they say that 6 is the max value? You know, like, because to me, I'm looking at the chart, like, it doesn't make any sense. It's the same setup as 2020, blah, 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 blah. And I'm not sure if all the analysts know the same thing. Maybe they do. And that's just their job, so they're good at it. I don't know. But he's not like somebody that I would look at and be like, yeah, that guy's an analyst. But I took it into consideration. I'm like, you know, there is a lot of things happening at 6 to 650 that don't necessarily make sense. Like, why are they there? There's not much information here back at 650 to go off of. It's just like a middle point. It doesn't make sense to me. Now it makes sense because this area right around 650 is essentially like the middle of the dilution, which is really the middle of this supply zone. So all of these dilutions are happening anchored around where they see supply. I don't know why they would do that as opposed to waiting for demand. So it's a little bit opposite. But Cohen kind of did the same thing because he used the chart right here to like inform where, I don't know what this is. This is a weekly chart. Yeah, he used the chart here to inform like where that would be, that valuation would be best suited, like wrapping around this value. So he waited and diluted here once it got up high again and wrapped around what maybe would be deemed as like a middle value. And AMC did the same thing. They waited and diluted to what would be seen as like here, like a middle value where it's kind of chopping up through. I think he's pulling the trigger way too fast. I'm going to criticize him on that because I think he could have waited and seen if it had gone up and made the run up. I also think that probably when we were getting that $8 number, we're really talking about 8. So this is going to be interesting now because I can kind of filter my own TA back through the lens that we have here, which I wasn't doing before. So I'm going to filter it back through here. So I basically thought this could come up to 869, which was the top of this range here, which is essentially a gap fill. What the fudge? Now I can kind of make a better assertion of whether or not that's reasonable. What would 869 do? And then what the heck did this actually hit? So I want to go back and see where this actually hit the top. So wasn't it like 10? $11.90, right? And then what was it in extended hours? So $11.90 during regular trading hours, and then $13.30. $11.90 and $13.30. $11.90, $13.30. Okay, well 1330 is the bottom of this gap. 1190 is kind of like, well, it's the top of this gap. 1190 is kind of the bottom of it. Like they left the gap there, which is interesting. I might not be able to get it perfectly, but I can get pretty close based on the shift alone. So this should be like right here. And then this would be like basically right below it, thereabouts. Coincidence? I don't think so. Wow. They came up to the bottom of the January run-up. We're not talking about real numbers in some ways. Like, I get that it didn't actually go up there in this chart. But we're talking about like valuation numbers. They're testing the valuation. It's, remember, like, we're not dealing with humans necessarily. We're really dealing with robotics. We're dealing with essentially artificial intelligence. So they're not necessarily measuring things like we are with like price of the share. They may be using like formulas that really are taking that into consideration with not with physical share price on a chart, but with how the share price relates to the total market cap. And that would be like a valuation process as opposed to what we do, which is just look at share price and our bottom line. So as their share price is going up, very few of us in our brains are thinking, now the company's worth this, now the company's worth this, now the company's worth this. They are. So when they hit the top, they're thinking, now the company's worth this. Because that's the translated value. And this explains why that parallel works so well, because that parallel is essentially like a juxtaposition of that value right there. So they're saying like, now the company is worth this much from, they're saying, because that's the same, it's the same value as it was here. Some of you probably already know this and you're like, Booksy, why are you just figuring this out? Why didn't you think about this like a year ago? I don't know. I just didn't. Part of me was just thinking like in terms of like this being the bottom. So that it's confusing because again, I would have been like, oh, so they don't think the company's worth what it was when it was $2.92 a share? No, that's not actually what they're saying. They're saying like somebody pumped that thing up. It went all the way up to this top and then they were like sell it back all the way back down through here. Right? And there's a big difference between that and like what we're experiencing like day to day. Yeah, big difference. You can't see that on this little red chart because it doesn't show you the wicks. Basically, it doesn't show you a lot of that stuff. But this red chart actually goes all the way up to those two values, like extended hours and stuff. So this should have like a little extension here. It just doesn't because it's a line chart. I don't know if I can change that, but that's what it is. So that explains a lot because they're really going back and checking here. Why would you do that? It might be a bit arbitrary. It may just be that they like that zone because it's higher than the middle. Like up here in this upper 50%, it's kind of like the 50 of the 50. If you divided this into quarters, this would be about halfway up. It may just be a percentage thing, but also I think part of me is thinking that they may have done this in order to sell again and get out of, somebody wanted to maybe get out of shares that they bought back here. So there was something, they kept they kept some in this trading range from like the high 3s and 4s. And once those converted, they could still get rid of them if they brought it back up to 1050s. So you could, like, valuation wise, right, you could technically go back and test this area and then accomplish another goal, which is we're probably buying shares low anyways, but we can swap out some of these $3 shares that we bought way back here there, which is absolutely not the way I was thinking about this. So this is bizarre as all get out. So in theory, when they came up, they could have been selling shares that they bought back in April of 2023 for like either breaking even or even a profit. That is a big deal. There's a lot of speculation out there about who owns what and why they did this or why they did that. But the bottom line is that, like, during this time period, and I made a case for this before, and I think, I don't want to say it fell on deaf ears, but it was a different time, in AMC. We had a lot of different people in the stock, and there was a lot of different controversies about Ape and all that junk. But I made a case that if you were trading it kind of perfectly and you knew how to trade it perfectly, like a robot would, right? Like an algorithmic supercomputer would or whatever, that your averaging could be quite low. And in theory, if you just bought Ape, right, the arbitrage would be like that was what we talked about, was like you could just kind of swap between the two and get a lower average by purchasing more, potentially by purchasing a certain quantity of Ape in proportion to like AMC. But now I'm starting to get it, because the distribution that we're seeing here is one that is actually camped up underneath that zone. And so you're not running back up through it, because those people that open short positions here, they're good until you get back above. Yeah, anybody that had a short position, this is a big statement to make, but anybody that had a short position, and you guys are like, well, yeah, no, duh. But think about this, okay? Average-wise, not puts or something like that, nothing that changes with time, just short position, or even shares for that matter. You don't get an opportunity to get out of those shares if you bought them at $3 to $4 back here. You wouldn't get an opportunity to sell those unless you came back above $7 right now, $7.40. If you opened short positions back here, you might think like, oh, they made like tons of money. But the truth is that that's not quite right, because there would have been a shift in value. All of those short positions opened at 43. They wouldn't have been worth 43. Like, just like the value that you saw got shifted around, the short value would also get shifted around. And then because of Ape, if you only owned shorts on AMC, it would have been essentially diluted. Your positions would be worth more like, quote unquote, 22 or whatever, but valuation wise, they would have been $3 to $4 per share, because then there's a split, right? Because the split changes the valuation number. It doesn't change the actual value. It just changed the representative number per share. But really, this was like 3 to 4 per share before that reverse split. Not, which again, you're looking at it like, well, so what? This is 334 up to 50. That's not that far off. It's enough off that you should note it, because it is a different trading zone. It's not exactly here. It's slightly lower. And that works. I think it makes sense. It's not good. I'm not saying it's good. I'm just saying it works. So when you saw this covering, it genuinely could have been shorts that entered way back here, not during this downward motion. And that's probably why I got a little bit confused by the where we went, like how fast we went. Because it would have been like a massive amount of positions between here and here. And it also makes sense as to the distance traveled and the shift value, because they benefited from the drop, but not as much as you might think. And it shifted down enough that then when they got out, it gave them the appropriate number value. And you're like, what? I know. Like if your average right here turned into $3 to $4 per share, and then you drop down this much, like, okay, so what? Well, that isn't the full width of the move. Like, it doesn't give you like the whole rest of it. It doesn't give you like what would have been maximum here at the top. You're missing like a value. So you've lost this value as a short, essentially, if that makes sense. Because like it did shift the value, it would have changed and reduced the amount worth of your shares, what they're worth. Your position may have been the same to some degree, you know, but it wasn't because of ape. Like I'm talking about the shift value versus ape. There's a difference. Ape diluted, and then we had the per value per share, you know, because you're adding shares back, literally adding value. So it's reducing your value if you just held AMC shares. Yeah, it's confusing as all get out, but in order to get the extra little oomph that you need, you add on the rest of that value. Yeah, and I just think it's like, it sounds stupid on the one hand because you're like, it's too complicated, Booksy, who cares? Shorts covering is shorts covering. And I'm like, yeah, I get that, but I think what's going on in part, and I really should be looking at the shift down. So confusing. Yeah, it's right there. It's there. It's on the bottom. They took that value and added it back to the top, off the bottom. Because they lost that value. It does seem a little weird to me that they came all the way up to the bottom of the January run-up, but I don't think it's that complex. I think it's probably pretty simple. Like, that's just where they had they had the ability to get out of a position here with the max profit. Like, they knew they could take it up that far, so they did, and get out of a position. Somebody's shorting this to, like, death. I think what we're seeing is that as they're doing that, they're running through here. They don't have to display their short positions, so it's probably your Vanguard back here. They probably have like tons of short positions opened. And they're buying shares, which we see visibly. We see they own like 30 million shares, and they're only really publishing that they only have a few 100,000 short shares. But they probably had like a ton, because they sold 60 million shares here back into the market. They must have been opening up short positions as they're selling or something, because that's probably what they're doing. Because I think that they probably had them already, we just didn't know it, and then they would have been doing it again. I don't know, probably. That's my thought. I can't be sure about their strategy there. Who knows? It's probably very complicated and also very simple at the same time, because who knows? It's made by humans, but it's run by supercomputers, so I'm sure that they could figure out a way to make it work for them. So there's two stories here, there's two narratives. So one is a narrative of Adam Aaron diluting essentially right around the original run-up value. That's the first narrative. He's essentially created an average here of dilution. So this would have lowered that average because it was doubly low. Yeah, he's essentially diluting to this value. I don't know why exactly, but that's what he's doing. So he's diluting to the big run-up value. Like whenever we get to that value, this is where like dilution is happening on average. I don't know why, but that's what it is. So that's what's happening, I think. So then we look at this value today, it's kind of confusing because we're like sitting here like, why does he keep diluting this stupid stock? He gets so angry because he's like, every time it runs up, he wants to dilute it. Really, when he diluted up here, I mean, it did a lot of harm, but this would have been like the best value that he got. These other two values are really just wrapping around the bottom value here. So this is not yet demand. We can't call it demand. It was at one point demand. It is now supply. That's the significance of this level, because in the first instance of us coming down here, this wasn't supply. We're treating it like supply now, which is fine. And you guys already know this. You're like, well, duh, we're not up there. But I'm saying like it without understanding what we just talked about today, you wouldn't think that we're not trading $14, $15. Why are those numbers keep coming up as targets? Why are we getting numbers right between like 13 and 16 all the time? You know, what is the deal with this? I don't know if they're phantom numbers or what. I'm not really sure. We're at 461, so we're breaking low. It killed the stock momentum for sure on this move up. But we've already converted this in supply, and what's bizarre is that it doesn't seem like it, but we are actually doing this interaction down low right now in present time. Maybe I can do a better job of like charting this, but I'm not sure how I can do it. I guess the best way to do it would be to take this same zone, this supply zone, and just map it where it should be, which is right here. This is the same supply zone. This is such an obnoxious day for this. We're at 10% down, which would trigger whatever. You know how it is. Who cares? It's already at 440. Where did it hit 440? Did it hit it already? Just dip down and hit it? I'm not seeing that. It hit 440 in pre-market. It didn't hit 440 in regular trading hours. It hit like 461. I don't need to look at a weekly chart to know it's going to be a big fat inverted hammer. You know, like, what do you want to say? You know it's going to be, because we started high. If we close low, it's going to be like a huge wick up. The only thing that I can tell you guys with some confidence right now about this price action, aside from all this like theoretical, like mathematical stuff that we're looking at, which we've been working hard on, the only thing I can tell you is that I don't think that it breaks down really until it's below like 430s. You know, like it'd have to come below like 435 or something. There's a particular level down here that I looked at. 440 is not low enough. So when you look at this in theory, like it looks bad because you're like, well, great, Max Payne wins again, yada, yada, yada. I get it. I'm not against that. Oh, we diluted, great, you know, share offering, wonderful. It's not, none of this is like good news in that regard, okay? The fact that we dropped these levels isn't good news in that regard, okay? I don't want to make it sound like it's a good thing. It's not a good thing in that sense. But where the creek is and where we are is, it has not, in my opinion, broken down. Even if it comes down to like 440, I'd probably still be like, yeah, it's okay. So we had talked about earlier this week, multiple times, coming backwards. If we hadn't made this run up, I would be a lot more bullish about coming back. Because we made this run up, it just looks like a humongous distribution effort. And frankly, I don't want to be like this guy that gets everybody upset, because I'm sure I looked at my stuff and it wasn't good enough to sell yesterday, some of it. It's going to be red today. It's going to be really red today. I'm screwed. You know, from an emotional standpoint, I don't bring that kind of stuff to the table. But I'm telling you right now that me looking at this and looking forward to like having a good Christmas with an AMC boost is not going to happen if this breaks down. And I'm telling you right now, honestly, it ticks me off. I don't bring that to the table. I talk about the math and stuff because you don't need to hear my problems, right? You got your own problems. You don't need mine. You got your own financial situations. You don't need mine. But if I look at this and tell you, like, that looks fine, no. It doesn't look fine. It looks like a gigantic distribution is what it looks like, especially knowing what we know now and the fact that, yeah, we closed above was good, but maybe it just didn't make it to where we thought it was going to make it to. Our chart didn't exactly have targets that were way out of the moon anyways. We had a couple targets that were really low, like in the 560s. We had some that were up near 650, and we had one near 8 something. No, it didn't get there, but I can't control if they pop it up and it holds, and then after hours they dilute it. What are you going to do? There's nothing you can do. You can't do anything about that. The only thing I can do now is just look at the chart as it is and say, do I think there's still a chance that this could rebound? And I'm saying right now, like, it's not a great chance, but it's there. This to me looks nasty. Like really nasty. It looks like a UT. And somebody asked about the weekly. I said I don't really need to look at it because I'm sure it's going to be nasty or whatever. It is. It's like a giant candle with a huge wick all the way up to like 550s that then closes beneath this key level that we know at 510. It doesn't look overly positive. It's also an engulfing candle. Like it's engulfing basically entirely this body of the previous week. That's my analysis on the candle. It looks like it would probably demand some kind of bearish continuation unless something happens. So you're saying it's just a big old hook. I'm saying that yesterday and today are very different because yesterday you had a possibility that this was actually closing where it needed to close. It did close where it needed to close, right? Guys, it would have been completely different if this had been up here, you know, going into the weekend. You can visually, it's hard to maybe see it on my chart because that yellow is really dominating right now, but you can't see the wick very easily. But it would have been significantly different if we had stayed here at like 520s. Do you not see that? Like that radically changes the chart. Like if this had come up here and even come back down to like 510 or something like that, which is the level I was talking about, like it looked like it was positioning itself to come to 510 and retest this top, this would have been like, yeah, you're going. That's why I was saying I would have changed my tune. It would have been very, very different. Right now, what it looks like is just a gigantic candle body that closed beneath this line, and you just have a massive distributive effort to push it up and come back down. It's closing very low. I'm not going to sugarcoat it, you know. Is there a chance? Look, see, maybe. We have a gap down here that we talked about earlier. I would have been, I don't know how many times I had said this, but I said I would have been much more comfortable. I'm sort of tired of hearing myself talk about it even. I'm just frustrated with it because when we came up, I had arguments with people about why they thought it didn't need to come back down. And I'm like, it would be a lot better to just come back. It would have been infinitely better if we had just come back and filled that gap flipping a week ago or whatever when we had the chance and just come back and fill that gap and then advanced again. Because you wouldn't be asking the question, is it going to hold? At least for that point, you would have said the gap's filled. It doesn't need to go that low, yada, yada, yada. Right now, it looks like we're just kind of spread eagle between these two creeks. One is a resistance, one may be a support, but guess what? We didn't check it. You get what you ask for, right? So mad right now. I'm not blaming you guys who said that you didn't need support, but you freaking asked for it, you know? You did. You did. You said it didn't matter, and it mattered, man. Because now you've got two resistance candles here that wicked up above this line. You have no candle testing at all down here near like 450s. Just nothing. There's nothing there. It's a huge gap. Huge gap. And now you've got this massive potential reversal candle, and you have no idea if it's going to hold a support. You know? It's horrible. So yeah, there's a chance because it hasn't broken through. And once it breaks through, if it breaks through, it's going to be done. I don't think there's going to be any question in our minds if that happens. So it's not there yet, but if it breaks through, it will be done. Like this is essentially like a double whammy kind of creek thing going on here. And then they sort of invert on the other side. This is what I was talking about with, you know, coming through like 430s. Basically, you don't want to come below this mark right here. There's an intersection of an uptrend there and it's just all kinds of support right there, like 438. If you hold this level right here, make a higher high or make a higher low, and then you break out, there's a small chance that this December turns back around and we head back up. But so far what I'm seeing is a massive shakeout, like it just 1, 2, 3 into a dilution. It could have been extremely positive today had this held above and created a candle above 510. Which now that I'm thinking about it, we didn't even really do that yesterday. We were just kind of looking at it like it was a localized importance, but now I'm looking at it like, oh, it's actually a big deal. 510 is a very, very significant number. So this massive reversal here was really just there, I believe, as the bottom of a wave. Well, everything else that followed had to be followed through with. You know, like you can go so far on momentum, but then you have to follow through. So like it did do that. You know, it went to like this place yesterday where it looked like this could happen. And just look at where it ended up. I mean, it was in the right spot. I still, like, I was thinking about it yesterday. I feel like I jinxed myself or something. We were talking about like, well, you never know. It did this before and it sucked and blah, 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 blah. It's like, yeah, that's true. It did do this before and it didn't work out in our favor. And this is just a plunge beneath that creek right here. This is just distribution 101. Like as soon as it opened today, it opened beneath this creek. Like they opened it specifically to get the sellers involved. That's a sell signal right there. There was no question about it. That stuff, that ship has sailed, right? That already happened. Now we've got a gap down below. Somebody asked, could this possibly be a spring, like to go get the gap, you mean? I mean, maybe. But the problem is that, like, the confirmation for this is now really far off. I could say, yeah, sure, it could be a spring. But then if you look at the confirmation for it, it's just way up here. I mean, you got to recapture 485. You got to recapture 510. There is a gap, you know, at 515. There's a big one. Wouldn't be the first time we've made gaps and just kind of left them behind to the upside, but there's a big gap there. If you look at where the one lower is, it seemed like, again, it just really wasn't. I don't know what to tell y'all, except it just, I don't know. I'm angry now. Like I made myself angry. I should have made myself angry, but I did. I think made myself angry. because I was thinking about how I didn't heed my own warnings about that gap and about coming back for support, you know? So I think this could possibly come as low as like 440 and it would be okay. And it did do that in extended hours. So there was some kind of hint that that might happen today. I'd already talked about that number previously, and I don't feel like that was really unusual. That it hit that number early is whatever. Somebody brought it back down to earth here. But, you know, if at some point you get below these markers right here, it's kind of a red zone of, okay, you could be in big trouble, you know. This isn't what you want. You do not want to make this high and then immediately push to a new low beneath 430. So if you drop that, it's gonna go down pretty far probably. It really just depends, you know. I mean, I'd love to say that sellers aren't there, but they're there. There's plenty of them. In terms of like wave stuff, is that really the end of it? You know, are you giving up on that idea that it's all over? I'm not giving up on it. I think we talked about it yesterday. There's still a lot of possibility, and that's why I'm never gonna shut a door that I think hasn't fully closed. It hasn't fully closed. There is still a possible support here, and weird as it may seem, it may even be to our benefit if we get this gap fill and then break out. It may even be to our benefit that we did do this flush, because in some ways that could be an attempt to reverse the stock that failed and doesn't go below, you know, ultimately the widening that was happening. But I can't. That's neither here nor there yet. We're not there yet. The other thing is, like, what about all these other targets that we had? Are we just gonna abandon them now? Look, technical analysis does take you pretty far. It has some limitations. There are certain things about it that you hit on the nose and you're like, man, that was great. But anytime that we're in these motions of like waves, right, and we're trying to see if we're going to advance or not advance, there's always going to be an upside and a downside target. And I don't think that in this case, based on everything we know now, especially after what we just did this morning, I don't think in this case there's necessarily going to be a simple answer. Like, do I think it has to follow through? No, I don't. Nothing in the market has to follow through. It's that idea of like predetermined kind of price action. I don't know. A market might change its mind if something unexpected happens. If it's already expected, then it should be baked into the chart. Was an LSPY possibly baked into this chart? Yeah. Yeah, possibly. And we know now that anything above like 510 up to 518, kind of that little pocket between 510 and 520 is really a very significant drop zone. You know, that's the area that we just did all this work on, and it's not for nothing. You know, it's essentially like that's the area where you have the January run up. I mean, it's essentially like the build out for this pocket. And I think if we had gotten above that and held above that, it would have been absolutely, we were right, is what I'm trying to say. You're like, well, we weren't right. It didn't go. Well, it didn't hold, but I think we were right in our assertion. Like, we came to that conclusion on our own through different means, but it definitely was the big level. 100%. So what would a spring look like? I don't like that kind of stuff because it makes it sound like I'm throwing hopium at you. Like, this could happen, but it's a very specific kind of array of what ifs. So going back to just like kind of basic creek stuff, this is like a widening of some kind. It's also kind of a narrowing in two different ways. So there's a lot going on here we could talk about with these momentums and all this other stuff. What I'm going to do is I'm going to delete some of these marks. I'm just going to talk about the creeks as they stand. So this has created a really wide kind of breadth of air here that you can kind of interpret however you want. There can be a lot of action here that doesn't really have a lot of consequence immediately. So that's one part of this is like, okay, it may be that there's a lot of chop here that doesn't really mean a lot. That's true. This is kind of an empty zone now. We've already traded across the fives quite a bit. Liquidities, there's no reason for trading across 480s again, not significantly. If this is LPSs, then again, you shouldn't have broken low. So what this would be interpreted as a giant upthrust, and unfortunately, yeah, it didn't hold, so they dumped it. They kept it like right on the ledge for whatever reason. Maybe somebody knew. I don't know. Now you can look at this and say, well, what if there is still I don't know, some kind of an upward motion still, and it still goes up to sixes somehow, right? Like you were right, this green line was the right one. It's not yellow or whatever. Okay. Well, if that were the case, I would still use the same general methodology that I usually use. So I'd probably take the idea that this is like wrapping around a particular kind of larger S-curve, in which case the best I could do is offer like a 50-50 sell through it, which is still really low. Like it's going to come all the way back. If that's the case, it would come all the way back down to, I mean, it's hard to do this because it doesn't actually have any bar there, but it would come all the way back down to the gap. So this would give you like a 50-50 around the gap. And then what you'd have to see is you'd have to see it just, I mean, it sounds stupid to just say, oh, it just needs to reverse. But like that's kind of what you need to basically just base it on, is you would look at this and say, much like anything else we do, we could do the same method with this, like a drop with a potential shallow S-curve. It's not impossible. So let's just analyze it. So we think that on a 50-50, this probably slides. We ended the day up here, or we hit the highs of the day up here. And then we think maybe on a 50-50, this slides down to the gap. This does look right. So it does go all the way down to, you know, about 455. Max pain, Booksy, max pain. Someone's going to say it. Just rub your nose in it, dog. Rub your nose in it, dog. Think you're a bulldog? You pooped on the ground, bulldog. Rub your nose in it. High of 480, low, close of 478. So the 478 would be where you have, oh, that's not right. That's the wrong one. Close of 455, excuse me. Yeah, actually he's right. So we just said 455. So there you go. So it's about a 50-50 around that curve. That's pretty darn close to perfect. So it's basically targeting that gap with a flush. Maybe we could have identified that yesterday. I don't know. It's not exactly like you had to knew dilution was coming to do a simple measurement like that. So yeah, it's possible. So this would be like a shallow S-curve to 455. And then here's the problem with this is that when you look at the reactionary move, we could do the same thing we just did. So you'd be looking at here to here, because this is where the LPS is. And you would take that into consideration. I don't think it would break out today, by the way. I think it would probably chop down low. I'm not sure 100% about that, but it's already kind of filled a little bit of the gap here. Like the 460 is important, so I guess if it held 460, I probably wouldn't whine about it. But I'm going to assume that it's going to hit 455. Yeah, that's 50%. So they've already done the measurement, which is exactly what the measurement should be. So you guys you're welcome. You're such a prick, Booksy. We did this earlier on the stream, remember? We did these things and I said it should be about 50% of the total height. They shift it down. So 455 works. So that drop value right here off of the ledge down to what we see as the LPS value, which is right at, they chopped it right at 472. That equals the 50% of the whole move. I don't want to go through it a million times today, but I'll do it really quickly again in case you missed it. Really quickly, I promise. Okay, I promise. Just so you can see it illustrated, why this is important, why this is a real thing. It has to do with like shift value and like what they're trying to maybe accomplish on certain knockdowns and stuff like that. So taking into consideration the same thing, again, we drew this out earlier. This value that is a reactive value is built upon this right here, which is the LPS value, and it's the breakdown. It's kind of a tricky one in this case, kind of in the middle. But it's on the basis of like this drop becoming like a 50% retracement. I think I did this a little weird, but yeah, I'm not sure how I did this. It looks wrong now. It was like perfect earlier. I did it backwards, that's why. Shouldn't do it backwards. It's too confusing. Right, so the idea here is that from the drop to the bottom, this should give you a way of understanding like where they're going with like a 50% retracement on an S curve, for example, like here to here. And I don't know, man, like there may not have been an easy way to identify some of these early on, but they're certainly there. I don't know, is this how I did it earlier? I feel like I'm doing it differently for some reason. They're like, yep, you're doing it differently. I don't know, I'm doing it wrong. Whatever. The point being is that this value from here to here is usually the same as the reaction value. And then that becomes like or very similar to the reaction value, right? And again, I kind of use this in different ways because I said you could take this up and it would end up being like the same. But they're using like this particular chunk right here to like offset down the valuation of this so that you're getting to like a 50% reduction from the top. So this drop with the stiletto becomes its own like enigma. Like this represents like part one of the move. And then this will often represent like a middle here as well, which is kind of interesting. Sometimes it splits it in half or almost. It's not perfect, but it can be really close. So this will sometimes represent like a liquid middle, which it did over here a little bit. It ends up being like a support, but that's an LSPY / preliminary support. So you come back to that later. But then the rest of this is actually like that stiletto kind of thing we talked about, like a high heel. And that's the shift value that gets it to be 50% away from the top. So that when you react, you can do like a 50% retracement. It just so happens that that's partially almost always like the same as this. And some of you are going to say, well, it's just a channel, man. Sometimes it is, and sometimes it isn't. And we demonstrated on the bigger picture that it actually was quite accurate here as well, going almost up to all the way to 14 almost. And that was a big part of the reason why I thought that might happen. So I looked for that kind of stuff pretty regularly in the market. And we're kind of seeing that on the same concept right here. So this is basically perfect. So there should be a shift value that occurs now to drive the price back below. Looks like 468 might try to be acting as a resistance. It's the top of that gap. And then they could drive it back below here down to 455. And that's going to give you the same distance that you have presently to get back to a 50% retrace, which only gets you back to 502. So the issues that I'm going to address right now are that even if this were to go back up, this is where things get kind of dicey, right? Because even if this were to go back up, the measured move is there. You might be able to get out at 5, is what I'm trying to say. I can't promise that, but it's there. I think it's going to try to go down to 455, hit the gap, and then it's going to bounce to like 502 or something. That doesn't fill this upper gap, so that's interesting. That's one big point, but it does come back to this ledge that we created around 503 or whatnot, right before we dropped in. it's gonna be a bit dicey. We missed a check here, so I'm gonna go out on a limb and say that this probably, unless it just rockets today back up to the north, this probably is gonna go ahead and intersect. It's gonna be tight. I mean, I'll say this: if it goes down and ends at 455 today, Monday I would expect there to be some kind of a reaction back up, but we may not get to where we want to get to until about Tuesday. I can't really tell for sure. It's kind of like a pocket that I'm not really positive I want to call out. It looks like it's like right there. That's basically the end of Monday or going into Tuesday. This area. I don't know which is preferred. So if we hit 455 and fill the gap, maybe we'll get a reaction up, and then Monday we'll get some continuation or something. That's all that's kind of demanded here. And then I suppose after that, let me see if this is being used somewhere else. It kind of looks like a weird head and shoulder thing. Yeah, I think it's going to be this creek. It's a bizarre setup because then you don't fill the gap. This comes too low. Well, what if it just took off right now? And it only comes up to 511. Ooh, that's a retest of 511. I'm inclined to think that this is, if it doesn't finish the downside first, that this is kind of more bearish. If sellers take it back up, let it go back up, I should say. I won't take it back up necessarily. Some of them might. But if the operators take it back up to get back to this gap first, it could imply a bearish outcome because this could just generate a giant hook up to, and sort of do the same thing, like wick above and then come back below. Just fill the gap and get back below 510, and then we can continue. It's just this massive shakeout, right? 1, 2, 3, 4, and then you just keep going. And it's another change of direction, right? We've been doing these kind of quadruple flushes. It's very possible that that's what happens. If they go ahead and go down, the operators let the price drop to 455. It's frustrating, but it could actually be fine. Like Monday, we may actually get a reaction back to the upside going into Tuesday to get back to fives. I kind of feel like approaching this again on the opposite side gives us a better chance. You see the distance here? That's what I'm trying to say. Like approaching it a little bit later, if we get the gap fill, gives us a better chance of, we may get both. Like we may get this reaction up and then also get to the top. And then we're above this little local creek here, and we've got the gap fill and that retest. It's almost better for us. In a lot, I mean, it is better for us. I'm going to just say it. I said almost better last time, and then here we are, right? I'm going to say it this time. It would be better for us to go ahead and get the gap fill low. No qualms on my part about it. I'm not going to mince words anymore. If I think something's like that, I'm going to say it's like that. And then, I don't know. Slingshots are real in the market, but we probably have to go from 455 up to where we think it fills the gap. It's a steep trajectory down, so it could bounce very fast if it does come back up. There's a couple issues. There were some outstanding resistances here. So that was what was picked up on this morning, which is kind of concerning to me, because it was used right here to knock the price down. So this could build out for half a week even, technically, you know, like Wednesday or whatever. In some ways, again, the longer in some cases might be better, because if it builds out here and chops up back through here again and does like what it did here, you're in a better position to advance. So what would be preferable, in my opinion, would be to go ahead and get the gap fill. It can react today a little bit, but it doesn't need to, not much, you know. And then I think what would be good is to go ahead and let it take its course and like walk itself out going Monday, Tuesday, and like break out maybe Tuesday. This is where it hits that first target, the reactive target. And then, yeah, I think if it can do that and then hold that support, we could actually go get that gap fill, go Wednesday or something. And this is where things could get kind of interesting, because if we do get that gap fill first and we build out a proper cross here on the bottom, I do think it's possible it could act as a kind of spring. It's just not the most likely. But this is not impossible. And the reason why this is important where it is because much like a lot of the stuff we talk about, if you build a structure where returning essentially doesn't give you enough time to build a support, that's not good. Like, I don't really want to just like drive the price right back up. Some of you are like, I want to do that. I want to get out of this play or whatever. Or I want to see it just rocket to the moon. Fine. But like we said, leaving behind gaps and other stuff causes problems later. And it definitely does. And you don't want to see them like, I guess you don't want no stone left unturned is the saying, right? Like, it's better to do it later, because then if you come up later, you've got a lot more space here to sort of chop and build out potentially like another move. If this can manage to do that, the 50-50 here does take you up to 596. So like, it's a pretty good chance if we can manage to build that support that this isn't actually over. And this, I know it's weird because I'm like kind of flip-flopping between like positive and negative today. But remember yesterday we were talking about how like there was a lot of time. That hasn't changed. This technically doesn't get to the top of its wave. Like, this wasn't what I perceived as the top of the wave right here. What I originally thought was like maybe the 19th was the top of this wave, or at least when it hits this target. That's still a long time. It's like 13 days away. So like, the idea of it taking a little longer to get there isn't exactly controversial. It's just sort of, okay, it took longer to get there. I think in theory, approaching it this way might be fine. And maybe this is how we get to 6. In reality, we don't need to make all this move all at once. We can kind of do like parts of it. Then at that point, I don't really have a lot of hope beyond maybe GME earnings or something. You can get a big boost. That's Tuesday. So I guess that's possible. That's the measurement anyways around the arc. The rest of this would still apply. It would just be really compressed. It'd have to still make the jump up. Then the place that we found the most continuity with those uptrends on AMC was there was a huge amount of clustering of price targets around the 20th, 24th. So that's not very long after what we're saying is potentially the top of like a shorter term S curve. So if there even was a remote chance of getting to like 8s, it would have to be by about, frankly, it'd have to be pretty darn fast. So what you'd have to see is a move from here. I don't even know how in the world we would see this happen, to be honest. It could be very bizarre. Probably this arrives a little early. If anything, it usually arrives early, not late. So this could arrive like early and then do its SOS, I suppose. I wouldn't have any real reason to think that if it SOS properly that it couldn't just rocket. Usually these moves, when they actually do mark up, are really fast. So if it did manage to SOS properly, I think it could potentially just rocket right up to the 870s. You guys are like, that's not happening, Booksy. It's going to die. I don't care. I'm just saying, like, that's the only other place where I have that cluster. Like, I don't have any other information about how it gets there. It's just, that's the only other place I can see if it can get over 650. My concern at this point is more about this kind of stuff. We were talking about this earlier, and I still think this is very important. Not going to be able to get away from this for a while, I think. In that, where is that, And it's a pretty high break. It'd be like us coming back to test the middle of this range from a liquidity standpoint in terms of value. And it might change some things. For one, I think the idea of this 50-50 down and going maybe back to what I call the twos, which we now know is like really, it's like 140s essentially value-wise. Going back to the ones, this might even be $1, Technically, what is it, like 227? Wasn't that the number? 2263. $2263 is $1 value. I think we were right. We may not end up being right about 8s, but I think we were right about this building out much like 2020 built out. And it may come down and do a second bottom slightly below the first. I think it's going to be 226. And it'll probably fall on a lot of deaf ears who don't want to hear it. But that will represent an original valuation of $1 per share for AMC. And there's a lot of people who kept saying it's never going to go to $1 because the valuation doesn't make sense. But it went to $2 and they didn't have any problem with that, $2.50. And they kept saying, well, it doesn't make any sense, doesn't make any sense. I think I agree now that it doesn't really make a lot of sense for it to go to $1. And then I also think that probably the reason that I'm most angry at myself today and I'm really just disappointed because there's so many signs, and I had every inclination to figure it out. Like when it was down, when I did that big wave chart at the beginning of the year, I had that wave go down to 250s. Like it dropped down here through the 250s. Why would it do that? What significance could that possibly hold? And I just didn't really connect the dots. It holds significance because when the shift happens, it represents a valuation compared to the original chart of $1 per share. So I'm not saying it's actually $1, but I'm saying it's actually $1. I think that the theory that I had about it going from like 14 to 1 was kind of like in my brain, I was like, it's not going to go to 1 because I was thinking about how it doesn't make sense. And my chart really wasn't supporting anything below like the 250s. But doing the math today, now it's like, oh, that is 1. That it's just relating to the original map, the mapped values in the original combo chart, how the combo chart took into consideration the original values. Pretty wild stuff. I never really finished this chart. I kind of wanted to finish it. So this is a very exaggerated chart down here. Why do I need to finish it? I don't need to, but it's just like, I kind of messed it up anyways. Oh, that's why, because I made this line over here, like I was using that. it's just a doodle, but it helps me to visualize better what's going on. So what we're seeing is that we're getting stuck between the two values of the, so this is like that weird chop and then that pop that we got. We popped back up to hit that mark. So this is essentially what the chart would look like or should look like. I don't know what you want to say. Maybe woulda, shoulda, couldas aren't the best way to go about it, but you have a continuity here that we're not really able to see very well. So it's asking about like, well, could it go down and still return? Yeah, and that's what I'm saying. Like right here, you might have something like this, you know, where it does cross, it does come back low. It pushed resistance maybe a little bit, and then it's coming back down to check, and this is like a gigantic M shape, and then it's going to pop like crazy hard going into the end of December. It's not impossible. It's not. And it wouldn't be horribly out of the realm of possibility either that it does hit, you know, back up here in the 8s or something like that. What's a bit challenging, I suppose, is like we take those values backwards and we're kind of looking at like where it is and why it would be there. I don't have another reason for it right now, so I'm not going to try to find one. But like I think it's because of, I think, just at a glance, I think it's because of this. Like right here. What if, I don't want to do that to myself. You're like, what, Booksy? There might be one other element of continuity here that I didn't look at. I'm going to do it to myself anyways. Said I wasn't going to. I'm going to do it. So there is something I didn't look at earlier, which is when this popped up, we said it came back and retested that top. Previously on AMC, I had actually thought that this might go higher on the second push, right? We talked about this being very comparable to 2020. We've since adjusted this thing today and looked at the chart shift, and it puts this whole thing in a very different light because it's like, well, why would it go there? Why would it go here? Blah, 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 blah. You can't go back in time, but like folding it in half. If it checked this value here, it is very similar in the terms of like the parallels. It is very similar to this right there. And then the backup, it's like how do I say this? It's God, man, this is confusing. It's gonna break my brain. I have to do something to help myself visualize. I can't visualize it. So that's wrong. How do I do this? I know what it is I'm trying to do, but I don't think I can do it because it's just confusing. How do you do it, Booksy? Come on. Think, man. I guess we would have to know what that is here. So this is not something I did before. It may seem like I'm kind of repeating myself, but I'm not. So this shift down it is using existing downtrends. Like we've talked about this quite a bit on this channel. Using a lot of existing downtrends. They're very, very, very important. You can use them by themselves. You don't have to do this extra bit. However, when I did the chart shift, we can shift these up. This does change things because in a sense, because there's a piece that's kind of missing, which is like, so what, Booksy? You're talking about liquidity levels. What about testing creeks? Well, creeks are not the same as liquidity. They can be one and the same at times because they can go kind of more along the lines of a liquidity shelf or something, but like they're not the same. And we've been talking a lot about breaking out. I still think it's going to look similar to what we see in 2020. But you remember that we were talking about like why the whole reason why we thought, or at least I thought, that it would maybe come to 869 was because of the need for perhaps a double flush here, and then you don't need to go any higher. Now we're talking about the reasons why this came up as high as it did was to check this purple liquidity zone, which I'm going to drag over here. And that has nothing to do with like these parallels in that sense, in that way. Because those parallels without the shift are down here, right? Like we've already used them down here, so I'm using that as an argument. Like I think there's reasons why I would come back here, yada yada yada. But I didn't relate it to what I just talked about earlier today. Like, so this to me is important because you'd have to think about what this is doing is going back up and retesting this zone again that we traded in kind of in like a phantom zone. The phantom zone. We traded in this weird like phantom zone when we were with Ape. And now we're kind of using it right here as a resistance. But I'm curious because these parallels do continue through the rest of the chart. Why would I necessarily think that we're going to hit 869? Can I prove that we might hit that? This is definitely the next most important one right here. So this is where the drop off, the top of, there's a lot that happens here, right? You can see the hook right there. This is ultimately where it failed to continue and it drops. This goes back to January's top, to the little gap that happened on the run up to June, and then that pullback down. There's just a lot going on right here. This wasn't checked when we ran up as far as I can tell, because it did run up to the high here of $30, again, with the shift included. So there's two values that are possible, I think. One is this, which has to do with the top of where, this is when AMC ran up, it made a little platform, and then it ends up using that same trend all the way down. It's just another parallel, it's the same parallel. But it's interesting because it works itself into this reverse shift quite neatly. Like it hits those marks as it's passing through. And then when you look back, the hook is right where it should be too. It's like right there. So even this right here, though it matches horizontally, it also matches diagonally. Like it's where it should be because that diagonal is a parallel. So it keeps it all in check. Naturally, if that parallel had the same significance, held the same significance for us as it did there, we might expect it to also hold significance here. And we were just saying that we thought it might come back up to this blue zone. And what that means, it's not necessarily like brand, it's like way different. It's just like those would be up at this marker here. Which would be, my brain's not fried. think it's a retest of... Oh, it is. It's a retest of this level. The heck? Damn it, Bugsy. I'm going to say something I haven't said in a long time, okay? I don't want you guys to get mad at me. Don't get angry. I think it's possible. You're like, I'm about to get really pissed off, Hank. Mad at you, Booksy. Don't say it, man. There's a new outcome. That I didn't like before, but it's there. I can't ignore it now. There's an outcome that wasn't there before. And everything's kind of clicking into place all of a sudden. Yep. WTF. This is the problem right now. I wonder why. You dummy, man. Oh, man. Every time. You know how many times I've said it this year that this did not come up high enough? I couldn't even express to you. You guys know if you've been here. You remember how I kept saying that like this didn't come high enough to do anything meaningful? And like I was saying that as an argument to why we probably still go up again. Because I was like, we wouldn't Oh man. I'm so angry now. I'm like so mad. I'm gonna be sitting here all weekend just like fuming. Here's what I said, okay? I know my own mind about it, so I'll speak my mind about it. When this came up, I knew it went really high. We were just talking about how like we said, wow, it came too high, right? Which is it? Did it come too high or didn't come high enough? What I said was that I didn't think it came high enough at the time because I kept thinking like it didn't go hit the creek. So I was like, it didn't hit the creek and we're not even close to the creek. So like, why are we even arguing that this is like breaking out or something? Like it didn't hit the creek. It did hit the creek. It did hit it and it did test it. It did it right here. I don't think that I thought about this at all because I was thinking about this S-curve. I didn't have this S-curve on my chart, right? If you put it in the right place, it makes perfect sense. This reaction makes perfect sense. It's a full reaction back up to the top here. It checks the top at, you know, where this is. Look at where it is on the creek. I mean, come on. Really? This thing obviously pumped up and pushed the creek. And I'm sitting here in my brain thinking, why would it get stopped early? Yada, yada, yada. Look at where the creek is at now. Now, some of you guys, like this idea of creek, you're like, I don't get it. Is it like a trend? Is it this? Or is it... It's kind of a lot of things. But the main thing is like, where has the resistance actually been pushed at different times? And has it ever shifted? And if it does shift, then you have to kind of take into consideration where that shift has taken you. Like it could technically push higher, and then the creek could, again, be technically higher. Like if resistance is pushed, and it was here, pushed. So I'm like, in this, like my brain, I'm thinking to myself, it never came up high enough. It needs to come up. I'm making this argument for 1380 back in the day because I'm saying, oh, it'll come up and hit 1380 right here. Remember this? And I'm like, oh, it's going to hit the creek. It's got to go up. It'll make a phase B top, hit the creek, 1380. It makes perfect sense. It did to some degree because you're like, well, it needs to, right? No. Implicit in this reaction here, even though we don't see it, even though it doesn't necessarily make sense, there's two ways to view a shift, right? You can shift the chart just based on the reverse split backwards, or you can do the chart before the reverse split forward. So in theory, like this model right here, what we're doing right now is we're just kind of returning it back to where we think the valuation targets actually are. That's the best way I can describe this, because we're using valuation targets. When you use the valuation targets, this actually does a really good job of kind of cleaning up itself when you look at it this way. And there's another thing it does, which is it actually did push the creek. I'm going to say this very carefully because I think it could be misconstrued, but there's two kind of like different outcomes that I didn't like before. Now, both the stuff that we've already talked about, that stuff kind of makes sense still to some degree, like coming up to the 8s could still make sense. But you would now look at it in terms of like, what's it really wrapping around? And we've got all kinds of stuff that we can interpret here, but like based on like the shift value, you would say, well, it's really wrapping not around a curve, although that is there. It's implied, right? It's not a physical, like perfect thing that you can use, but it's there. It's a motion back up, right? It actually would be wrapping around what would be like seen as an up thrust through this creek and the supply zone. So it's like both. It's like a double whammy. Right where that creek is where that supply zone is. And I think that's a really big deal because there was also this kind of a thought that why in the world would you think it only goes that high? There were some folks that were like, that's not high enough. It doesn't come high enough. And I was saying, there's something about the chart. It just didn't convince me that it would need to go any higher. And this kind of answers that question in a much better way. Because when you look back at this zone right here and you see it for what it is, the distribution, if it happens, and I don't know if it's going to happen anymore because there's a second alternative here. So this changes things. It's like everything in the nature of this stock would relate now to not where we are down here, because that's a little confusing. It feels very like loose. We're like, oh no, it's really about going up above this trend down here and breaking out right there, right? It is in the same spot, but that's because the shift worked really well where they mapped it to the same parallels and it's mathematically on point. But if you look at the shift value before, and you could take this downward instead of taking this upward, take this downward and match that, you would say it's really this. It's going back and it's retesting the support and resistance that was made as we did this bigger S-curve through here. It's coming back in a 50% retrace. It basically retraced that S-curve about 50%, not fully. Well, it might be exactly 50%. It did a 50% retrace. We didn't think it did that because it didn't look like it did that visually, but it did that. It went all the way down in this S-curve, and then it retraced like 50%. And then the secondary action on this isn't as dependent as I thought perhaps on like those other numbers over here, so much as it is what's going on right here in relationship to the creek that it supposedly is around, even though it's not there. You guys are like, this is confusing as all get out, man. Yes, it is. Because this actually pushed the creek. that means that when that thing reacted, it did push up above. Here's the new scenario, okay? Scenario number 1 is exactly what's going on right now. The reason that we reject so hard off this line is twofold. One, we know that this is the supply zone from the bottom, the dilution value area that we've mapped out. This is roughly the average dilution value area. It's basically like they don't think their chart is worth, they don't think their stock's worth more than $3 to $4. We did all that earlier. We're done with that now. We mapped it down, but it's also mapped up, so you can see both. And I map this up, map this down. So it's like we're both there, so I can just visually see it. So that could be one reason, is you're just kind of diluting at a value that you think that you need to dilute at because it's like the floor. This leads us to conclude that this actually, by valuation terms, hit like $1.50 already, and it could potentially hit $1 if it hits 226, because that's the percentage shift that we're using. It's 226 something percent. That means if this goes down to $2.26, which, guys, I'm not saying it will exactly, but I'm saying that this was already kind of baked into the chart. Like when I had looked at this in the past, I had already had that number long before we did stuff today. Like there were low numbers like right beneath the bottom here that kept popping up in the analysis. The shift itself, confusing as it may be, that would indicate that you could indeed get to $1, but it's not going to look like $1. It's going to look like 226. Okay, that's the valuation shift on it. That essentially could be a target. So on the one hand, what we could be seeing right now, and I don't like this, is that we actually just hooked up into the creek. I don't think there's like a one size fits all way to describe this, but I feel like we've seen it before, so let me think about it for a minute, because I feel like we've seen this setup before where we've had an S-curve and we've pushed up against it and then kind of saddled on the side. I feel like it's happened at least once, so I'm going to think on it for a minute. I'm wanting to say maybe over here in August of 2022 might be an example of one. Like, obviously we've had reactions above S-curves, but I'm not sure about reactions like this would be the one that stands out the most. Just really obvious S-curve right here. You see this reaction right there? This is what we're talking about. What does that mean? It means that this could indeed have that same effect, right? I think it's a challenging one because it's not like a one size fits all for these situations. So like an S-curve can look different. For one person might call this an S-curve, another person says this is blah, 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 and the reactions are quite different. Really, they're not, in some ways, because this S-curve ultimately has a big pop at the end. It doesn't come back higher. But in theory, right, when you sell off after you create a distributive top and you create this S-curve, when you react, you're going back. In one part, yeah, it's just an auto reaction, but you're always going back to something. And in this case, you can see on like the daily, I'll go to the 4-hour. I'm trying to illustrate a point here because there's an alternative that I didn't consider, which is that it does just run. And there's another alternative that I didn't consider, which it doesn't actually go to 8. It just drops. And there's another that I didn't consider, which is that it actually goes above the S-curve and it stays above the S-curve, which is also possible, which means it doesn't ever make another low by a long shot, right? So in this particular situation, I'm going to just kind of use the first one I grabbed, and we'll just kind of look at this. I know, I'm a bit crazy. You can say that, it's okay. Gap, that's after the big move. This is a really low push. Probably not the best example, but this is one in which we're seeing something similar. There's a big auto reaction. Who cares exactly about the nitty gritty? It goes up over the top and it pushes the resistance, right? It happened right here. Just an example. This is very similar to what we're seeing presently. When it comes back down, in this case, it does come back down pretty low. It doesn't really have a lot of similarity beyond that. I'm gonna have to like get really nitty gritty on it to see like any kind of real similarity, but it does approach, this is obviously a much smaller time frame. It does approach it again and reject, and then if it holds and it holds a higher low, it goes above and it pops. And in this one, it goes all the way back up and then distributes later, which was hard for me to understand. Like, why? How could you go all the way up to like 1380 or something and then distribute later? That doesn't make any sense, and it didn't fit the model that I was trying to make, but this kind of does. And then there's another example of one, I think right here. There's probably dozens of examples. I might have to look better. This is another one I think we might want to use, except that this one I believe is too steep, so it's not going to work. I got to find an example of an autoreaction that pushes above an S-curve. It's not this one. I don't know if I have any. Might have to go to another stock. I need to see like a specific kind of move. Well, like this is one too, right here. This is an S-curve down. And when it pushes out, it does come back later, but it comes back like way later. And I would suggest, yeah, this pushed it. See, this just broke out though. I want one that like pushed resistance but retreated. I'm not gonna be able to find it. That's what I was saying. I have to like rack my head about it. The first example may be the only good one, but it's not my favorite. This is kind of ugly. It's similar. See, it pushed it and it retreats and then it jumps again and comes back on the other side. So maybe both of them kind of do the same thing. They kind of lay up over top of it. And there's that really interesting arc that I have that goes up through there. So what happens if it breaks? So it represents a test of the bottom of this, which is the last trajectory of this S-curve on the bottom, like the support trajectory of this S-curve. It's like a double check. So one scenario here that I didn't include was it just stops short. Unfortunately, it kind of looks like it's already in the right place, where it just rejects. It's not impossible. I mean, it's happened before. We did something like this over here. We just kind of like hit it once. We tried to return back to it again, and then we just kind of rejected away from it. It's sort of like a micro version of what you see here. In which case, unfortunately, and I don't know how if they could justify that kind of a move because this was a shift, but you basically just have to say it would come low. And that's just like an S-curve again. You look at the trajectory of this S-curve potential and then down low, and it's as straightforward as it can be. So it moves away from that. So that would be like us just not even trying, but like rejecting here and moving down, leaving behind the possibility for the second push, which is again kind of odd. But more than likely, this would be some kind of like massive, have to be some kind of like massive slide. I don't know. I guess you could do something very similar, like a little bit of a shallow S-curve kind of deal. This is a really different way to look at it because it's iterative, and it also it kind of implies that you might actually spend, much like we did here, you do it almost like the same thing again. You do another iteration up. But instead of, so maybe it doesn't even go down all the way. Yeah, I mean, it's pretty similar actually, because it would be like, you'd have a big auto reaction that checks the level again, and then you come back through and try it again. It's just like a cat ear. It's really similar. So that's not that different. That's pretty much the same exact setup, except it just doesn't go up. So that's pretty similar. It just rejects, it doesn't go above. There's no distribution above it. It just hits it, and this time it confirms as a resistance. Which I don't know. I didn't think there was like a mark right here at 557 that we were going to hit and reject off of. But now I do think it's there. And then the other one is that if this move up did travel all the way back up to, in our case, 869, and the liquidity there, based on where this is kind of different because you're now above, potentially you're above the creek. It doesn't mean you're going to run. That's not the guarantee here. It just means that like you're technically above the creek, which I could not say about it down here. Like I would not have said, oh, you're above the creek. I just wouldn't have said that. And so that implication is that, for example, let's say it did then chop down until May or June, like we were saying before, like, oh, we think it may not go down, or may go down until like May or June or something. If it does pop, it could take a long time. It could still take a long time, but there is a possibility that it doesn't actually go below the bottom again, like ever. Because if this took a while, and it could take a little while, if it took a little while, maybe going into like January to distribute, and it starts walking down more slow like, it's just really different. And then I think you have to make that check, but they may just bake it into it, like to take it down really slow. This is July. It doesn't add up though, timing wise. Does it? It does if you're using the more extended version, which we haven't really discussed very much. If we use the extended version and not this one, we've been using this one, which is August. If we use the extended version, it's November. It's a year away. So September, August through, maybe it's a 2-year cycle again. So it goes from September 2023 to September 2025. Son of a gun. The middle is September 13th. Did I just not make that connection before? I guess I didn't. September 6th. September 13th is where it hit bottom. Okay. September 13th is where it broke bad here. That's where I thought, some of you guys are like, why does that matter, Booksy? Who gives a crap? Because the last time they did this, they measured it out the same way. It was very mechanical. it's not like 100% perfect, but if you look at like where this breaks down, like May 30th roughly, and you go to like again, like May over here, it's pretty much like a 2-year cycle. And if you go from like the time it broke here in June, that's June 3rd or 4th or whatever, it's almost the same exact time frame to get to the top. And I think, though it may seem like a little bit of a stretch for some, what it tells me is like there was an approximate evenness to it. And I know I've done this like a dozen times on this silly chart. There was a very strong approximate evenness to it. And when you get to the other side, it's very, very, very evenly paced as well. It's like those are same values. What's strange is that at one point, I remember measuring the bottoms, and I think it was right here, yeah. And where that middle point in the bottom was, like, there's a lot of weird little measurements you can do, but like the place it broke out right here was like that little breakout zone. So like one thing you could do if you wanted to try to make it 1-to-1, just as proportionately as you could, you don't have to do this, but you could, is you could go from the bottom to like where that breakout is on the bottom or where this is, and you would assume that that's probably where it takes off. And one of two things, it's either on October 11th or thereabouts, or it's really recently right here where the break of the creek actually happened on November 22nd. So what's interesting about it, perhaps, if you're interested in it, is that that presents itself as a possibility for an actual like bottom structure. I don't really like that one as much. I still think like September 13th is the better one. But that implies that it would need to drop down to that $2 area by February, which is really fast. That's way faster than I thought. So I'm not sure. Not sure yet. I'll probably just sit on that one. This was maybe more reasonable, but and this is like way out there. This is really confusing. I think we're kind of right. I think it's this one though. This is the one that's been bugging me a lot, because that's like equal parts from that middle, and it is the cross section. So that implies like by April you'd be pretty low. That's the speed. It's close. And then you would use a slightly different measuring method, but similar in some ways. You basically go through a 2-year cycle into a top. So it would imply that September of 2023 to September of 2025, by that point you'd be up at the top, wherever you're going to be, wherever it happens to be on this schematic, that you'd be back up to the peak here. $31, which is low. I don't want to get too much into that. So the implication is that it's another 2-year cycle, and it ends in September of 2025, and then without being like too precise, I have to give it enough time to like move. It's tricky, man. That this probably doesn't run up really hard until June, which is what we were saying. Like, it would be pretty tight. it's a massive reaction if it happens. Huge move. In some ways, it's bigger. It's as big as the first. In other ways, it's kind of like not, but it's because it's moving like a percentage-wise, it's moving from like a lower value, and so it may look like a bigger percentage to some degree, like on a glance, but I don't think it is. I think it's probably a little bit smaller. It's still a huge move. Yeah, and then this gives you a pretty decent chance. I was right. I think it's offset. So like everything is just lower by the same value. Yeah, it's bizarre because like in the grand scheme of things, if I had looked at this before, this move, I just assumed, let's say I just assumed that it was going to be in the same spot. Like slightly lower than this bottom here. I don't think it gets you back to all-time highs. I think I originally said I thought it was going to get back to, it gets back to that value, which was like $21 or something, potentially. But that would be like if it didn't ever shift, but it did shift, like a lot. So the return value on that, if it's the exact same, doesn't ever get you that high. It gets you back to $76, $80, which is what we've been talking about all along. That's nothing new. I'm not so sure, though, because in this case, man, that's crazy. Where this is, it's all over the creek. It's the right spot. I don't know. May have to look at a P&F or something when it gets closer and just see if that's even reasonable. All right, so like technically, if I thought the chart looked like this, for example, this is what I was trying to get at before. I'm sorry it took me so long to get back to this. I just kind of went on a little tangent. I do that. If this went to like 8 something, right, and then came back down, if this chart hadn't shifted, I probably wouldn't necessarily think it's going to break back below. Like it could be a flush that goes back below again and double dips. But it doesn't have to, because if this were to come back down, and this is kind of a scenario I wasn't really thinking about. If this comes back down pretty much immediately and it hits like 11, which is the floor back here, then I think this is a situation where you could just see it kind of bleed back out. I wouldn't put it into much question. Like normally, because I've been watching AMC way too long, I'd probably be a little bit like skeptical of something like this happening. I still am. But yeah, I think that it's reasonable to say that you might think that this happens, because if it were to go above that creek in real time, we had seen it like up here and it never went low, yada, yada, yada. We'd be looking at that like this, and I don't think I would necessarily consider that it has to go below the creek. I would say that if it does at 50/50s and goes down to like the lows again, which is what I've been implying, like I think it could happen. But if it doesn't, and it just like broke out here and went to the 8s again in our time frame, and then came back down to, I guess, what would be considered like 485, it could actually just stop there and essentially just like take off. Because in theory, yeah, I mean, in theory, like, yeah, I could stop there. It could chop all the way down, slow like. But in theory, like, that's above the creek. And that might be why they're kind of reluctant to do it. You know, at the end of the day, you kind of have to take it with a grain of salt, because, and I hate that, because it's like, well, then this is all pointless. It's not pointless, because you're getting a perspective that you didn't get before. You're also able to see that there is a possibility now, a greater possibility, that if it held a certain level, that it could potentially just go. If I looked at this again and I didn't have I know there's a lot of gobbledygook on this chart, whatever. I get it. Right at this point, it is kind of messy again. But if I took this and just kind of put it in the most simplistic of contexts, I think it would help. So I'm gonna just like drop it back in here again and then put it back in the same spot. I'm just gonna kind of take this again one step at a time. I'm just gonna show you what I mean because I think it'd be easier to see it visually if I take out the other stuff real quick. Where's that? That's up here. And then I want to keep, I don't know, we'll keep 1096, I guess. It doesn't really matter too much. I just need a line. I'll just remake it. It doesn't matter. Right. Okay. All right, we're gonna leave that for now. Because I just didn't mess with it. I'll just make it lighter. Right. So if, without the shift, roughly, this is what your chart kind of looks like. When has Booksy been right? I can't recall once. Yeah, it's funny. Why are you here, man? You're obviously subscribed to me if you're talking. You had to be subscribed for at least 5 days. Oh boy. I'm not going to give you my rap sheet. I don't give a crap. I don't know who you are. You obviously don't follow me, so. I'm just going to keep going. The need to defend yourself is a trap. You don't have to defend yourself. LOL. Good comeback. If you're going to troll, at least be a good troll. It's pretty easy to disprove lies if you want to. Don't entertain it. Don't feed it. There you go. He's booted. I wonder if Bourbon ever got his calls. I don't know. Yeah, I know, he's gone. This is weird to me. Like, you have to subscribe in order to comment, so he must have been subscribed for at least like 5 days, which is bizarre. You just waited? What a weird thing to do. I do think this does give some light to what we're seeing. It's not like the best. I'm kind of curious why that looks the way it looks. I'm fine. I'm not upset. I'm really not. I'm not paying any attention to it anymore. Yeah, it's all good. I don't have any kind of feelings about it. I don't know. Yeah, all right. So, yeah, so this is a bit of a tight spot we're in. I didn't put this little guy in the bracket. I probably should have because it makes it confusing when it's out and visible. Just gonna do this again. What? Oh, whatever. Just copy it again. It's interesting. So what I would do, I think I put the wrong thing in there. Well, I'm gonna leave it. That's not affecting anything. What was that value? 1097. It doesn't really help us unless we have like the equivalent value. So, because ultimately, like we need to know where it is. I think it was 455, but I'm not sure I actually did find that value here. Thought I did. Was it the January run-up value? Dang it, Booksy. Was it 485? You might be right. I think it was. I just made these all the same color. This makes more sense, yeah. That's why I got confused. It is 485. Thank you. Which explained a lot because I was like, oh yeah, it makes sense because that's like the value we've been chopping around. So 485. Really clean this up. And let's see here. Yeah. So I added this back on here because I wanted to see it. I know there's a sign of weakness right there, which is strange because I know that matches this, but I think that maybe this isn't the most important value, but I think this particular trend kind of cuts through a lot and is interesting. Maybe I'll just take that out. I kind of want to like black this out, but I can't do it. Yeah. Right. So yeah, I play games. Maybe too much at times. I don't know, all kinds of stuff, I guess. I'm not really a genre specific kind of person, but I'll try pretty much any game if it's got decent ratings and isn't like garbage. I'm a dad, so like right now a lot of the games I play are with my kid, which is fine. I do play some like quote unquote grown up games, but whatever. Well, my kid's pretty little, so he's not ready for like violence, blood, gore stuff. You know what I mean? So we don't keep a lot of that stuff around the house. And I'm okay with that. I'm not like, it doesn't hurt my feelings. Lately I've been playing No Man's Sky a lot. It's really good. They added a lot of stuff to that game after it released. It's an old game, released in 2016. But it's like way different than when it first released. It's like really pretty fun. There's a little bit of grinding in the beginning, but then you get like better at it and it's not that hard. You can kind of like set up your base to do everything for you. It feels a little bit like an MMORPG without the MMO stuff. You can play online, but I mean, I like space sci-fi. I'm getting to a point where I'm starting to feel like maybe I won't play it forever, you know, because it's got limitations, but it's got obviously limitations like everything does. But I put a lot of time into it. It's a lot of fun. Yeah, I like sci-fi a lot, so I like playing sci-fi games. And then I've got like a strew of other games, but I used to play a lot of stuff on my PC. I don't really have a gaming PC anymore. And then I'm a Nintendo kiddo, so I would play a lot of Nintendo growing up. Zelda, Mario, stuff like that. So my son really got into Minecraft lately, so we played a lot of Minecraft. All right. So what I'm doing right now is I'm looking at you know what, guys? We need to get that. It's Minecraft in space, kind of, yeah. A long time ago, I played RuneScape, yeah. Yep. Mario Kart, yeah. Play Mario Kart. I'm pretty good at it. My 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 son doesn't like playing against me anymore, so he's like, no, I don't want to play. I'm like, okay. I try to like let my kid win a lot of stuff, not because I think he needs to like be a winner or something all the time, but just because it's hard, you know, like you play a game with your kid and they can't do it, and you're like, it's okay, I don't really care. So just pretend I'll just turn around in the middle of a Mario Kart race and just drive the other way and just start laying into people, so I can get the good items in the back and then destroy everybody up to him he's in first, just for fun. But when he loses, he's like not a good loser, so he's a poor sport about it when he loses. So he really gets him riled up sometimes. Working on it. Okay, what I wanted to do was see if I could get that value of the spring and the other thing, but it's not really a huge deal anyways. So I think it would be good for us to know, because like technically, yeah, this is essentially like representative of a possible support, but it's not that simple. Like there's a range here from where we are to where that spring is. And then what's even weirder is there's actually a line. So I got rid of it because I was trying to make the chart cleaner, but then I'm sitting here like, maybe I shouldn't have done that. Because technically, like, you need that. You definitely would benefit from that line on the chart. It's just hard to do. I've been changing it back and forth to see what I can do on this, and see, that doesn't look right. This is like slightly off. That's what I thought. All right. I need to fix this, because if it's wrong, it's not helping anybody. It's just pointless.
It's time for your afternoon stretch break.
So this is slightly off. It's probably just because when you scale like bars things, they always look like junky. That's better. It's a little closer. That's pretty close. All right, that helps to visualize this much better. So this looks like a check. This to me looks like a test of the creek that is currently rejecting. Before you get angry and say it's going to keep dropping, we'd have to like kind of consider the possibilities that we have already considered, but we do it on like a different scale, because here you have a few markers that just don't exist very easily down here, like especially this one. This is a big deal marker to me. There's two, right? Well, I guess maybe three. There's like the spring and then the supports. And you can see like where we're at, that 1061 is part of those supports, and up to 1097. But we don't have a really great way of seeing that visually where we are, except just to use the ones that exist. And I think we were kind of estimating it earlier that was the case. I cleaned the chart up so that I could see it better and visually like chart it better. Yeah, it was, we were probably right about that gap needing to fill, and it did fill. So we lost a lot of people today, but in the last little bit, I think just hearing me tired and getting worn out. I don't know, we didn't really fill it, but we got below it a little bit. I mean, on the chart, it looks like it's filled because of the wick, but really the value is way down here at 455. But I would suggest to you that this middle bracket area from about 469 to 485 is the equivalent of that historical bottom. So again, I'm just cleaning it up, kind of redoing it so that it's not as messy. I'm just going to pick out like the most important thing that I want to pick out right now. This is the most challenging one to get right, because I kind of feel like it's like I'm not going to be able to get it unless I don't have wicks on these bar patterns. I don't know why I'm doing that. I should have swapped it over. Christmassy colors. Right. So this changes a lot for me because I'm looking at it like, and again, like from the perspective of like where we were before, I wish you could just like mute it out before a certain time. Like, hey, I don't want to see that before this time period. I don't really need to see it over here. It's like messy. Can you do that? Is that possible? Ranges. Probably not. Maybe you can do a part of the formula, but I can't do that. So, anywho, right. It does help me though because I think if this were a support even down low, even though I don't think it is, and it wouldn't act as a great one, technically like that could be a support if it M crossed over and landed on it, as well as where we are now currently. If this could manage to get its way back up over the top, as precise as we can make it. I know somebody asked about charge point. I'll try to get to it. I'm not completely out of it. I'm just trying to finish this. Yeah, it's 10:35. That's very interesting. Look how close that is to where the gap at 455 would be. That's kind of amazing. All right. I don't love the complexity of it, but I kind of love this new chart. I don't like how like it's this complicated scheme of back and forth, but like I'm genuinely surprised that I just didn't do it before. But it's starting to make a lot more sense of everything that we've seen, so that's good. Yeah, this is a problem. So but I'm talking about institutional traders. When the operator jumped up over this, they did it from a high or from a low point, which means that in order to fill the gap, you have to go backwards to 455, which goes below 457. You're like, why does that matter? It's just a little bit. Like I said, I don't think the creek is there. I think the creek's much lower. It's at like 440 or something. So I don't really care if it goes below it. But in the grand scheme of things, that is technically where the bottom was back here in January 5th. So like valuation wise, it's revalued at the bottom right there. So it would be like a couple pennies below. Again, you're probably like, why does that matter? That doesn't matter, Booksy. I just think it does, you know? So yeah, I mean, in theory, if this had stopped just above it, even gapping up from like just slightly higher, I think we would have been in a better situation. We would have. Not the end of the world. Hey, are you trapped? Yeah, you're not trapped. You're fine. He's like, I'm fine. What are you talking about? Trapped. Cat meowing at me. It's not time for them to eat, so if you're wondering. Yeah, so, you know, in theory, again, we talk about these kinds of things a little bit here and there. This being a support as it is, it would have been nice, I guess, to hold it here, like to not have to drop below it. And even just dipping slightly below it may seem like nothing, but I feel really strongly that lines are lines because they're supposed to be lines. You know what I mean? Like their supports are exact at times. They can be a little bit hazy in certain areas, like when it's pushing repeatedly up above a creek. Like we have a lot of wicks here. They don't really mean a whole lot to a lot of people because it's like, well, they're just there. They're used, but they're not like perfect. And I'm like, yeah, I agree. And that's that's fine. That's not a problem. But when you talk about like a horizontal support, if it's got an obvious like super important hit to it, and this one does, then that's an issue. So yeah. So when we look at this, we're going to be doing yeah, it's just not great. So we did bounce off that line, which is good. And it's just that in order to fill the gap, we have to go below it, which is not good. And before you say, well, why isn't it like this one from back here? Why can't we go all the way back down to here? You know, well, we can, but the thing is like where we advanced in sequence, this is where it pushed up above this value, and then it finds a higher high and then pushes up again. And now it's dropped that value. So it's like, you really want that support. That's like the next support in line. The next one we have is like way down here. So, and that doesn't exist in the previous time frame at all. So it's not really relevant. It would only be relevant to us presently because of that 415 hit. Remember we hit 415. That's the only place I would probably look at it and say, yeah, maybe double bottom or something on 415. I don't know. Like I said, I mean, the creek is the creek. You can kind of fudge it, do whatever you want to it. It's generally in this area right here. So even coming all the way down to there, it's like 430s. It's too low. Some people are going to be like, it's not too low, Booksy. But I genuinely think that it's too low because if this is a widening and that's all it looks like right now, and it's not actually like parabolic and doesn't continue, then you're at real serious risk coming down that low, you know. If 415 or 440 or whatever it is, and that's where I was before, is like 440 was kind of what I was saying, and that's where that is. But if we hit 440, I'm not like it's broken, because technically, again, that creek is still holding. It's not a question of that. It's more about the nature of going up above and then diving back below, and then how do you interact with the gap up here, and in what order? That's always the more important thing. So anywho, I digress. Going back through this, it does seem to me that this is fairly simple. In using the shift value instead of interesting. Yeah, and using that shift value, man, look at that. We're going backwards and like checking stuff now on this trend, which is weird. It's like imaginary values. This is so strange. It's like surreal almost. Living in the real world here. I don't know. I don't know if this is going to be able to advance. It's a double-edged sword. think we need to do like a 50% here as well. I think it's there. I don't think it's where I had it before. This really does change a lot of the dynamic of the chart, doing it like this. I wish I could get rid of that before there. I can't do it. Maybe you can put in time frames in this little thing. I don't know how to do it though. I want to see AMC, but I don't want to see this shift value the whole way. It's not really necessary. I could just bars pattern it. I just don't want to do that. I want the wicks. Yeah. I'm going to do something a little bit obvious. Sometimes the simple is probably right. If you want to come back down, but you don't want to break below again, you have to wait. It takes time. If you don't care about breaking below, it doesn't matter. But we were making this point that there's another arc here that's really strong that we were using, and I think it's still relevant. I don't think it's irrelevant. I just want to consider it. Where this triangulates the gap fill. So this was like 292 or something like that. I don't even know. Yeah. So weird. So this implication is that you wouldn't actually reach this until maybe March, which is kind of what we had anyways, March, April. So that's kind of, again, redundant. But if you were to come down and triangulate to the gap there, and then try to push below the floor again. Shoot, what did I just do? Screwed it up. 658. It's a weird number now. I mean, I may have been a little off. It doesn't really matter. I'll just say the 25th of March. Let me see something. I'm going to turn my other chart back on. It's going to get really messy really quick. Hang on. Let's see where that is. So this is on, I'm going to keep this mark. I'm going to keep this mark because I need them back on my chart again. Right. Meh. I think you could give just as much importance to like 650s because there's that extension goes above this a certain amount, and I think it's probably about the same amount as going to like 650s. Because like I'm not saying it would be exactly the same, but if you just strike a parallel, sometimes it's kind of the simplest. And I want to say that's basically the same value right here. Like the implication being like if you squeeze up, it could very likely only go to 650, which we'd seen that before, which it could come up quite a few times. That this could come up only to 650 is not unusual. It's kind of reinforced by this idea of like the extension here. If it breaks out soon, by like next week, it would be potentially like the same extension. It doesn't have to be, it just could be. There's not necessarily a better way to do it at this point. You know, you can raise the creek a bit just to see what happens. And you can see it's the same value, like it's basically the same. So I think we were right overall with the price targets we got. I don't think we should change them. I've been trying to see if there's anything new. I've been kind of humming and hawing for a few minutes now, and I'm really just looking to see if there's anything new here that I didn't see before, and I don't see anything brand new. Extended hours may change some stuff if, oh, it's not going to let me snap to that, is it? It's not a real chart. There we go. It's like imaginary. There we go. Yeah, so, yep. So extended hours isn't going to change much. Yeah, that intersects right at, so if it, even if it wanted to go, it's really bizarre how this worked out because I had other reasons for saying like 650. It wasn't really like complicated. It's kind of like certain swings and different areas like these are really insignificant for the stock. But now I'm looking at this and I'm like, it's also equal parts above. It like intersects right there on the 26th. When you look at the intersection from the top, that's very clean. And the same thing applies to that 860 level because that's like the duplication of that, you know? It's very odd. I think that wouldn't have mattered either way. We proportionally knew where that was. I'm just saying, like, it's just strange how, like, that ended up being exactly right. And then how there's already, like, a line here, which I didn't know existed. I mean, nobody really did unless you've been doing this. And I guess there's probably people out there that have because it's clearly, like, somebody knows. maybe I'm just feeling like I'm way behind. But no, I mean, if you draw from here to the current top, it's probably going to show some kind of a resistance or something, but ultimately, like, it wouldn't have shown this. This is different. So if I took the same thing and applied it to where we are now, it doesn't mean a whole lot. It doesn't look like much. But it's there. Invisible markings, I suppose. So again, it's kind of a bizarre setup because it does then seem like 650 would present a formidable resistance for a number of reasons, It's pretty interesting. It's not that it doesn't work. It doesn't. Not the 869 or whatever doesn't work. It's just that it's not. It's not easy. It's not easy to get to. This wall is not small. I think I had it in my brain like it's kind of a big wall, but it's not like a huge deal. But this is not a small deal. This is a really big deal. So, the area around 650 is like ugly. It will be challenging if it manages to swing it. And will not be a pushover level. It very, very, very likely could even just stop there and not go any further if it were to even move up, So. I'm gonna give it way more importance than I did before. I didn't think it was like not important. It's just I knew we found it, but it was more of like why? Like why does it? I don't know. It doesn't really seem super important, but I think it is very important. Yeah, this will be a tough nut to crack if we do get the secondary move here, a back up. I'm calling it secondary because this is already kind of tried to advance. Now it's backing up. We'll see. So if we hold supports above, 450s this week, that'll be semi-positive. And then we'll see. I was hoping we would get 455 first, but we didn't get there. You can kind of see it implied in the chart that this clearly could flush more down to 440s. If it holds here, there's nothing wrong with that. And actually, these are historically very important. This is like the COVID level pops. This is the bottom right here is the spring from, valuation wise, it is. It's the spring from 2021. So I wouldn't call it anything else. So that's the January run-up mark. It doesn't mean that you're going to take off. That's the thing that maybe would get you worried. But it could act as a very strong support. So, it is right where we need to go for our gap. So if we can hold that, maybe it presents like a springboard for a potential move here. I've left behind a lot of things that just really weren't, I wouldn't say they weren't working completely, they just weren't the best. One of them was when we talked about March, it looked so much like March, but we just never really advanced. It's like the volume didn't take off, we chopped for a while. Some of those things kind of apply. We did get a push up here and like a pullback into what I would call like a, I would call it a bullish kind of move up because it did make that double bottom. And that's the area that I maybe would look at if I were to go back and revisit it. It'd probably be right here. Like this is the push up, this is the pullback. Even though it's weird because it comes up again. That's actually like a bottom. And then I would look at this as the bigger push out, you know, for an M cross. And then potentially like this could be a buy up again. We'll see. Big what if, because I always chart upside, I'm always charting downside. That's the way I would see it, is like this is a 50-50 move back through this level. So I left this behind because it wasn't really working out. It wasn't panning out that way necessarily. But this basically gets you to an SOS. This is the halfway point from the drop. This is what we did when we looked at March. So I haven't forgotten. I just haven't messed with it lately. And unfortunately, like, you know, arguably you could say, well, I don't think it's that. I think it's here. It's 485, which this only leads you to 588, so on and so forth. I would suggest to you guys that it's right here at 495. It actually did set up higher because it's above these like little cat ear indentations here, all wicking up and down across 4. Like when it built above here, it held support at 495. When I went below, it held below 495. And then 495 across from us is the last drop here before it goes below 485. So I still think that's probable. Like it's still likely that if this end up being a breakout, this plays a big part in mathematically how we read those moves going forward. So I do think it's very likely that if it got a big push, you could end up wrapping around, and it probably would wrap around it. I don't know if it would necessarily hit that as a top. It could, I guess. It doesn't really matter. It could be like the top. I believe in the examples that I used before, this represented like the middle value of a potential move later. So if it kept going, you would use this as like the middle value of the potential move up here, which would be like in the 9s or something, right? Like that would be the way I would interpret that. But then you use the pullback value here to actually give you, which isn't very different, but it makes sense because it's a swing, right? Yeah, you'd use that value to give you so it's a zone between here and here. And both of those give you a pretty decent estimation of where you might be. Neither of them, as you can tell, neither of them really gets you far enough. They're not quite there yet. They look more like the bottom from this tiny little drop back in December. And I don't know how that relates to anything else on the chart. It might not. It might not matter. Oh. Okay. Well, it's close to this gap value here and this gap value here. It does matter. Gaps are weird. They don't present themselves always as a support or resistance, but they are important. You take off from those markers, you should mark them off. This is bizarre. So this like closes at 1350. That's very close to where it is. That's a gap, weird gap value, huh? I don't know. I'm not sure I understand why that would be the case. Maybe it's like anchoring on there. These are like structures that anchored around those values. I'm not really sure. I don't know how to use them. But I suppose that oh, look at that. Well, we already knew that though. Yeah, it just kind of reinforces what we said earlier. It's just setting up right here between these two little regions. The oddity of it, I guess, is it's actually lower. I kind of had it higher, I think, on the other chart. It's actually kind of low. Like trading across this bottom. So yeah, I think if you broke that, the gaps here would kind of tell us that that's a likely place of takeoff. There's no time where it leaves here and doesn't go above, and doesn't not go above this marker. Usually it goes up to about the 50%. So every time it left from 1340, you can see every time it jumped up over this level, there's a lot of gaps here, like a lot. Like 1, 2, 3, 4, 5 right there. This whole little region right here is just riddled with them. But almost every time it goes up above it, we at least come to this level here. Yep, each time. That's good to know because there's an implied move in that. It could provide, oh, you guys are like, what? It's kind of like the, near that 4, that's like really close to that 8 something level. It's not on it, it's close to it. I don't know how you could read this now. It looks confusing as all get out, but yeah, it's close. It is in that pocket. And this is good for us because we can make decent if-then statements. So if it manages to break above that top, then it's very likely to go into this pocket very quickly. Because, again, we're not trading the liquidity as we see it here on the chart. We're really trading it against what we've seen back here. And this is a very, very, very common... there's no example where it doesn't go up to here. So that's good. That doesn't mean it has to, just another thing. I mean, it did back here anyways. It went right up through it and then passed through back here pretty quick. I established it as a support for whatever reason on the way down. So that means that let's take that to the current chart. I know it's confusing because I just made this chart and I said I was going to try to keep it simpler. But I need to be able to do comparisons, and I can't really see sometimes when I have like other things going on. So I just wanted to be able to do the comparison. Yeah. So it will land in this pocket if it breaks that level. That's my opinion, but I think it's true. Between 829 and 910. 869 was the level I picked. Honestly, it kind of looks like it's smack dab in the middle. Wonderful little average there. Or close to it. Just another little notch, I guess, reinforcing that idea that that could be where it goes if it breaks. But I wouldn't count on it going much further, you know, like in the grand scheme of things, we'd have to look at this as if it's coming up almost like this guy was. We don't know for sure it would advance. And even if it did pull back, there's two major options, breaking, not breaking down here. Then we'd have to kind of consider whether it keeps going because technically it's over that creek. So it's very possible it could just break out and then hold, which is really different. I don't think I've ever really thought it was likely. Well, I still don't know if it's likely, but at least it's there. So yeah. So anywho, very, very important levels, right? So like that's probably why they built it where they did. We have very clear evidence that's the top right here. And it's also probably why when we did have that stuff happen, with Roaring Kitty back in June, we ended up getting chopped at right there, to not advance. They didn't want it to go all the way back up to 9s or 8s at that time. Weirdly, when I did the comparison, I remember thinking it was really annoying because GME did like a 618 retracement back up, and we did not. And if we had done that 618 retracement back up, we would have been at the 9s. Like, it was very clear that's where we should have been. We didn't do it. And what I mean is, like, on the rebound here, back to this way, like, that's where it would have been. So it was mathematically there, it just didn't go. And then they had, for what we now see as clear reason, they had clear reason to kind of keep it below because they thought they could trade. They wanted to trade down here, basically, this liquidity. Not let it go up past. And so that's what we're doing. We're trading right there along this bottom. It's interesting. So I think there's a implied move here that's fairly obvious. And I know I've made this chart like messy, but the implied move is that if you get above this value, you're going to just kind of move on up to this pocket. Again, probably 869. I'm not letting it go unless it lets itself go, guys. Like, if it's not relevant, then it's not relevant. But it keeps coming back up. So until it doesn't come back up again, I'm just going to keep looking at it like, man, I think it's possible because it's there. It's not necessarily like the easiest thing to explain. It should be right here, sorry. Because I think it's a weird number, and it also doesn't really make sense to a lot of people because they don't see it as necessary. Like, just on the whole, it just feels like a weird number. It's just like, well, I don't get that number. It's kind of out of nowhere. But I don't think it's irrelevant. I think it's important. I think it checks the creeks in our local time in the right place, right? It's pushing up against this wall here. And then I think in the previous time zone, it's actually jumping the creek. In the kind of the shifted time, it's jumping the creek. Maybe I should have done is in different colors for each one, like color code them, but I didn't do that. So in our current time frame, it's like jumping the creek. And yeah, and then that area is compressed at 6 to 650. That's the big one. That's the big jump. So currently we haven't broken the creek yet. So like presently we're kind of rejecting it, to be honest. And if we sort of remove, which I might have to do anyways, but if we kind of remove that's interesting, where that ended up when they split it. But anyway, this should be going through that top. It's going to be really hard to do. I don't think I'm able to do it. That's so weird. Oh. Well, it's roughly there. Right. So removing like the extra stuff here does change the chart quite a bit, but it could help. We may want to do that at some point. I think it's just tough to do it because I can't easily compare when they're not on the screen. I can't see what's going on. So I'd have to go back and forth. Don't like that. Yeah, I don't know. Yeah, and then I don't have that comparison anyways, so. Bah. It's so weird, like drawing it like that, because it's like, where is that even coming from? So I'm not sure. It's just where it is. Um, it's so strange to look at that. It just seems to have like no relevance to anything. It's like some all floating in the middle of nowhere. I mean, I don't like have to get rid of everything. I'm just doing it because I'm trying to clean it up, but I'm not sure about that one yet. Might end up getting rid of it. This was one I wanted to try to duplicate, but keep on ours, but I just not sure where it is. Hang on. It's close to that hit right there on that double bottom. It looks like it actually got closer to the first one. Oh, he's doing it again. Just restarting the whole chart. I'm not doing it on purpose. I gotta get rid of some stuff here. Just clean it up. I mean, this is kind of irrelevant. What a weird day, huh? Weird day. I had no intention of doing this today like this. I mean, I figured if things were bad, we would have to be here and just do stuff. You know? But I had no intention of like coming on here and like redoing a chart and like doing chart shift values and all kinds of weird stuff. What? It's strange because I think that the valuation of this is just like, I think what's really bizarre to me is that somehow they managed to I say they, but I mean, obviously like somebody had to know because there was it's not way out there. Like it could have been anywhere. And it's not. It's actually really tight. Like it's tightly wound to like some of these original trends, which is fascinating to me. So maybe we're not giving Adam Aaron's team credit enough. Maybe they, to some degree, know what they're doing in terms of like where those valuations should be. And then I think in big part it is your operators. Probably most of it's the operator, to be honest. So, yep, that's the gist of it. It's not simple, but at least it's there. Yeah, I think we've done enough. So it's a bit bizarre for sure. But there is a reason probably why we did not get, at least I have a reason now. I don't feel like I had a good reason before. Like, why the heck would you do that? But I get it now. There's a pretty good reason, though I don't necessarily like it. At least it's a reason. So if this manages to find support on 595, it's probably gonna and a break above 650, it probably will pretty immediately go up to this pocket. That's the motion. That's the motion that they're not wanting to do for whatever reason right now, and that they haven't wanted to do, and they've been using this downward to push away from it. Press down as much as they can. It is popping out like it's going, like as if it's trying to break out. The reversal of what we got today, all the price action we got today, yeah, I mean, in large part could have been caused by the dilution. That's no questions, there. But it is bizarre how this set up with that gap below as if it was going to go back down anyways, which I feel is relevant. And I had said as much yesterday before the day started, and then we got these big moves, and you're just like, well, I don't know. Maybe you get excited, maybe you don't, but it was very obvious that there was something being left behind. And now we're getting these flushes, and you're just kind of wondering, is it over? I don't know, man. Dilution is weird, and most of the time, yeah, you thinking to yourself, that's bad. It can't be good, and I generally agree. Like it seems kind of bad. We do have gaps going up till about 5 or so, 503, something like that. It's another stopping point for the chart. So if there is a rebound, it's actually way up here at 5. Sorry if I misspoke. I meant like 520. So there is a stopping point up here that could be thought of as like a UTAD. So like even for a bear, if we don't fill this gap, and this breaks out, it could technically just kind of again go up to like here and then redistribute again. I would say that we're going to have to really be careful because if and when it does this, it's going to be dangerous. It's going to look like it's going to go again and it's going to die again. And so on and so forth. And it may very well be that what we design here is some kind of a flag, and then, it's kind of just goes on and on and on. We just keep going. Yeah, I mean, this is a steep flag if it's a flag, so it's not good. I don't know. I didn't make it that steep when I first drew it, but there it is. Yeah, so even in the event of another pop to the upside, perhaps to get that gap fill, you still have to be really mindful of where that key level is, and it's at 510. So it's one of those key levels from the comparison we did today. If it hooked beneath there, you'd be kind of done, more than likely. Right. I'd prefer we go down to 455, even though it's ugly. I don't think we're going to necessarily do it today. We've got 40 minutes. It's not that far away, but we'll see. And then if it stays where it's at, this could be support going into next week, at least initially. Either way, we'll have to wait. So the idea of coming back and checking this creek low is frustrating to me, mostly because I feel like I don't like I told you so kind of stuff, because it's just stupid. But it's mostly just because it's just annoying. Like we could have made that check earlier. I get really frustrated by the things, I guess, in the market that you can't control. And we saw it happening, and it was just like, it needs to happen, and it just didn't happen. And you just take it as it is. All right, well, we may have to come back later, So, we'll see. It's not over. It's not over until it's over, as they say. I don't necessarily think it's completely over. I think there's a chance here that we might see something decent if we can get above this creek right here. It's an invisible creek, but it's there. It's real, right? So if it gets above here and it holds, there's a decent chance this could actually rally quite hard and really catch everyone off guard who thought dilution was going to drop it for sure. just AMC, it's dead until it isn't, and then it just wakes up like crazy hard, and then it's dead again. It's a very bizarre chart, very bizarre stock. And I know that the 18th was where we were most likely going to see sixes, and that's kind of still on the table in my mind. Like if it holds this level and goes, this would be just like a parabolic move up here to reach that top. I'm not saying it will necessarily break here. I'm just saying it could. And honestly, we now have a way of looking at this in a unique light, which is, I mean, it's very unique, and kind of unusual, at the same time. It's a very strange chart. And if we get to this place where like we do make this move and we hold above 557 here and we push, I don't think it'll last long. So I don't know what happens exactly, but I wouldn't be holding my breath personally. This going into the holiday, yeah, I mean, like it could chop a little bit up here, but I just don't have a lot of faith that it's going to hold very long at all. So we would just kind of let it go, in my opinion. But you can do whatever you want to do. I don't think it's going to hold. I think you're going to get like a series of like rapid fire, like up thrust kind of stuff, and then it's going to be done. And I hate to say it, but the more we leave behind, the more likely it is we're going to go back. So at that point, we're talking about coming all the way back down to fill this gap. And that almost necessitates a retrace, because based on the way we did the measurements earlier, as best I can, I think we're going to stop like we were expecting, kind of at the top, right around 5. We hit a little lower even when we were doing it earlier today, but around like 5. What was it? It was like 5, we'll just say 580s, but I think it was a little bit lower than that. Yeah, and if we just took off from there and like ripped to the upside, you're going to come right back down, just like always, and it'll probably be lower. So we will have, if this were to happen, what would be most likely is that we would have like a parabolic move here, and when it breaks, we'd be breaking through something like this, right? We'd be breaking through with like a cat ear, right, at the very end, like dropping through it really fast. So you'd hold support on it and try again, and then you'd like dip through. That's usually how they end. But then there'd be like a secondary marker here, and I don't know if it's going to be this widening or what. It's starting to remind me a lot of August 2022, where we had that push up and you could measure it out, and it was there and it was going to hit it, and it did hit it. And I was very convinced at that time that it was not going to go without hitting that marker. But I've been beating the same drum for a while, so I'm not sure. If I'm right, I'm really right. Like, really right. And if I'm wrong, then I'm just a complete and total idiot. I'm waiting for, something that's not going to happen. So I just think this is a possibility because of the way this is set up. And then also what we're seeing on the chart here is that it's weirdly like clicking, right, with everything else that we might expect. However, I gotta say, just like a lot of things in this setup, there is this concept of like iterative motion forward. If this build it out to the same kind of outcome, it doesn't necessarily drive the price super low. This had a really nasty sign of weakness like here before this August move. We do have some. They're there. There's one right here early on, and then the rest of this is just kind of a build out sideways. And that's kind of where I would go with it, is like, okay, well, that build out is where ultimately like the price is heading if it does. Or one of these other signs where it's like lower. You use those trends down. So it's not pretty, it's is not pretty at all. It's still very low looking, right? If this builds out. And it just kind of goes back to everything else we've sort of already talked about. Over time, going into like March, maybe coming down low to 220s. I don't necessarily think we're going to go way lower than that. Maybe they've developed at this point a different trend too. I haven't really looked at a lot of this stuff for downside. I'm just kind of like keep it really basic. Like this one looks really good right there. That one looks pretty strong. Yeah, that one looks pretty good. But we'll see. It looks like it's repeated too. Directionals are important. Maybe it's just repeated as a, it kind of just looks like a parallel structure. Yeah, maybe that's why I'm seeing it. So maybe not that much emphasis on that one. But this. Actually, that's pretty slick. Support, resistance. As I say, you don't have to like it, but it's kind of there. Directions this way. If it breaks. Yeah, it's 220s, dude. I think we're right about that idea of it going to quote unquote 1, but really being like 226 or something like that. Weird number, but I think it's there. I don't think it matters if it triangulates perfectly, by the way. It doesn't have to hit there by February. That kind of stuff is whatever. Even, it's funny too, because even like the upside, we talk about it too, like there's triangulations that are like pivots. They're like middle pivots. We have no idea. Like that February 5th may not end up being like where it goes, but it could end up being like a really important breakdown level where it pivots down or like a top or something like that. That happens all the time. So I'm not worried about where it ultimately, whether it gets there at that time or it gets there later. I think it's just representative of the directional bent, right, for the stock. So, yeah. I don't know. What is 226 to 869? Did I already do that today? I don't think I did, but I'm kind of curious. Did I do it right? Yep. Not everything is broken into halves, but like I'm a fan of like Gann stuff. I think that halves and quarters make a lot of sense just because we use them all the time, day-to-day life. It's 443. Which doesn't really mean anything to me. $4.44 was the one that we used, though, wasn't it? Yes, it is. So remember when we were going up and we were doing a comparison to, remember that time we were going up? We're still up. We're at 470. we're above 444 anyways. But you remember how we were looking back at March and we were talking about the comparison? I was trying to find that value that it might bounce off of before it goes. We got it right. I mean, 444 ended up being like a pretty important number because after it hits 444, it jumps up and then breaks. I don't think it's necessarily the most important number. That has yet to be seen, but it was significant. I was joking about it because of the dark fours. But then, you know, I don't think any number is like completely insignificant in this area. We've obviously done a very thorough job of like checking all the values clearly, because they've all come up like at different times, which is an operator's game anyways. But it is something to think about. Like if that 444 ends up being like a double bottom springboard or something, we don't know if it will, but if it does, it could be very significant, you know. And I think that might give us a little bit of an idea. $442 is the 854. No, 443 is the 854. Sorry, misspoke. Probably could argue it's right at 444. No, it is. It's like right on the penny mark. Maybe we're just gonna retrace to like 444 and then bounce. It's not too low. If we don't go too fast, we get there a little slower. I think I'd prefer that to just going up first. I wouldn't mind like seeing this like here and then kind of trickling down into like a Wednesday or something. Jeez, I'm not giving myself a lot of time, but it really wouldn't make me like upset at all. I think if it went up and kind of hooked around 487 again and like walk through 485 as it does, and then breaks down like a second wave down. It's sort of like that halfway mark anyways. It's just ideas. This doesn't matter that much to me right now. I think it might make sense on a weekly basis because Monday, I don't know how you could do that, but I guess you could try. If you're going to build out any kind of a buy-in down here at 444, you're probably going to need to spread this out a bit because right now it's super steep. Like there's not much to talk about because it's really steep. So you'd have to like push up a bit, and this is how you like aim the stock. By like pushing it up, you're going to create like an aim, and then you drive the price down. So maybe they aim for like 427 or something, and then they break out early on a wedge. This turns into like a big wedge or something. That to me makes sense. Also the Wednesday bit is Wednesday is the earnings, so it could be even faster. I'm drawing it really slow, but it could be like significantly faster. I'm not sure. We'll figure that out. I guess what I'm saying is there's sort of a implied possibility here that this gap doesn't fill right away. Maybe it hits like 5 and then it drops back below and presents itself in time for GME earnings, which I think is after hours on Tuesday. So maybe by after hours Tuesday, this is like compressed down to like near 444 or something, 448. And then boom. Kind of works. Then you reverse up, you get the retrace. 62% back to fill the gap right there. So you break out at 450 on Wednesday. And then Wednesday becomes like this, I don't know, after hours stuff obviously going to be occurring, so who knows. By that point, we'd be like dumping right here, and you guys are like, well, that didn't happen, Booksy. I know, but it would be a clean enough setup to do a Wednesday, Thursday move back up. You can get the gap fill and everything. This is kind of my best case setup, to be honest. I think this would be really good for us. Because this could give us a sense of simplicity in the chart. And then this is confirmed again as a possible bottom near the value from the spring. I mean, that's the spring value right there from 2021. Which is, again, pretty close to that 444 mark. It's not right on it, but it's pretty close. But you could get that gap fill, rebound, and then land on top of the spring ready to go Wednesday right at 456 and just take off. And it's weird because, again, it's like, well, we're really late, right? What about all the other stuff we talked about? I don't know, man. Like, I don't think this is necessarily over, but this, to me, still looks possible. Like this is Wednesday the 18th. Pretty close. This is the 18th right here. There's enough time. You just got to get the right markers. This is a very tight ship, you know. Phew. It almost looks impossible, but I gotta be a little bit optimistic. So ridiculous. Yeah. Interesting. Going back through it might make sense. Bounce there. It's a yeah, am I thinking that through the implications of like certain bottoms and stuff and seeing like where they would go. Just trying to think about it critically, I guess. This would be the one, if it does work, this would be the one that would create that final ear. So it probably would end up being at least until January. Like, this goes through probably like the options stuff, January 13th or 14th. It's possible, because like the way this would work is that you'd chop for a little bit to redistribute or to distribute anyways. But I'm thinking that based on what this looks like, that would be a reasonable time frame. You just don't have enough. There's too much like lean here. Like you'd have to move unless this accelerated really fast Wednesday. Then it could be tighter. But if it's not, then this makes more sense to me. And then the outer one is real low. There's not much hope. Weirdly, I kind of drew this fib thing right where I think that line is, because it's probably going to be right there. There's a really strong trend here that we lost. So in order for us to get this back anyways, we'd have to jump back above it. So we're either going to hook here and be done, right? Or we're going to continue. And if you continue, you're back above this trend. It catches that trend and it just squeezes out to the upside. What's fascinating is then looking backwards, you can see where these interactions maybe hurt you later a little bit, because you're going to come back through this and the interaction should coincide with where you are at some point, right? On the grand scheme of things, you can see this being like the top. Obviously we know this is that creek, the big one. So that's the reason why it explodes off of it, but then it gets sold off in this area around 860s, potentially. And when they drive back through, it's like right there. And then when you drive back through, you get a hesitation, but I mean, it could be pretty ugly. Like there's a lot of possibility there, but I think right here you'd have a hesitation in this little pocket. And that makes sense because this goes back to here. So yeah, it makes sense. But so then you've got the liquidity value level from that place around COVID times. That's the pop from 6 all the way up to 869 potentially. Man, I really hope I'm not completely and totally crazy. Grasping at straws, Booksy. I don't know, guys. Doing the best I can. It's weird if you like followed the whole stream today, you probably feel like, yeah, no, I get what you're saying. But if you just kind of like walked in on this, you'd be like, what the crap are you talking about? Like, this doesn't make any sense. Because it was like a lot. Like I went through a lot of stuff to kind of piece together why it would make sense. But then it's easy enough, I guess, for someone to come in and be like, nah, that doesn't make any sense. So there's definitely a lot going on right here in this little pocket as well. Right there around January 24th. Yeah. And then value from 8 down to 226 does wrap around that near spring value here around 444. So it gives a pretty decent case for why you maybe sell off from mid-January through mid-March, mid to late March. Come back down. You're coming back to this level here. You're filling the gap. All kinds of chop happens. Then we talk about big upside. And I don't know for a fact it's going to come to the 226, by the way. I'm just kind of using that number. There's other places we may just not go. Because, like, again, this isn't really, I know it's a bottom, but, like, I've changed my mind a little bit today about some things. Because originally I thought, well, it's gonna go back down for liquidity. It might, especially if that represents a dollar. But in some cases, I don't know, based on where we were here with this whole setup, the fact that we're really chopping along this bottom makes me think that this is still the bottom, weirdly enough. Like, and at some point, we're going to find our way back above 1035, you know, in our current time frame, which is right here, which is currently 457, and that's going to be like where we leave, you know. 485 is not bad. It's not a bad number. You could use that one too, but it's a it's this little region right here, you know. And you should be hitting all of those, all four of those really. 1, 2, 3, 4. Then just leaving. It's really interesting because the way this is built is so smart. Like if you're doing a wraparound, that's why it's like looks so bizarre. It's a double flush around the historical bottom. It just doesn't look like it is. Super smart. Just wrapping around it. So you're gonna do that again, and then yeah, big slingshot out, back over the top, over here somewhere. It's a really clean setup. The only situation that I think would be most bizarre is if this once goes up and then it comes back, it doesn't ever leave. I don't know how this could happen, but it could somehow come back down and then just like hold here or something. I don't know. Or like hold even here at the 597. Then it's outside the creek, so you could make an argument that it just goes. Where does it go? That's a good question. I gotta find another example. So I'm missing a couple pieces here. I don't have a good example of an S-curve. I only have one. I don't have another good example of an S-curve that does this and then doesn't jump over. Most of them seem like they jump over and write it down, which would be really slow because we would jump over and go like sideways and down. I don't know about that. That's a weird one. I gotta find another example. So, I don't have it. I also don't really know if it broke out from where we're standing on this comparison. Like, I don't really know what I would do. Like, I guess if it broke out, my assumption would probably be that we return back to this breakdown level, right, at $44 at some point. We'd have to return there eventually, right? There's a lot of implied trends, upside trends here that I'm not sure which one you should pick, but again, it's like I just don't know. It's like really tricky, you know? I would think that if it broke out here and it just jumped that creek, it could just fly up to that top, that 75 top, but that's not really a 75 top in our current time frame, which is also really interesting because again, like I think there's been an assumption that a lot of those targets are real targets, and they may not be. Maybe a little bit of a phantom target. Now, I've been pretty low ball compared to some people. Some people are like, oh, you only think it's going to go to 60s to 80s? And I'm like, yeah, maybe, you know. But even in the midst of this, it's kind of a dicey situation. It makes you think that value here, and maybe that's the case, it kind of looks like it goes through that split value. Yeah, kind of. So like we would return there, but you'd have to shift it down. Eek. It's hard to do because it's like it's got to be like right on the money, and I don't know if I'm going to be able to get it, but something like that. Yeah, so you take that and you drive it back this way. That's weird. But when does it get there? I don't know. There's a lot of stuff you don't know, Booksy. Yeah, I know. You don't know what you don't know. What did we say? Like 2026, February 2026 kept coming up as a possibility. They're probably going to be our best bet. Like it was the long-term wave target, right? It was like February 2026 kind of stuff. Thank you so much. Appreciate it. Can't appreciate it. I can't do it. Can't do it. This is like June 2025. That's like next year. Yeah, thank you. I do really appreciate that. June 13th. It's been a long day. We're all right. We're gonna live. We're gonna make it. Right there. That's fascinating. I didn't eat lunch today. I just streamed from 8:30 straight to 3 o'clock, nonstop. What a job! What a job! Just kidding, guys. Man, but seriously, that was a long day. I suppose if I were like back in the other time, I would think it's going to come up here and hit that mark around that time. I don't know for sure that would do that. I'm just saying like that's what I would be thinking. In most cases, I would probably be looking at that or the lower hit right here, but sort of like one or the other. I'm not sure. Maybe triangulating another target there could help, where you use that plus this, where it's like lower. That's like way farther out, you know. That's not that much farther out. I bet if I drop that down, it's probably the same price. It's still like, it's still there. It's just not as high. So the idea is you would hit that gap around 2000 and around maybe June or something like that, 2025. However, we are not going to hit that gap if that gap is actually shifted. This is why I'm getting a little lost again, but you wouldn't actually hit that gap. You guys are like, what? You just said we would. Well, it just depends. Like in this case, yeah, you would. You know, and weirdly, again, I think it's bizarre because if you look at where that shift is, it looks right where it's supposed to be. Pretty much at the bottom of that gap right there in June of 2025. Like you could still get the gap fill at 42. It's pretty darn close. That's with the shift. But if you use a lower value, it doesn't actually go there. So that would imply that you don't actually use that trend, you use a different one. So you go back up here. Just simple triangulation kind of stuff. You'd use the lower one. And this might even be irrelevant too, because this could be a kind of a trick of sorts. I gotta make sure I actually get the gap. So let me double check, because this is probably the last thing we're gonna do and make sure I get it right. I didn't talk about anything else today. I just talked about AMC all day. I'm not gonna have time to talk about anything else. Sorry. Close 46.41. But y'all are smart. You'll figure it out. So actually, this closed high. I thought it closed low. Way high. What the? This looks like October 2025, which is pretty similar to what we had said before. So I think now I have to use the other chart. I think it's closer to like the bottom of the gap, like where it opened, which makes more sense than the top, because that doesn't make any sense to me. Like, why would it be the top of the gap, which is what I had here? That was before the split. And then this is a weird chart, man. Maybe I should just draw like an actual triangle. I think that would help. This is a waste of time trying to like move all this junk around. $46.41 was the gap. Sure. And then let's just go for it. Let's just make it the bottom. There. That should fix that. And then how do I move it down? I don't know. It doesn't share the bottom value here. Well, who cares if the angle's wrong? I do. I care if the angle's wrong, so I can't do that. Okay. I wish I could add a line and like group it. I can, but I don't have any other frame of reference here. Just move it down, I guess. It's like around here, but I can't quite. Maybe they use this value right there, because that was what we did, wasn't it? We took this one, which was here, so I could do the same thing. Yeah, that should work. Yeah, I think so. Or it was like slightly higher, but whatever. I'm not like, it doesn't be perfect. Yeah, that's not very high, but that implies that you would get to this target by around 2000, and that I know it's weird, but that's like the gap fill target. That's the target you'd hit. That's the triangulation from before, because it doesn't exist now. It's gone. That's a little bizarre, because now I'm like putting it forward thinking, like with the chart as it is, instead of backwards thinking, like where it should be. Instead, I'm like where it will be based on where that would be if this had shifted down, not the other way around. You guys are like, what the crap are you talking about? It makes sense. So it does. It may not seem like it, but it does. And I'm actually curious too, because that angle is the same angle here. It's a really strange, it's a strange angle on that chart. Yeah, that's weird, man. Like they used it. What the crap? Is that where the 8 something is too? Why are you so dramatic, Booksy? I just am. What? This is $20. Somebody just said that. I just keep coming up with 22.42. I'm at like 20.51. Thereabouts. This chart's so jacked up. They use that same line though. That's really important because the chart did shift, but that angle right here that was used on this buy up during January 2023, it was like 10 months, right? Through August. That was used again here on the breakdowns. So that's a really significant angle. What I'm finding interesting right now about that is that if you look at where that is currently, it's like right where it's like, again, it's like triangulating our, I mean, it's strange. It really is. It's like triangulating our target here up near the 8s. I don't know what it's doing down bottom. I mean, it may not really matter that much, but yeah, it's probably still being used to some degree. Yeah, right there where we just hit. That goes back to this guy and this early hook. There's a lot of different methods here to do the same thing. Madness. Well, anyways, October up at 20 bucks may not seem like a lot, but I thought you said it was going way higher than that. Yeah, I don't know. I mean, it may go significantly higher than that, but like that tells me some things, because if you look at where that is, it's like it's basically you're implying that you're not going to return to. It doesn't mean you couldn't go beyond it. It's just that you wouldn't return to that drop value, that gap value, until October, which I think is significant because we were using September to September as a wave, and that's really close. So that's really, really close to what we were doing anyways for a wave. Like as if that were the target over here in that time frame. If it were to drop and stay up above, it's also translating pretty well down bottom. That's interesting. 2050 is this level here anyways. It's like the actual middle right there. I'm kind of curious because this is like an LPS or LSPY, right? I mean, it is. It's essentially already distributing, and then it's chopping up to the upside. It's like a bear flag. We look back on it, we could probably say, yeah, sure, it looks a little bit like a bear flag. And then this is kind of that same value here before it started really dropping. We're talking about returning back to that drop point right there, just like we're talking about returning back to a drop point down here, but actually it's higher up. This is a higher target than we would have had previously, because I only had the drop point going back to like 1380, not going up to here. But if you just use the shift value, then technically like that's still the drop point. Look at this, you know, like it's bizarre to like take what we learned today and like keep working on it, because yeah, like it's the gap is weirdly in the same spot. You see that? Like it's the same exact spot. Maybe that's not weird at all. Maybe that's totally expected. I don't know, but it's there. They put the gap in the same spot. It's like they just move the chart down to gap here, and then that's where the gap is. So they use the same marker. It's like, oh, we need that marker again. We just make it again the day of. That's what happened. I just think it's really bizarre, because now I'm looking at this and I'm thinking to myself that the way I was measuring this was based on that coming back to that top. And I didn't have a good top here. I was talking about it the other day. It looked like it was at an angle. It was like sliding. This is all part of the same thing, because this would have been still within that structure. So this is that last little LPS here. It's like right there. Where it drops. And then it goes through the range, does the hook, and then the thing. There's the hook, and then the thing. But if you don't want to use that, you can use the previous bottom right here as an indicator of where it may come back to, which is right there. In terms of like, where does this set up? So there is a gap here. There is a gap there. It's the same. This is like dealing with like Sauron or something, like some all-seeing eyeball. But we can also see the eyeball, and sometimes we can see what it's seeing. It's the same thing. When they set up the same thing back here, it's exactly the same. It was just disguised because of the shift. It's a huge gap, but it's the same. Yep. So these are like back tests. Right there. So that's like a back test to this top, basically. Right here. Yeah. Which is akin to what happened here with the this backup, because this ends up going back up to the top later in force, all the way back up to this level. But it's really about two things. One is the gap. There's a couple other things going on. You guys are like, it's a squeeze, man. I know, I know. But like, there's the gap. But also, notice that angle of ascension. We were just talking about this a minute ago. And then look at the triangulation. So just again, just so you guys know, I'm not full of complete and total crap. This does work. It's just a matter of like making sure you get it right. This is the same thing I just did. I just did it on here with this one, and then I literally just did the same thing. So I hope you guys are aware that like what I was doing was not trying to pull a rabbit out of a hat. Like I'm really doing what I think is right in terms of where that goes. The problem isn't that that exists and that it's even hard to find. It's not hard to find. It's easy to find. We just found it, you know. It seemed pretty obvious to us that if we do it right, we can get a pretty decent estimation of where that might be. But the issue isn't that. It's that, unfortunately, it does not look right because we don't have the shift value included in that. I just get it like way off. This is like July. I must be tired. I said October, but this doesn't look the same at all. I walked away for like 3 seconds and now it's like, oh, it's July. Okay, I thought it was October. October. I don't want to become the boy who cried wolf. But if I'm right, this is gonna hit right on that money. Like when it hits, it's gonna be like right there. You guys are like, yeah, but that's not gonna go up there. It's not gonna go to $46. That's not what I'm saying. This has to now be accurately transferred. If I can't do it accurately, it's not going to work. So it has to be accurately transferred to the bottom. So what I need to do is figure out where the heck that is. And it may need to be like really, really precise at some point. But what I'm going to do is like, I'm just going to create like a distance here so I can use like a measurement tool. So I'm just going to use like, it's like cutting a piece of paper or something, right? So I'm going to use that green bar because I don't have an either way to find that. There's no pure point of interest right there. It's just where that green bar is. This is a gap distance. And then I'm going to take this down. It's not lining up with anything. It's as if the chart, again, doesn't really exist right there. I mean, that's pretty precise, like right on top of that purple box that I made. Let's make sure that date's right. I held the shift button, so hopefully it's right, but you never know. This is July 2025. July 9th, 2025, not October. Still pretty darn close. We're pretty darn close is the right value. Just 2050. Right there. Prove it, Booksy. Can't. Can't prove it. Wish I could, but I can't. Well, if you can't prove it, then I don't believe it. That's a very accelerated timeline, though. I mean, all things considered, that's pretty fast. I won't be able to prove it. Not to a place where like somebody who's already like kind of like a grumpy about AMC would not, really just not going to believe it anyways. So yeah. Yeah, they're just not going to believe it anyways. So like it won't matter if even if I did like 100 hours of work on it, you know, there's somebody out there maybe would be like, yeah, sure, why not? But like, even if I did like hundreds of hours of work on it, there's always gonna be people who are like, you're wrong. It's not gonna do that. It's like everything in the market, you know, like just because you get it as an answer doesn't mean you're gonna get it as an answer. Like it may not end up being what you think it is. But I will say this, it makes sense because there's a gap there and they left it there. And when we did the shift, it does just kind of give you a sense of like everything dropping down. And when you put it back where it belongs, it doesn't look weird at all. It looks kind of right to me. Like that you would come back to the 40s or whatever by 2025 isn't exactly a short-term thing anyways. It was a long-term thing. But now that 40s isn't actually 40s, it's actually 20s. Which is probably the only thing that would really like offend a lot of people. Are you dropping your targets again? Well, kind of and kind of not. I mean, on the one hand, that's still pretty far up there, but it's also like, it's like a halfway point, and this whole thing is like a downtrend anyways. So if you took this value and you said that you think, like, all right, Booksy, you think it's going to get there at that time, maybe. Yeah. It's like us saying that this could get to, presumably, right? And the gap was already filled before they got there. You guys are like, so it's going to run now. No, that's not quite right. We'd have to find like a triangulation and do like a trajectory and figure out. But I think it'd be probably pretty similar to what we've already talked about. Yeah. It could be something like this. So we're not going below. So we're not going to go below 392 again. I don't know. Like I said, it's possible that what we experienced this time is quite different from last time in that we might get this jump, an early jump over that just doesn't crash and builds out like a normal M cross, like 1, 2, and then doesn't actually go low and comes back up again. And that's pretty regular. I don't usually see this kind of crazy hyperbolic thing on AMC anyways, and we see a lot of crazy moves, but yeah. Yep, so this would be roughly what you'd expect. Some of you guys are like, never gonna move, never gonna move. It's not gonna look like that. We're still gonna use the arcs and stuff because those would be helpful. The ones that, I mean, it had to be really steep now. It'd be weird and stretchy, but I'd still probably use this as a measurement estimation for like how quickly that ending schematic actually pans out. And I'm not going to go all the way back to here now because I'm kind of curious now that might be the case. And this still would imply that you probably don't see that move, if it does move, until like April, which again, we were talking about like May being like a low. It's not really changed very much. So presumably you may not get any kind of serious move up to gap fill until April. So no matter where it is on the bottom, this is it. Something like that. Man, it used to be so simple. Everything made so much sense. It still does, it's just now I have to like wrap my brain around other things. I mean, frankly, just looking at this, it looks like almost the same move. I don't get what I did. What did I do then? How did I get that? Like, what? Why did it look different when I did it the first time? I compressed it. That was a given. Part of me thinks that we're going to run up, but it's going to be like staged differently. Damn it, Booksy, stop it. Yeah, but isn't that interesting? Look at that. Oh, lay up right there. If you hum one more time, Booksy, I'm gonna punch you in the throat. You're never gonna get me across the internet, so good luck with that. That is pretty close, but also pretty different from what I said before, which is February 2026. This is significantly faster. This looks like mid to late 2025, already there in October. So basically 1 year from now, and then it'd pretty much be done. Because the next part of this, it wouldn't necessarily be a copy paste, but you would have to see this come back through anyways low. So it would come back down to like 20s and stuff, if it does that. And I still think this is very likely. But what's fascinating to me is that value here being in July is so early. This is an April move. So this dropped in what day? August? This dropped in June, July, August. But it's really like very beginning of June. Let me see here. This is like end of August. It's closer to September than it is August, but it's like August 22nd, which was weird because that's like the same date that the ape thing was invented or whatever. This drops on May 30th to June 2nd, and it ends up running up into June 2 years later. August 2023 to August 2025. Son of a biscuit. It's almost like a perfect cycle, the first one, so I don't know if you need to like overthink it. It could end up being like really simple, like almost a perfect cycle. It's very, very close to, it may be a little slower than the last time, but it's like on that move, but it's very, very close to what our expectations might be here. I mean, super close. Triangulation's in the right spot. I think that that might be right. I think that there might be a bit of a, I don't know, confusion here because it does look like I drew it out a little weird. It looks like it should just take off and go, but this may be more like a month-long move from like July or June, yeah, maybe July 22nd or something up to August 22nd. That's not unusual. Like the first move we had on the AMC for January was like that. It was kind of like 20 some odd days. I mean, it was a really long time, so it happens. So it may end up being like a longer second move and not quite as steep if it does do the second move. And then this is the one that takes you up to this particular level, which is like that historic level we were talking about, thinking we were going to go anyways, back here. That's where it goes to. I mean, there's some things that don't quite work, you know, like this obviously, if it doesn't go up high enough, doesn't hit the top, you know, I don't know. I have no idea if that's going to happen or not. But if it does go up to the top, it's like $83. We'll just wait and see on that. I don't really care that much right now. But I'm curious because I'm using like what we're talking about today. We've done all this work. I'm just thinking about where that is in relationship to where it was before. So the January move goes to like 20s, and then the next move goes to like high, goes pretty high. Yeah, I mean, altogether, it still works on the grand scheme of the chart to do that, so. Here's something that I would consider. Because I am considering it now, and I'm thinking, trying to think as critically as I can about it as I work through these kinds of things. Like, where does it need to be on the bottom? There's an easy answer in that you can just kind of use what we already know. I mean, it already looks like the same move, so I don't know what I'm trying to prove there. This is ridiculous. This is April, May. So it's not like, it's not, I was thinking to myself in my head, I'm like, there's no way this is gonna work because it's too steep. But I think it works. I think it works. I think it's the right thing. Yeah. All right. I'm almost done. I gotta stop because I gotta feed my cats and I didn't do anything else today, so I gotta get this stuff done. What a trip, huh? Son of a bee, man. Look at that. You guys are like, this isn't that complicated, Booksy. You should have just done this to begin with. It is though, because it's a weird number. It doesn't like really look like the right number to pick, but it's the number. August. It's the jump, man. Creek jump. What you talking about, Willis? You know what I'm talking about. Play no games. We're gonna catch wind. That's what we're gonna do. 50.98. Should be the right number. I did it right. It's not the right number, Booksy. Why not? I don't know. Maybe I scaled it. Hang on. 39.53. It's close. It's close enough. August to August to August. Although, this is August 22nd. Why isn't the middle August 22nd? Why is the middle August 1st? Did I do something wrong? Oh, I still have this mapped out for July. That's why. Oh boy. Oh boy. August 21st or 22nd. Well, it looks like Thursday, Friday, August 22nd. This is still off. That's why this looks wrong. I'm sitting here thinking it's just off, but it's because this is farther over. What about the gap fill, Booksy? No, it's still right. I just didn't have this like stretched all the way out. It's just a really like tight chart, so you have to get it like perfect or it doesn't work. It's still in roughly the right spot in August. So it's not, I don't know if it's going to ever be like 100%, but it's going to be close. There we go. That fixed it, because now this is a June run instead of April, which didn't make any sense anyways. So and this goes out to August, and then this should be, the middle should be not earnings, but right afterwards, on about August 22nd. Still like that value, so I'm still going to use that angle. I'm going to adjust it. So now it's 50.91. Should be about the same if I put it over here. No, I haven't touched GME today. GME's up 1%. It's doing fine. 144.17. I will do it next week as soon as the week starts. We're gonna need to go over it because it's got it has to go through I don't know if this is possible to move this fast or what, but it kind of looks like you could get a move that's so quick. I'm really worried about just selling through here and just crashing. You're just flip-flopping constantly, Bugsy. Yeah. Well, it's gone, I guess. The thought is gone. So, in some ways, this looked like I was doing nothing. I know, but what I was trying to do was map out the arc with the trajectories out. It's not always symmetrical, but sometimes it's used in that way. I don't know if this is going to be the best way to do it because, like, ultimately we were thinking if it did come low, it'd come lower anyways, and then if it came really low, meaning. But then, like, we're kind of bouncing back and forth different ideas, and a lot of these windows have already passed, and like the idea of coming down here into this time period does make sense. It's got enough time here that really, if you think about it, it only took about 15 days or something, for that run up and this and that. It just doesn't even have to go anywhere till May. So there's so much space between December and May that I think it's perfectly reasonable not to assume, but to make a statement of like, yeah, I think from the time period between December high, it could come up to a high in December and then drop all the way through May. And it could happen low. It doesn't have to come up. We're going to leave that door open until it closes. So, but if it does do this, in concept, I've got a lot of these trajectories that are pretty early. They should be hitting early, but that doesn't really matter. In the end, it doesn't make a huge difference because it's still the same distance traveled. It just takes a longer time. But then there's also this concept of like our entry. Our entry was kind of slow. So it's curious to me because if you look at the angle of entry here, right? If you look at the angle of entry here, it's kind of like I don't want to say it's going to walk out in the same pocket, but it could be very similar. A lot of times entry and exits are fairly commonly the same. So in March of 2020, when we dropped, this just went straight down, and there really wasn't any real checks made. And then it just has this bounce and rattle bit. And then, when we left, it went straight up. And in theory, what if it had chopped down? Is the assumption that if it chopped down that it would have just gone straight up? Well, sort of. I mean, you do have that idea of like markups where you have LPSs and stuff. I don't think it's out of the question. But maybe what we're looking at here is actually somewhat right. Like there could be a bit of a funnel out instead of it being just straight up at the end, which is sort of what everybody expects. You might have a little more of a crawl out over time, in which case, I mean, it's just ideas. In which case, it could look really different than this, If you hit a low early, it changes the way the dynamic is. Because, like, there's no way this thing hits a low early and then still looks like 2020. It just doesn't work. Unless you just break everything to make it fit the way you want it to fit, it just doesn't work. It have to make a move. It just does. It just has to make a move in a different way. So if this happened to drop down, let's say going into the new year here, I could see it maybe like walking out instead of, I mean, it could just be different, instead of doing that bounce in. So if it goes up, I'm going to sort of stick with the same ideas of like, it might chop down and drop. But if it doesn't, I think it might just kind of like walk its way out in like a normal M-shaped fashion. And why not? Because that creek here that we need to cross is still pretty low. It's like down here going across, so it'd be really different. So if we got some kind of like ridiculously fast early drop here and it goes down and hits, I don't know, like the lows, like early, I guess, it just goes all the way to 220s or something. I mean, it's reasonable to think that what this does following that is just like kind of a giant M cross here. And it starts looking a lot more like what we saw on the opposite side, where you don't really have like one huge explosive move. You're kind of just going back through and checking the range. Yeah, more like a systematically, I suppose. Yeah, it could look really different, you know? So I guess what I'm trying to say is like the angle of exit might be very, very different from what everybody expects, which is like, oh, we're going to get a repeat of this like short squeeze thing. Well, maybe. But I would not, genuinely, I just wouldn't be really surprised if it did something like that. And that just, it looks right to me. I don't know. It looks possible. And it's the middle of a wave, so this would be like M1 down, and then this would be like an M2. It works. And even then, it's kind of weird, because like, it could be that this doesn't fill until the very end. It's like really different. Could be like this, this is the backup to some other creek check. I don't know. It's probably like right here if it did that, but just kind of boils out here into like a little cup and handle and then gaps up. It's a symmetrical, but not perfectly symmetrical. It'd be like offset a little bit. So they're not trading the same zones. They're trading low, then they're trading in the middle. You see that? So like you catch the, you catch these areas that you didn't catch on the way down. That arguably you don't necessarily need to trade through, but now that we know where this is and the fact that this is like the takeoff zone, it makes perfect sense to like plunge it beneath here and just keep it beneath. It's not drastically different from what we had before. It's just an idea. What we had before was that it doesn't go low and then it comes up. And it's still M shapes, but then it goes low later, and then you get this massive sprint out. But the timing of it's just awkward, you know? It just looks really slow. So it really will depend on whether or not there's any desire at all to trade between 570 and 750. I think if we go up now, I'm going to guess that there won't be that desire. I think if we don't go up now, there probably will be that desire to still trade it a little bit and trade it on top of this. So we're going to have like an extra move that people wouldn't necessarily expect. That's just my thought. It seems likely. So, all right, I'm done. It's really late and I'm tired. Yeah, we're going to have to go through GME next week. So, and MPW had some crazy stuff happen today. I think it dipped down to like 4 at one point. That's good though, because I want to hit that mark down there. Finally hit it. Yeah. So we're in we're okay, you know. AMC, it's down 9%. You guys are like, we're not okay, Buxy. Well, it could have been a lot worse, you know. It really could have. And I know that we've seen this kind of stuff happen before. It's not fun. I'm not gonna promise anything about this right here. I don't know yet. I'd have to wait, but it could still drop again. But I think that on the whole, the fact that we closed above 450 decently is still a good thing. The dilution is dilution. It did give us a window into some things that we just hadn't really looked at before. And there's still a possibility that this is a wave, reactive waves, that's not done yet. I don't think it hit the highs that I wanted it to hit, but I mean, in theory, yeah, I think you could argue it did come up high enough to be a distributive action, like it hit it and it's going to return back down. We're just not there yet. It didn't break low enough, so I don't think there's any confirmation of it yet. Okay. a lot of the today was spent just working on this build out, and it's a mess, like always. But the good news is that we have a way of interpreting the price action differently because we're using the valuation and not the price. And I think that it's changed the way I think about a lot of these things now. Yeah, and I believe there could be some very different outcomes than what was expected as a result. Not like that ever was not the case. Of course it was the case, but on my part anyways, I'm starting to look at this like, maybe it may be very different if for whatever reason it holds above 470s, 460s and just starts continuing and doesn't. There's a possibility because of where that is for valuation purposes that could actually be like I was arguing this was going to get left behind. This was not going to get left behind. I still think there's a desire maybe to go there, but it could be a fake out is all I'm going to say. We'll leave it at that. Because in reality, a spring, if it did that below the floor and then comes up and finds support above it, you don't have to go back. You don't have to go back and get it if there's a gap during the spring. And if that's what this is, and this is like a massive return back above, that's one thing, My concern right now is it hasn't actually done that, right? And that's really where we're at. So we're going to leave it there again. It's not quite right. If this had jumped up and found support more readily on it, I think I'd be like really quick to say that could have been like a spring with a retest, and we're just going to go. And we're going to forget all this other stuff that I talked about, and we're just start working our way back out. But unfortunately for us, what we're finding is that those levels that we're interacting with right now, which are the previous bottom right here, we're not really holding them very well. So we live to fight another day, and we'll come back Monday and fresh eyes on it, fresh brain. Give me some time to think about all this stuff that we went through today, which is a lot. And a lot of stuff we went through. I know I didn't get to other charts. I apologize. I will do my best Monday to catch up on everything. So, you guys have a good one. I'll talk to you later.